This was, you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London alongside Shonali Bassick in New York. All right, Shonali, let's turn to tech. There's a lot going on today. One of them is that Apple is set to announce the latest iPhone 15 at its product launch event today. And for the first time, the new iPhone model you buy on the launch day could be made in India. Now, we're going to discuss this as well as the ARM IPO. We know that that's had a lot of attention, too. And at the same time, there's some Tesla news to get to, but of course our next guests are going to be mad if I call Tesla a tech company. So let's not do that yet. Let's start with Apple. Joining us now is Alex Webb of Bloomberg News and Matt Bloxham of Bloomberg Intelligence. Thank you both so much for joining Shonali and me. Okay, let's start with this story about the made in India iPhones. Matt, let me bring this to you. What is the significance to have a launch of a new model that might be built in India if you're going to be buying it?
Yes, it's not the first time they build phones in India, but the first time on launch day it will be available if the news is correct. And so I think this is a significant direction of travel for Apple, that it's kind of diversifying its production away from the China dominance. Obviously, with everything going on with the tension through China, I think that's very important to reassure investors that they have supply chain resilience. And I think we'll expect to see India become a larger part of the kind of production. So I think it's a significant kind of vote of confidence, if you like, of Apple in India's ability to produce phones to the quality it needs and that its customers expect.
The ability to produce, but also the ability to sell. Alex, when you look at the ability for them to bring in customers after such a long slump, what is this new set of releases going to mean for them to start to turn the trajectory around?
I think the really fascinating thing is going to be pricing, right? Because the least price sensitive are inevitably the people who are going to be buying the Pro lineup. What we're seeing, at least according to our colleague Mark Gurman's reporting, is they're going to be doing a few things around the edges with the Pros, a little bit more functionality, a titanium case shell, which should enable them to charge an even more premium price at the very high end. And as we've seen stagnating unit sales, it's the ability to squeeze more dollars out of the units that they do sell, which is really able to help support the top line.
Do we usually see Apple price shares move on iPhone launch days? I'm just trying to think how we should be geared up here in terms of market positioning. I feel like it usually doesn't. I don't know. I could be wrong there, though.
Well, it's always, buy the rumor, sell the news is often the kind of adage with Apple. And unless there is some knockout surprise, that, in the past, that has tended to be the case. The thing that's still not quite interesting is seeing what exactly sends the price lower or sometimes higher. That, for instance, with the Vision Pro, when that came out, it was things like the pricing, knowing what the target market was going to be the enterprise. Those little moments sent the shares lower in that instance. It could be very different today if there is some pricing surprise that's very much to the upside.
Now, Matt, what do you make of this idea of the Qualcomm deal that they just signed as well? You were talking about Apple's ability to supply its own products here, but this is a sign that its own in-house chip designs are taking longer than expected.
Well, that's right. Yeah, I mean, obviously it's great news for Qualcomm. I guess it's another 3 years of revenue that maybe a lot of people weren't expecting they were going to get. And as you say, it suggests that Apple's own in-house development is taking longer. And I think coming back to what Alex said about, it's really important if you're going to charge higher prices that you're wowing your customers with amazing new functionality and technology. And perhaps it suggests that, some of those kind of really breakthrough technologies are maybe a little bit further out than we thought. But obviously they do have a lot going on with their own silicon anyway. So, I think it's perhaps a little bit of a disappointment for Apple, but I don't think it's too much of a problem.
While we're talking about chips as well, we know that the high margin chips in the ARM arsenal, if you will, has been part of the pitch for the ARM IPO, which is, as we've been talking about, 10 times oversubscribed. How compelling is this pitch? And do you believe that the current valuation is more in line with reality than what they were previously seeking?
Well, I mean, we'll have to see where the pricing does actually end up to kind of have a strong view about the valuation. But I guess what you can see, if it really is 10 to 15 times oversubscribed, then the management team has been a great job on the road, pitching people on the mid to long-term story, which is clearly about a much bigger market than just smartphones and into AI and Internet of Things. So they've done a great job, but that means they'll also have to live up to those expectations in the quarters ahead when they're releasing results as a public company.
Yeah, Alex, what do you make of that, of the pressure that they're going to face after an let me not editorialize here, a hyped IPO?
I mean, the story they've been telling heading into this seems to have been quite effective and building up the momentum. The real challenge right now is to demonstrate if people are buying that message that they really are an AI stock. It is not immediately clear that that is the case. The reporting from Ian King, our colleague who covers chip makers from San Francisco, he had a look at the deck, essentially, that the CEO, Rene Haas, has been presenting to investors on his roadshow, and they very much made this point that they are trying to essentially integrate more into what their customers are doing. So more precise architectures is what they're hoping to provide. That, therefore, could be a higher margin business. Interestingly, though, that is not specific to AI, right? That is just broadly what they do in CPUs. The fascinating thing here is when we look to this valuation, and we'll have a very good sense of it this time tomorrow, clearly, kind of on a historical basis, they've been punting for a multiple that's comparable to NVIDIA. If you look forward, of course, NVIDIA, its earnings are going to double, its revenue is going to double this year. That is not the case with ARM, even if it does get back on a growth trajectory next year after. So how investors compute that, no pun intended, sorry, is what will decide not just the opening price tomorrow, but how it evolves over the subsequent 48 hours.
You can make that pun because I was going to go to the supercomputer to compute that. The Dojo supercomputer, which Adam Jones over at Morgan Stanley upgraded Tesla on. Massive rally yesterday, 10%. Can you just give me your take on that? When I first saw it, I was like, maybe Tesla will move on this. I mean, the move was massive.
Yeah, look, Adam Jonas is a historically big Tesla bull. He has made some punchy calls in the past, which on valuation, which have proved to be correct, but not necessarily for the reasons he stated, right? He was very bullish about the prospect of essentially Tesla having a fleet of self-driving taxis. We're yet to see that happen. The supercomputer is fascinating. One of my takeaways from it is people talk a lot about the data that Tesla is able to pull from all its vehicles, not least the camera data that it has from where people are driving, and it can use that to train its model. The fact that they need this supercomputer suggests they haven't been doing it as well maybe as they would have liked in the past, right? Now, if they have this, maybe it gives them a head start. It gets them, gives them some advancement in that space. Because at the moment, when it comes to self-driving cars, they are absolutely lagging. Google's Waymo and General Motors' Cruise unit, sort of the market leaders technologically. This might give them a leg up in that space.
Our thanks to Alex Webb and Matt Bloxham. Coming up next, we're going to look at some of the market-moving events to watch throughout the day. This is Bloomberg.
is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO, so buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. JetBlue has traveled a long way from its startup days, but CFO Ursula Hurley says growth won't change the airline's quirky attitude.
At the end of the day, we view ourselves as a disruptor and a maverick in the aviation industry, and I'm really excited to play a meaningful role in that growth journey.
Watch Chief Future Officer, Wednesday on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Shonali Bassick in New York with Danny Berger in London. Now let's take a look at what's ahead today because we have NFIB small business optimism data out in the U.S. at 6 a.m. Eastern Time. Then we'll get OPEC's monthly oil market report coming out at 7, and a host of bank executives, including Goldman Sachs CEO David Solomon, speaking at a Barclays event in New York City throughout the day. And Apple's long-awaited launch event in Cupertino, California at 1 p.m. Eastern.
Shonali, we're also today looking out for potential deal news coming out of UK football. Bloomberg has learned that the UK's Everton Football Club is said to be close to an agreement to be acquired by a Miami-based private investment firm, 777 Partners. For more, Bloomberg UK business reporter David Hellier joins us now on this. David, you've had great coverage of this. First of all, wait, is it 777 or 777? I should probably get that right.
777.
777. Yeah. Okay, it's a mouthful. Why would Everton's current club owner, Farhad Moshiri, sell Everton?
Well, he's had a very wretched time since he went into Everton in 2016. He's, unlike, some owners are accused of not spending on players, he's spent a fortune on players. And he's invested, hundreds of millions in Everton. But really to no avail. The performance on the pitch has been dismal. Another businessman who's finding it very tough is, Todd Bowley at Chelsea, who they've spent $1 billion on players and they're struggling. It's not that easy. And as a result, Everton fans have been, there's been a toxic atmosphere at Everton. Last year, the police basically instructed the board members not to come to the matches, to take up their seats at the stadium. Because they couldn't be certain of their safety. So I think he's basically just had enough.
Yeah. Taking a step back, you mentioned Todd Bowley. The Americans are coming for English football, not just for English football, but for football in general. 777 is a great example of this. Why are they interested in Everton and more generally in buying up so many teams?
Well, I think they're massively interested in European football. 10 out of the Premier League clubs, if Everton goes to 777, will be owned by Americans. You've got Roma, you've got AC Milan, Inter Milan, all with American ownership. They see it, basically I think on one level they see it really as a multiple of revenues. It's so hard to get an NFL franchise, and when you do get it, you have to pay, like the Washington Commanders did, you have to pay really, really big bucks. In Europe, the multiples are a lot lower, but there's a caveat to that, and that is that the risk is massively higher, as you can see from this Everton situation.
Yeah. I mean, you can't have an NFL team be demoted, but you can certainly have it here. Yeah. David, such a great story. Please keep bringing us them. That's David Hellier. Again, reporting that as soon as today, we might have an announcement of this deal. Again, remarkable, as he mentioned, that if this goes through, Shonali, 10 out of 20 Premier League teams will be owned by Americans. We're coming for football.
Better for the valuations, but unclear whether it's better for the teams.
A very good point. All right, that's it for Early Edition. Surveillance is up ahead. We're going to be hearing from NY Fed President Bill Dudley, among others. This is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside? This is Bloomberg.
Central banks around the world, both developed and emerging, are fighting inflation.
I really think it's about ECB policy, how that relates to Fed policy and this U.S. dollar.
The consumer remains strong, so there kind of continues the challenge that the Fed has.
The last mile is going to be hard, but I do believe that we are very much on that disinflationary trend.
I think we're in this very hold your breath kind of moment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market slightly negative on the S&P 500. Big events through the next 24 hours. CPI just around the corner tomorrow morning. Before we get there, Apple in focus. TK, the iPhone 15 a little bit later this afternoon.
How many times are we going to hear one more thing today at this thing? We should have all worn black turtlenecks today. That would have
made us look better. To me, it's just a big marketing thing. I really don't care, except the Apple experts like Mandeep Singh are telling me this time around you got to care about it.
This equity market cares, doesn't it, given the weighting of Apple on the S&P?
Well, look what Tesla did yesterday.
NASDAQ.
Morgan Stanley comes out and goes, hello, buy me, and Tesla goes up, what, 10%?
Have you ever seen anything like that? An upgrade on the south side of a mega cap name and a 10% move off the back of it. What's the signal you take from that?
The signal for me is there are going to be other companies saying, please recommend us. It's a jumble here. It's Tuesday. Is anything supposed to happen today besides the Apple thing? Maybe not. NFIB comes out, but we're getting ready for this news dump that we get Wednesday, Thursday, and Friday.
Elisa, Tesla this morning, negative just a touch. We're down. A softer move, mild by 0.6% lower.
Maybe the signal is FOMO hasn't died yet. Maybe the feeling right now is that people feel a little bit lost, like they're not getting it right, and that tech has sort of been the juggernaut that has kept on going, and that you can't really count it dead. So if someone says buy, you do it, and that seems to be what people are doing. I don't know what that says going forward, but that's what it says to me right now.
That's exactly what happened yesterday in a major way. Let's turn to the price action. Futures pulling back just a little bit. We're negative by 0.2%. Into the bond market, yields lower by a single basis point. Your 10-year 4.2742. And in the FX market, the euro here, Lisa, just a little bit weaker against the dollar, 107.24.
So 107 is the new level it's stuck at until, and we're going to get that until maybe on Thursday. 7 a.m., this is some of the other data that's coming out. The OPEC monthly oil report coming out, and underpinning some of the angst that we have seen recently has been oil. Brent crude climbing to some of the highs that we've seen going back to July of last year. 1 p.m. is the launch of Apple's iPhone 15. And Tom, you mentioned, why do we care? Is it going to be just a marketing event? I think it's more than that at a time where suddenly people want to understand what the next hot thing is in tech, because that's what's driven the entire equity market for the United States so far this year.
I'm a broken record on this. Everybody knows I'm chip-centric, and I believe there are new chips in here. There's new inner guts to the phone, which make it special. I don't know. I'm going to listen to the bulls like Dan Ives at Wedbush. I'm going to listen to the bears saying, slow down. I think we've been fair and balanced on that on surveillance, but we've been here before, and everybody owns it. Well, let me correct that. Retail owns it. Institutions are a little under-owned in Apple. Maybe this is a thing that makes them buy at the margin.
And we'll talk about whether India owns it as well later on. And today, the Barclays Financial Services Conference is happening in New York. Goldman Sachs CEO David Solomon is speaking at 2:45 p.m., among others, including the leaders of Wells Fargo, Barclays, and Deutsche Bank. I'm just curious to see whether we have any sense of that shift from Goldman Sachs, but more broadly, John, the cuts that we keep hearing about, is it just the sort of typical fall culling of the herd, or is there something deeper going on, especially given some of the credit concerns?
Looking ahead to earnings already, October 13th for JP Morgan, TK. I know you read that note this morning from Ben Laidlaw.
Yeah.
Next big stop for this market after CPI?
I really agree with this. Ben Laidlaw pointing out there's all this economic data. We're all going to overanalyze it. I think CPI tomorrow is a big deal. Great. He's looking at October 13th when we start the soiree. And let's be honest, he's bullish. And our first guest this morning is someone who's refamed that to a more bullish stance.
More bullish than he was.
No, but, when do people start popping 5,000 as a regular statistic? There's a real hesitancy to get up there near
5,000.
4,900 or 5,000. How about 5,100? Let's go. Raise it.
Greg Barrow of BNP Paribas. He was the biggest bear on the street. He was looking for 3,400. He's now looking for 4,150. Here's the quote. The outlook for this year was always predicated on the idea of seeing a recession in the US. I think we've been surprised at the resilience of the data here in America. Greg, I'm pleased to say, joined us right now. 3,400 to 4,150. Let's start there. What do you feel like you got wrong, and why do you think that's going to persist?
Yes, I think there's been three drivers of the market that have helped this outperformance that we didn't see coming this year. One has been the Gen AI story. So that's a much more bottom-up story. So it's linked to tech and the appetite here to chase those names. I think the second one was positioning. We were aware that people were underweight coming into this year, but I think the extent of the chasing of the market that we've seen has surprised us. And the third thing, maybe most importantly, has just been that the data's been stronger than we expected. Us, along with many in the street, were looking for a slowdown and looking for a recession this year, and it just hasn't manifested, and really that's a big driver of the unwind of the gravity of the bearishness in our call.
You've reset. You're still looking for a negative market based on this call at 4,150. Where are you anticipating the weakness comes from, given everything you've just told us?
So I really think it is this manifestation of the slowing in the economy. So we know that everyone was looking for a slowdown that hasn't manifested as quickly as we expected, but that doesn't mean that it's not coming. You know, the effect of the massive policy tightening that we've had is going to have an effect on the economy. It's just taking longer to percolate than people thought. This idea of excess savings being run down, we do think that the consumer is going to slow. So I think many of the reasons that we were cautious on the market, we still think a lot of that can manifest. It just might manifest at a slower pace than we'd previously expected.
You've been a complete class act on this reversal. I want to dig into it further, and that it's been led by 7 stocks. It's been led by big tech, among others. Ben Laidler, who's been dead on, a huge bull, says they will reaffirm and stay strong. With your new optimism, your new neutrality, and dare I say you're going to announce today that you're going to 5,000 SPX, are you going to do it with tech as a growth leader?
It's controlled pessimism at this point, I think. I think in terms of market leadership, it's hard to get away from tech. There is this structural growth story. So if we're in an economy that is slowing, albeit at a more gradual pace than we anticipated, then the structural growth stories are those that are going to outperform. The issue with tech is how far it's rallied this year. So I think the story going forwards in tech is going to be about being more selective. So we see certain subsectors in tech, things like semis, that have rallied massively this year, that maybe might pass the baton a little bit over to maybe software or some of the tech infrastructure names.
So I'm wondering about the concepts behind your bear case and your bull case. They follow kind of traditional economics, where bad news is bad news and good news is good news. The bad news being a hard landing, 3,400. The good news being a reacceleration, 4,600. Why don't you think that a reacceleration would actually prompt more aggressive Fed action that could torpedo the market? In other words, the sort of good news is bad news and bad news is good news. I know that Tom's loving this. But, how much does that kind of come into play?
No, I think it's a really good question, because when we look at the correlation between equities and bonds, that gives us a bit of a window into that question. So you can look at bond ETF, something like TLT, so longer term treasuries, and you see the correlation between equities and bonds really broke down in summer when the equity market rallied, and we've had a pickup again in that correlation, which kind of points to me this idea that equity valuations are again looking stretched relative to rates, and that does raise the risk that if you get a hotter print, particularly in, say, this week's CPI, that higher rates could be a headwind for equities. So I think equities are stuck between a little bit of a rock and a hard place, in that an economic acceleration, if it's too hot, starts to bring rates higher, and that can again compress PE multiples. But a slowdown is really the bear case. I think our bull case is pretty asymmetric. We're not looking for that much upside. We think that upside would be driven more by value stocks and cyclicals. If we have data surprising to the upside, I don't really think that's going to help the names that have outperformed this year and driven the rally so far.
So do you believe in Goldilocks, or do you think that this is people just sort of wishful thinking and picking a point along a progression towards something else and saying, just stay there?
I think it's very difficult just to stay in this benign Goldilocks environment. I think one of the things that we got a little bit wrong this year was just underestimating this kind of piece in the middle. We had an issue with the data last year that it was way too hot. And our view was that data was going to cool and become too cold and take us into a recession. But ultimately, if you go from too hot to too cold, you go through a piece in the middle where things feel just about right. And that's where we feel we are. So we don't think the data is going to plateau here, and we don't think we're going to stay in this Goldilocks environment forever. This kind of controlled descent that we've had in the data, we think is going to continue to deteriorate and will morph into a shallow recession at the start of next year.
My great theme has been corporations will adjust. How linked, based on what you've been through the last 18 months, how linked is economic analysis with the securities analysis of the market?
I think that equity markets are always very linked to the macro, but there are these secular drivers that sit alongside that. When we go and look at any of the large crashes or bear markets over the last 100 years in equity markets, they're all accompanied with a swift economic decline. But that doesn't mean that we can't have these secular themes, things like Gen AI, that drive some dislocation. So I think part of it is the magnitude. When you're in a more benign economic environment, the economy is not necessarily the primary driver for the market. If we do get to a situation around the turn of the year where we start to see negative payroll prints, then I think people's attention will divert, and people's ability to buy into blue sky thinking becomes much more challenged.
Are you allowed to talk about Apple?
We can talk about it loosely. Obviously, I don't cover
Let me loosen it up. Let me loosen it up as follows. Dollar stronger. China perhaps developing different tastes. Nationalism shaping perhaps some patriotism at home away from foreign luxury items. Are multinationals in trouble here with exposure to China?
So I think how I can answer that is think about some of the general themes that we think about in terms of tech. Those stocks are going to be incredibly resilient in a downturn. Why? Because they have great free cash flow and amazing balance sheets. But that also doesn't mean that they are immune from a consumer slowdown. So one of the things that we think will manifest over the next 6 months is that this tightening of rates will affect the consumer. Now, the consumer is obviously, consumer discretionary is your first port of call, but there are a lot of tech stocks that do face the consumer. Ultimately, Apple sells goods and services to the consumer. So will they be entirely immune from a cyclical slowdown? That's the question.
It's like one more thing, except, it's encore une chose. When you're BNP Paribas, you say that. Of course, you say that.
That wasn't a great song as well.
I think
I'm sure that was a song, wasn't it?
Yeah,
sort of like 90s club music. Yeah. All right. Greg, thank you. Greg Battle.
Encore une
BNP
chose.
Paribas.
It's French.
Wasn't sure where you were going with that.
No, we're going to London next week. We ought to do Euro training thing to Paris. We should do the show from Paris.
You want to take the Eurotunnel?
Yeah, the Euro train thing. Yeah, you come
just to
out
Paris and back,
fields.
or do you want to do something in Paris?
No, I think we do the show.
Okay, with Greg.
With Greg. BNP Paribas.
All right, looking forward to that. Put that on the schedule then.
I can't focus.
Next week.
I can't focus.
Really?
Everton,
I'm shocked.
Everton or Everton? I mean, we got a new focus here at Surveillance on Everton.
It's Everton.
Everton, the Merseyside Derby, and they're going to be taken out. 3 guys in Pasco and Wander in 777 in Miami.
The blue
Maybe
half of Liverpool.
Take them out.
And Tom, based on our reporting, I understand this would make it the 10th US-owned club out of 20 in the Premier League.
Yeah.
I find it fascinating because I think they see a real upside in the values of these football clubs. And I'll tell you why. This is the world's game. And if you look at the franchise value of a US sports team, there are so many that dominate the top 10, even though this is the game just for one country, which speaks to the power of this country.
Yeah.
I think that a lot of US-based investors see the Premier League as it. It has become immensely dominant in world football. And for that reason, Tom, I think they see a lot of upside to the value of these clubs.
And Pasco and Wander at 777, they can look at this as like 6-8 years of bolt-on. They sell it to the Saudis, right? Because the Saudis are putting
There's only so many clubs you can sell to the Saudis. And I imagine they're going to tighten that up as well, Tom. But certainly America.
They haven't won this year.
America owns British football in a much, much bigger way.
Do the guys in Miami take a loss if they're relegated down? Is that a risk here?
Well, it depends if they monetize that loss, right?
I don't know. We're just covering this
but
because
certainly,
our chairman
brand value is going to take a hit if they get relegated. Absolutely. That's always the risk. The Saudis ran that risk, by the way, buying Newcastle, and they almost got relegated.
But now they're good.
But now they're good.
Yeah.
They spent the money. They started to develop the squad.
For the day.
Is that it? We done? You want to talk
we're not
real?
done.
Let's talk sports, New York sports.
Our Bloomberg senior management loves Everton.
Is that right?
Yeah, that's why we're
New York sports for a moment in time looked dreadful in the last 24 hours, and it looked like it might get even worse. The first drive, Bills Jets, Aaron Rodgers going down, and you're just thinking, never mind his season over, Jets season over. Then they won the game. They won the game, TK. It looks like, I understand he's going to get a scan a little bit later today, Tom. It might be season over for Aaron Rodgers.
Yeah, we can make... It's not funny, but Hilarian's ready to step in.
I texted Mohammed last night.
He's ready to step in.
As soon as it happened.
See you, Cambridge.
I'm sure the Jets fans thought it was going to be more of the same. Another tough start to the season, but great win considering what happened at the start. From New York City this morning, good morning to you all. Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. The names that move markets are on Bloomberg.
There's a complete change in the labor market. There's a complete change in the energy future that we are facing.
Under tightening would be a worse mistake than over tightening because we can course correct that.
The question is whether we need to increase the pressure or just keep pushing.
We've been getting good news. We just have to keep getting good news.
Nobody covers business like Bloomberg, your global business authority.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Look, could we touch $100? Of course we can. Are we expecting prices to average above $100 just yet? Without an outage? No. Things are slowing in the economy, but oil demand is still very, very strong, don't get me wrong. And Saudi Arabia will keep supplies in check to ensure that inventories continue to draw. That's where we are right now.
That's exactly where we are right now. And Rita Sen of Energy Aspect speaking to us in the last week. A new high for the year on Brent crude in the last 24 hours, 91.45. Your price action shaping up as follows this morning, and good morning to you all. WTI crude, $88 and about 7 cents, positive by 0.9%. Going into CPI tomorrow, yields a little bit lower by a single basis point, 427.62. Looking ahead to the iPhone launch a little bit later this afternoon. Tom, equity futures negative here by 0.2%.
It's going to be interesting to see on a quiet economic day, but then the data piles in tomorrow. John, what's the latest zeitgeist on inflation? I mean, I looked at the headline, I get it, oil up and all that, but core is supposed to be, am I right, quiescent? Is
Yes.
that the right word?
Well, you've nailed it. You asked the question, then answered it. That is the story. Two stories. Pick your poison. Do you trade on headline, being firmer off the back of crude, or core showing signs of progress, Tom?
Yeah.
That's going to be the decision going into Chairman Powell and the Federal Reserve decision next week.
Let's frame all these themes together, but also take a bigger picture. As I've stated, my book of the year is Robert Kaplan's The Loom of Time. I can't say enough about this. It is a chapter across all of the greater Middle East, and always Kaplan has one chapter that is phenomenal. It is on Saudi Arabia. To help us with Brent at 90 and on the reality of Saudi Arabia and $100 oil is Francisco Blanch. He's head of global commodities and derivative research at Bank of America Global Research. Francisco, you nailed oil. You got your 90, 91 Brent as well. The trajectory seems to be to 100, and very clearly that's what Saudi wants, is a domestic reality. They have budget requirements, fiscal requirements domestically. Are we going to see $100 barrel because Saudi wants it?
It's possible, Tom. I would say there's three things that have been moving oil prices over the course of the last 3-4 months. Supply, and supply. We've had Saudi Arabia cutting production for, as you know, close to a year now. And they started cutting in September of 2022 at around $95 a barrel on Brent. So clearly they want to have higher prices. They're trying to push the market there. What's new in the past few months is that Russia has finally started to align itself with Saudi Arabia and started to take production out. The Russians, after maximizing volume over price, over value for much of the past 12 months, they've started to focus on price over volume. And that's a new development in Russia, I would say, in the last few months. And then also we've had a lot of refining issues, Tom. We've seen products, particularly diesel, leading the oil market higher. So those are the three main supply drivers.
One of the great things in Kaplan's book is the new linkage, not like 1986, but the new linkage between Saudi Arabia and China. Can China live with $100 a barrel oil?
Well, I think that the Saudis have always been very cautious about avoiding demand destruction episodes. And certainly, I think they will become cautious again if prices break through $100 a barrel, because as we saw last year with gas, with natural gas, if prices do get out of whack, you can lose a lot of demand. European natural gas demand from industry, remember, is lower today than it was at this time last year, with a 90% decline in prices. So you have to be careful what you wish for. If prices move up too fast, you can end up hurting consumption. And China today, as you know, is the world's largest oil importer by a mile. And is facing a pretty weak economic outlook ahead because of the real estate challenges and the trade war with the U.S. and of course the tech sector also being down. So I think China is not in a great economic position to begin with. So I think OPEC Plus will be careful as prices rise.
Before we drill into the demand side, let's sit on supply just a little bit longer, Francisco. You mentioned a shift in Russia, away from volume to price. What's underpinning that shift? Is that well understood before we make a call about how durable that pivot will be?
In my mind, the pivot comes after a very successful program set up by the U.S. Treasury to put a price cap on Russian oil. Remember, the price cap essentially encouraged Russia to export high volumes at low prices, which were then resold, redistributed across mainly India and China and other clients. But more recently, I think the Russians have figured out that the ruble is too weak, that the Russian tax authorities haven't been able to really raise enough revenue, and the macroeconomy in Russia has really deteriorated. And of course, we've seen that with tensions building up within the military and the paramilitary over the course of the past few months. So I think the conclusion that I believe the Kremlin is probably arriving to is that they need more money, and therefore the way to do that is the way to maximize revenue for the Russian tax authorities has been to pressure volumes lower and allow prices to rise. And the price of Urals crude oil, which was trading around $50 a barrel, is now approaching $80, well above the price cap set out by the U.S. and the European Union.
On our screen right now, Brent crude through 91. So, Francisco, let's talk about demand and build on the question Tom asked. It's an important one. Have we seen any sign of deterioration in demand from China, even with that economic weakness?
Well, the August numbers were phenomenal in terms of import increases. We saw China importing 12.5 million barrels a day on average throughout the month. Granted, imports in July were kind of weak. But what we hear from China, and I was in Singapore last week and at meeting all the various energy traders, the main message is that Chinese demand is pretty healthy. And to be honest, you see it in the data. You look at number of air flights, you look at passenger traffic. Demand's still pretty healthy. What's been weak is industry-related consumption. So think about gas, oil, diesel, and the petrochemical complex. That's been weak. But I think overall Chinese demand is in a better place. I think even though the real estate sector is not doing well, you still have a strong services sector come back after COVID, and that's supporting oil prices in China and crude runs as well. We've seen refineries running a lot of crude oil in China over the course of the past few months. So I think Chinese demand for oil continues to lead, frankly, the world. Most of the demand growth this year and probably next year will still come from Asia, and China will be the bigger part of that.
This goes against the narrative, which is that China's falling off a cliff, not demanding anything, and that this is entirely driven, that the increase in prices in oil is entirely driven by what Saudi Arabia is doing and maybe on the margins, what Russia is doing. If we don't have that narrative, what would stop oil prices from going higher, especially if demand continues strong from China?
Well, I mean, I think look, China overall, like I said, is coming back from COVID. If you look at international flights, they're still down 50%. Now, there's been a lot of tension between the U.S. and China over the course of the last few years, right? And for instance, flights to the U.S. remain very, very suppressed. But that's going to have to pick up. And we're also going to see a meaningful increase in China flights to Europe over the course of the next few quarters. So in my mind, I think the Chinese demand story from a services perspective is okay. I mean, GDP in China is not negative. I mean, it's weak, but weak means 4%, 4.5%. That still allows for growth in kind of the same things we did after in the West when we came out of COVID. Restaurants, going to the movies, traveling around. I mean, the Chinese consumers are doing that, and that's supportive of the oil market. And then, of course, to your point, I mean, the curtailments on OPEC have elevated prices, have brought inventories on a downward trajectory, and we expect that to continue. So again, we are targeting $90 a barrel on Brent for next year. That's the current market right now is at 86 for calendar 2024. So there's a little bit of upside in our view from current prices. But I think if you push too hard, the risk is that inflation comes back, and then the narrative that we're going to have peak rates with no recession goes out the window in my mind, right? So I think OPEC has to be considered also about consider the effects on the macro markets, particularly rates and the outlook for a potential recession in the U.S. and the rest of the world.
Hey, Francisco, always a clinic. Thank you, sir. Francisco Blanch of Bank of America, speaking exactly to what Marko Kolanovic of JP Morgan talked about yesterday in his note, the potential for the commodity price surge to feed inflation and extend hiking cycles. More on that conversation still ahead. Lindsay Piegza of Stifel from New York City. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
No drama this Tuesday morning, pulling back just a touch on the S&P 500. We're negative here by 0.2%. Yesterday on the NASDAQ, best day of gains of the month so far. The month's still young, got a big event a little bit later this afternoon. The NASDAQ this morning, Tom, lower by 0.2%.
And again, played off Tesla. You were talking about it as we went to air, John. I mean, the idea that any given sell-side firm can come out and say, let's go on a ginormous stock like
you
that.
You get a 10% move.
Like we've never seen that before.
Not just any firm, though. Morgan Stanley, not just any analyst, Adam Jonas.
Yes,
which is
true.
very closely followed. in the auto sector. But I'm with you, to see a move like that off the back of a single call on the south side is quite something.
And to what Lisa mentioned with Francisco Blanche, the idea of what China's going to do, and I still think there's a conflation, Lisa, of the gloom, the tangible gloom of domestic balance sheet China with what they're going to do in terms of economic output. The answer is most of the people I trust say, their economic output's not going to be that bad.
This might be kind of perverse, but maybe this is the downside of humility, that if people are very aware of what they don't know, someone just says a catchphrase and they say, oh my goodness, maybe I don't know that I should buy. And that's sort of a question of how much rumor really fosters that, John.
FOMO, maybe some FOMO in this market, maybe. In the bond market, 2-year, 10-year, 30-year shaping up as follows. Your 10-year looks like this going into inflation tomorrow. Down a single basis point, 427.62. A 2-year still in and around 5%, 4.99 on a 2-year in America. Just to finish on foreign exchange, the euro shaping up as follows, going into the ECB on Thursday. A break of 107 in the last week. Had a little look at 106, back to about 107.20. Negative on that currency pair by 0.3%. Yesterday, a ton of dollar weakness against the whole of G10. The dollar bouncing back just a touch this morning. Under surveillance this morning, Apple launching its iPhone 15 model later on this afternoon. And while the majority of new models will still be China-made, India-made phones will also be available on the first day of sale. That will be a first for Apple. Underscores the company's growing use of India as a production base for its iPhones. Comes at a time, Tom, when there's increased tension with the US and China.
And this is not some CEO delegating authority. This is how Tim Cook became Tim Cook. This is what he does best. That was been emphasized. Mandy Singh mentioned that with Bloomberg Intelligence the other day. But to me, it's really something worth watching. Can the labor execute? Can they get out a zillion phones? Is the design there? Is the fit and finish there? Is the perfect Apple liddy cute little, the little cutesy pie box?
Is that what you're calling it? A cutie pie box?
Yeah, and then the kids leave it. They leave it out so that
this feels personal. This feels personal. Pick a word: decoupling, de-risking, diversifying. What would you say Apple's doing?
Sending a signal to China that we have optionality.
Well, the thing that I find fascinating is that in some ways, Xi Jinping gave Tim Cook a free chance to actually be emboldened and embrace other countries by basically saying you can't use the iPhone if you're a state employee. How much does this give Apple more room to maneuver with de-risking, diversifying, which they had been doing anyway, but they can make a bit more of a show about it just to talk about their prowess globally?
Earnings risk, Tom. Earnings risk. Let's see if this spreads in China. It's my big question in this quarter.
Yeah,
Are we going to see people flocking to Huawei? Does Huawei have the scale to compete with China? Does it have the technology to compete with the iPhone?
I don't think we know on that, but what we do know is there's been this belief for years in every launch, every one more thing moment, the black turtleneck and all that. There's been this idea, OMG, Apple's dead, margins are going to decline. And it just, oops.
Yeah, it didn't happen.
They didn't decline.
Let's sit on margins. This story on labour costs. The United Auto Workers lowering its pay demands to 36% from 40%, so it's a very small shift. Thursday's deadline for a deal with Detroit's automakers is just around the corner. Bloomberg reporting the companies still see the demand as boosting labour costs too high. I'm not surprised by that, Tom. Just a softer stance from 40 down to 36 from UAW reportedly.
I wonder how they pick which one to strike. I'm fascinated by that. Is it
yeah,
like
you've said that a few times.
How many people are in the lot? How many cars are in the lot? Who's, which group of union workers will cooperate with union management? I don't know what the chemistry
I'm looking straight to the White House, TK. I can't wait to see what their response would be if we get a strike.
After the 48 hours they've had with the president now home, I don't know what his response will be. My head's spinning. I wonder what
based on what he's told us,
Trump's response.
Based on what he's told us, the most pro-union president in the history of this country.
Yeah, but is the union with him? Mr. Trump's going to come out and play the strike
precisely.
As well.
We're going to find out. Final story for you: New York Jets fearing the worst after star quarterback Aaron Rodgers suffered a suspected serious Achilles injury just 4 minutes. 4 minutes into his debut with the team. The 39-year-old helped off the field after being sacked in the first quarter of the Jets' 22-16 season-opening win over the Bills. Tom, this was not how this was meant to go yesterday at all.
Huge response. And, I actually was talking to Paul Sweeney about this in the last hour of surveillance every morning on radio. And, the idea here, football is just ginormous. I mean, the numbers here, it was like the top 30 or top 40 programs last year
And the good news, we actually were able to see this in New York, Tom.
Yeah.
If you had Spectrum, because
At
Disney
the last moment,
China got it together and agreed on it. Shock horror right before
4
Monday Night Football.
4 p.m. on the commute home as well. Right now, let's pick it up with Lindsay Piegza. This is perfect to come off of Francisco Blanche with $90 oil and the beautiful microeconomics he showed us. Let's continue this forward from Blanche to Piegza. And Lindsay, I want to go to the microeconomics of oil and how it folds into your inflation call. Here at 90, or dare say higher, what's it do to the Piegza inflation forecast?
Well, I think energy costs are one of the big wild cards that the Fed is facing right now. Now, of course, last month we did see headline inflation tick higher. The committee seems to be brushing that off. But if, in fact, we do see these elevated energy costs sustained on a sustained basis, filter down, this could cause a significant reversal in headline inflation, forcing the Fed to take more aggressive action than I think investors are bracing for. Right now, the notion is more of a patient position from the Fed, but the risk, and we've heard this from Chair Powell before, the risk to inflation is significantly to the upside.
Do they become more restrictive, or do they move along the x-axis where longer becomes longer?
I think both. I think the Fed absolutely has more ammunition in its tool belt to continue to raise rates closer to that 6% target, on top of which we could maintain that elevated level for a prolonged period of time beyond even what the market is anticipating. So even higher for even longer could be the scenario for the Fed if we do see sustained heightened energy prices.
Lindsay, it seems like everyone's thinking that we're in this soft landing type of scenario. It seems now a consensus among investors, among economists, at a time where you are seeing subtle shifts. You're seeing labor markets weaken. You're seeing people's pessimism about their finances start to really pick up. Do you start to see some of these signals as a sign that maybe we're shifting into something that's less, I don't know, auspicious, that's a little bit less benign than what people are portraying it as?
Well, it's interesting that the bar of expectation has been shifted so much lower that when we talk about a soft landing, it's simply maintaining the bare minimum of positive growth. Because right now, the U.S. economy is far from robust. It's still in positive territory, absolutely. But the momentum seems to be shifting, to your point, to the downside. We're a consumer-based economy, and while the consumer remains more resilient than we had anticipated, the momentum is clearly waning as consumers are relying on these temporary factors to supplement their spending. They're drawing down savings. They're pulling out 401k hardships. They're ramping up credit card debt. These factors are unsustainable. And so as we do expect these factors to be tapped out, that's going to provide more downward momentum for the consumer and by extension, then more downward momentum for the U.S. economy.
And this was a New York Fed survey yesterday that showed that consumers are finding it most difficult to access credit going back to 2013. Do you expect this to play out in retail sales that we get Thursday? Do you think that this is going to be on the table, or do you think that we're going to have to really wait to see whether or not this is truly going to affect growth?
Well, we have to be careful when we're focusing on one data point, the latest data point, particularly when it comes to retail sales, as we have seen a tremendous amount of volatility as consumers dramatically shift the goods and services in their basket on a month-to-month basis. But when we talk about that, that's a broader implication of the consumer recognizing the fragility of their household balance sheet, something that we do when we're increasingly concerned about our financial footing. So it's not necessarily about one data point, but that downward trend of momentum. And keep in mind that consumers have been pulling away, not just in terms of the nominal dollar spent, but shifting away from goods or stuff, increasingly back to that pre-pandemic trend of relying on experiences or services for the vast majority of their monthly expenditures.
One of the experiences, Lindsay's watching Bloomberg surveillance. It's directly folded into GDP. Lindsay, I did an analysis yesterday before the pandemic of Europe up a total of 8% nominal GDP, while America exploded up 24% nominal GDP. 12 months forward, what is that combination of real GDP and inflation? What's the nominal run rate going to be out well into 2024?
Well, let's start with the real rate. I think the real rate is sub 2%. I think the longer term trend for the U.S. economy is about 1.8. You layer on 2-3% inflation in an optimistic world, and we're closer to that 4% range for nominal GDP.
So let's finish where we began, Lindsay, where Tom was asking about oil prices and how that could really change the Fed's trajectory and change the inflation picture. Is there a price of oil where it becomes inhibitory for the consumer, where suddenly it does impede on their discretionary spending in a more material way? Are we getting close to that?
Yes, I think we are. I think right now, as we just talked about, the consumer is on increasingly fragile footing. And again, we use this word resilient for the consumer, but that's in context of what we had anticipated, a more precipitous decline in activity given 500 basis points plus in terms of Fed tightening. But the fastest way to derail the American consumer is sustained heightened energy prices. And we've seen this play out in cycles before. And so if we start to push towards $4 a gallon or over $4 a gallon, that's going to be very difficult for the average household balance sheet to absorb, particularly when we have other costs coming online, particularly student debt payments. When the average household has a difficulty footing a $500 shock on a monthly basis, any type of tweak to pulling away that discretionary spending, be that to filling up the family car or paying down those monthly debts, this is going to have a significant impact on the consumer's ability to spend out in the marketplace and continue to prop up the U.S. economy.
It makes you wonder how many expensive smartphones they'll be buying, Lindsay, this quarter, doesn't it?
It does, absolutely. But remember, that has become less of a discretionary purchase and more of a necessity as of late.
The iPhone 15, TK, necessity. Is that what you're hearing at home?
My variable on this, I've said this, Dan Ives I thought was great on it, huge disagreement on this, is are the phone companies going to help us with our necessity payment? Really, to me, that's the heart of the matter.
Hey, Lindsay, thank you. Lindsay Pearkser there of Stifel on the latest. Let's get to a survey from Bank of America, their fund manager survey on policy. 6 out of 10 say the Fed is done. Back in July, 9 out of 10 said the Fed is not done. What a difference a couple of months makes, Tom. Just a total mood swing off the back of the CPI data over the last few months.
It's data dependent, and really over the next 12, 15 days, we're going to be as data dependent as ever. I don't have a clue where we're going to be. You can guesstimate it. You can bet on the market about it. What I would suggest off of this weekend is there's a fair amount of gloom out there. I mean, I think, gloom is... I can't say gloom is back in place, but there's enough narratives of gloom.
Based on the tease I'm about to read.
Yeah.
This is a new one. When was the last time we did this? When was the last time we did this? We're going to be catching up with Dr. Hansati, Johns Hopkins, on the new COVID vaccine.
I called Qantas up and I said, get Hansati on, because I'm going to get the booster. And I need Dr. Hansati.
Okay, so let's do this. You have an honest and open conversation about whether you should get there.
Yeah.
That's what you should
That's why we're doing this.
Okay, great. So this is like your doctor's visit live on.
Yeah, it is. It's live on air. Johns Hopkins. They're the best. I mean, their websites are great. Their rheumatology is world class. I mean, scary, scary good stuff.
Okay. That conversation just around the corner.
Yeah.
TK with a doctor's visit. We should brand that, Tom.
Yeah, we're going to do a social media thing on it.
Okay, great.
Seriously.
All right, cool. All right.
Not now, but when I get the shot.
Well, no, we're going to do that next too. We're going to have the conversation.
I've got my comfort dog goes with me. I hold vet Bill.
You take a comfort dog. Is that actually a comfort pet? A therapy dog?
Yeah.
Okay.
Yeah, he's
you
coming
take
to
that on
London.
planes with you?
He's coming to London.
Nice.
Yeah,
you buy a seat especially for him?
Just for him. Thank you, Redo.
That's sweet.
Keeper of the MX.
And you expense it too.
Sure.
That's good to hear. From New York City this morning, good morning to you all. Equity futures down here by a couple of tenths of 1%. Your iPhone 15 unveiling a little bit later this afternoon.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
How did
Jeff Bezos realized you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
The labor market is so important because it really supports the consumer spending, and we've seen the labor market cooling off. We should eventually see signs of consumer spending cooling off. There's been downward pressure on inflation, but it's a really tricky needle to thread in terms of doing just enough, but not too much.
So difficult. Claudia Sahm there of Sahm Consulting, the founder and former Fed economist. Looking forward, Tom. You could take that clip, play it all the way through the year, and we've just heard it a million times. This is what's going to happen. This is what's going to happen. And it's happening way more slowly, far more slowly than we anticipated.
It's sort of Humility Tuesday. This came from James Dimon talking about he wants primal screen for humility on bank capital requirements. And there's other issues this morning on humility. And Claudia Sam's economics is an economics of humility, where she will make statements, but she hedges every step of the way, particularly on recession.
She's fantastic. Just one of the best at that. Looking ahead to jobless claims on Thursday, retail sales on Thursday as well. Tomorrow morning, we'll get CPI in America. Going into all of that, equity futures just a little bit softer here, negative by 0.2%. No real drama here on a 10-year, 427.82. I want to go back to that quote from Marko Klanovic over at JP Morgan. The risk, the potential for a commodity price surge to feed inflation and extend central banks' hiking cycles. That's the call from the man at JP Morgan in the investment bank, Tom, at the moment.
Well, we're going to have to see how that goes. I mean, there's going to be a lot of, but the opinions are going to adjust here by Thursday or by Friday. I mean, Klanovic is probably going to publish 3 times.
Well, depending on where crude is, but yeah, I mean, it's been pretty bearish on stocks through much of this year.
This is a joy to do this in remembrance of how people stepped up big time in early 2020. I have a clearest memory of our first interview on COVID. It was with an acclaimed radiologist from Mount Sinai in New York who brought into our studios x-rays from China showing the outside lung damage that COVID could wrought. Johns Hopkins helped us so much on this. And joining us now in the booster uproar, Bhakti Hansadi, to say she's Associate Professor of Emergency Medicine, barely describes the global parchments, the study, the academics of Professor Hansadi. Bhakti, great to see you again under always COVID difficulties, to say the least. When we were kids, it was routine to get a booster shot. Is an mRNA booster shot any different, any more dangerous, any more at risk than a tetanus booster shot of my childhood?
Absolutely not. The current new vaccines are not technically boosters, or updated vaccines that are targeted to the current viruses that are circulating, but they're equally safe. These vaccines have full approval, i.e. they've gone through all the scientific rigmarole to ensure that they're safe and effective for the population.
Bhakti, I look at the science here and it seems in order. I'm basically appalled at the government response, the messaging from the White House to get behind the science community. What do you need from the president? What do you need from the administration to build confidence in this booster program?
So I think we clear messaging. This is full approval, number one. 2, we need to hear from the CDC today. They will be deciding who should get the booster, who do they recommend, but also the reasons for those recommendations. Why is that the current recommendation? And what are they trying to do by making this recommendation? Are they trying to prioritize those at highest risk? Or are they genuinely saying that the vaccine is only recommended for those people it will benefit. So we need clear communication, clear logistical reasons as to their recommendations. And the third is we need to make sure our supply chains are strong. So we need to make sure this vaccine comes out later on this week, that folks know where to go, that folks can access the vaccine quickly and effectively.
How much did the administration and policymakers really set themselves back by trying to clamp down on the message so hard initially? There was just a court ruling saying that the administration did overreach in trying to strip away any anti-vaccine messaging. How do you view that in light of what you're trying to put forward right now?
So we view that because it has this paternalistic attitude to health, right? But we are all informed partakers of our own lives, our own health. We have access to information, some good, some bad, some here, some elsewhere. And so by having communication that is more robust, that's less black and white, that allows for effective dialogue, that allows individuals to buy into the whole the interventions, the vaccines, the therapeutics, the masking. And so what we need is to ensure that there's dialogue, that there is debate, that debate has a scientific foundation.
There's also been a lot of discussion about side effects for the vaccines, in addition to how much they actually prevent you from getting more sick. If you're going to still get sick and you've already had it and you're not going to die, there's this sort of feeling, what's the point of increasing the potential risk if on the downside you could just spend another day in bed? What's your view on that?
Absolutely. So first of all, the FDA would not approve a vaccine where the likelihood of you being sick is greater than the illness itself, right? That is just not going to happen. So the side effects of the vaccine do exist, but they're over-reported, partly due to the media. We over-report rare events that can be dangerous. As far as the illness from COVID-19, it affects different people differently. So if you have multiple comorbidities, you have existing lung conditions, you may in fact require hospitalization. Hospitalizations went up by 8.7%. So it's not as if this disease is a benign common cold where you're just going to spend an extra day in bed. I had the pleasure of treating several patients over the weekend at Johns Hopkins Hospital Emergency Department, and the majority of my patients went home, but some patients did require admission. A lot of patients reported that they were fatigued, exhausted, couldn't go to work, couldn't manage their activities of daily living, couldn't look after their dependents. So if you're responsible for a family, for children, elderly parents, or you need to go to work, then get vaccinated. The chance of you doing that is much greater.
How is this different from the flu?
Not significantly. The flu has the same constellation of symptoms: fevers, chills, colds, congestion. COVID will present the same, as will RSV. And that is the challenge here. COVID illness will likely be underreported because some people may assume that they just have the flu. And that's okay as long as you're staying at home and isolating.
Dr. Ansari, what is the science of masks? I don't want the politics. I don't want the mumbo jumbo. I can't stand them, full disclosure. But what is the science of masks in this COVID of 2024?
The science of masks is when masks are worn, they are effective at preventing onward transmission. A lot of the literature that you're seeing right now misinterprets the data and how the data was collected. A lot of the data is in non-COVID eras, in individuals who are not accustomed to wearing masks. But the data from COVID during masking in healthcare facilities showed that there was very little healthcare worker to healthcare transmission when healthcare workers were wearing masks, even if they were COVID positive at the time. So the science shows that masking works. I also hate masks. My patients feel better when they see my face, they see my smile. I'm able to reassure them during their illness. So I'm choosing who I mask and who I don't mask with. If someone does not have upper respiratory illness or flu-like symptoms or is not immunocompromised, I'm currently, right now, this is today, I'm not masking. In the future, I may change that if COVID-19 cases continue to increase.
We want to see you smiling without a mask. Doctor, thank you. Dr. Bhakti Ansari there on the latest. TK, it's been a while. I love seeing the doctor. Let's hope we don't have to do this too often going into winter.
I just want
I don't
to
think anyone wants that.
Yeah, I just do science here, and I just want the politicians to be forthright about it. I get that there's a political debate, and there's an advantageous outcome for politicians to politicize science. That's always been the
Tom,
case.
After all these years, why are we still talking about science as if it's definitive? and not a process of ongoing study.
It's not definitive. I sat in classrooms in microbiology when mRNA was a pipe dream of David Baltimore and others on the island of Manhattan, Baylor in Texas, mental block. Anyways, there were people with David Baltimore 50 years ago doing this in mRNA, and now it's saving our lives and saving some lives at risk.
The problem is there's nuance. There's data that's better than others. It's very difficult to know. And how do you come up with a public policy at the same time of trying to follow the nuance of science? Did they do it perfectly? There's a lot of criticism. So how do you then form a policy now with public trust that has been impeded in a significant way in certain corners? And it's going to be a real challenge going forward.
Oh, public trust has been shattered. Absolutely
yes, that
shattered.
is accurate. That is accurate.
Big time.
And I would say, am I right, John, less in England where you've got a huge microbiological, Imperial College and all that, you got a real belief in it.
We were lied to on so many fronts, Tom, not just misled. Flat out lied.
Shattered is absolutely the right word.
Stuart Kaiser of Citi is going to join us shortly. We'll talk about markets, less about COVID. Equity futures on the S&P negative here by 0.2%. From New York City this morning, good morning to you all.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Limes.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Central banks around the world, both developed and emerging, are fighting inflation. I really think it's about
ECB policy, how that relates to Fed policy and this U.S. dollar.
The consumer remains strong, so there kind of continues the challenge that the Fed has.
The last mile is going to be hard, but I do believe that we are very much on that disinflationary trend.
I think we're in this very hold your breath kind of moment.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
In many ways, the week begins today. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market's slightly negative by 0.2% on the S&P 500. Tomorrow, the big data point, CPI, just around the corner tomorrow morning stateside. Before we get there, later on this afternoon, a much-anticipated iPhone 15 launch, Tom, after a week of weakness from that Apple stock.
Can we try to get Apple tied into the CPI report?
Can if you want, yeah.
UAW strike? I don't think we can.
Higher prices.
There it is. There it is. We're going to see it this afternoon. We've got our full Bloomberg technology team.
Ed Ludlow, Caroline Hyde.
Styling, they're there.
Bases loaded, TK.
It's going to be there. I think they're doing a new iWatch, not getting much traction. AirPods better get traction.
Another set.
Well, we've got an odd set under the couch, so we got to replenish, I think is what
with a new set.
Sets.
Yeah,
plural. You have to have.
Okay.
I've never owned them, but others, they
you
walk
don't have
around
a set.
the house.
You don't use them.
No, I don't
okay,
use them.
You're still doing like old school.
They walk around the house. Afterthought has a set, and
is that
Mrs. Keena has a set.
Is that the family dancing? Is that
vet,
what that?
Yeah,
body action is. I've no idea what your body's doing right now.
This is Vet walking around Central Park.
You consider dancing to be?
Vet Bill's walking around Central Park.
Your body's just sort of like pulsing. It's quite distracting. Okay.
I'm getting ready for the music of the
Let's talk about the serious element to this story, the serious side of it. There's some new competition in China, Huawei, one, and two, there's the government pushing back, TK, pushing back and banning the use of iPhones across certain agencies, certain state employees, and maybe even state firms based on our recent reporting.
Lisa mentioned it earlier. We report today that they're looking at an India phone to be ready day one. I did not expect that. There it is. So, did they mention the politics today? I don't think so.
No, they try and avoid it, but Lisa, the foreign policy of this story is absolutely fascinating for so many people, particularly after the events of the last week or so.
Yeah, considering that about, a fifth of the revenue comes from China? I mean, this isn't insignificant. Whether Tim Cook weighs in, probably unlikely. At the same time, whether he signals something with India, I think that that's a signal people are getting.
Do we get a higher average selling price off the back of a phone that doesn't really have many big improvements?
You've mentioned this. If they get sort of subsidized by pay-as-you-go, can you see that kind of price going up? It depends on what they offer. I mean, this is an increasing staple. So at what point do you push people out of the market or basically say you're not going to resurrect your previous phone?
I take immense issue with this push people out of the market. They have done this perfectly. They got monthly plans. Your phone service can give you a monthly plan. Who pays $1,100 for one of these toys?
It's a monthly payment,
Nobody.
Sure. But it's still a big monthly payment.
I'll go with that. Okay, it's a mortgage payment, a car payment, whatever. But the fact is, this idea of the Apple gloom crew that, OMG, it's $1,100, we're all going to die. There's no evidence that's slowed sales.
I don't know. At a certain point, you could say that $1,200, $1,300. Okay, everyone, great. No, oh my God. Well, if people are going to get concerned at $4 a gas for a gallon, and you're at $3.83. You're not that far away. So at a certain point, people are like, "We got a phone. It's fine. It works. Fantastic."
They're going to look at $134 at T-Mobile, Verizon, AT&T. Let's go. Can I get it in red?
Maybe, yeah. Look, I would say this about these big tech firms in their current form, and I've asked this question a few times. When was the last time they had a real cyclical test? And think it through.
The
last decade.
When
was the last time they had a real cyclical test in the last decade?
Well, they had
I don't
one
count the
2
pandemic.
decades ago, but
everyone got sent a check, and a lot of people went and bought an iPhone.
Yep.
Based on the sales.
No question about it. It's been a hell of a ride.
I'm not sure they've had one.
No,
they're getting one right now in China
agree with that.
potentially
It's
on
been a hell
several
of a
fronts,
ride.
and we'll see how it develops stateside. Equity futures on the S&P look like this. We're negative by 0.2%, pulling back just a touch. Yields unchanged. 10-year 428. Crude. Take a look at that. $88 a barrel on WTI, and in the 90s on Brent crude. Lisa, this morning 91.28.
And we're expecting any minute a further kind of upgrade on the outlook from OPEC. They're putting out their monthly report. Very curious to see how the Saudi Arabia cuts to production, and Russia as well is affecting that outlook. 1 p.m. is the launch of the Apple's iPhone 15. Very curious to hear what they have to say about India. And today we do get some words from David Solomon of Goldman Sachs at the Barclays Financial Services Conference in New York. There also are a number of other speakers as well from Wells Fargo, Barclays, Deutsche Bank. I want to hear if they talk about consumer credit and what kind of spending we could see going forward, John.
Stuart Kaiser joins us around the table, head of US equity trading strategy over at Citi. Good morning, Stuart.
Good morning.
Let's talk about inflation tomorrow morning. Am I trading headline CPI or am I trading core?
Core, I think.
Core?
Yeah, core inflation. I think anything that rounds down to a 0.2, the market will take pretty well. If it rounds up
That's the punchline. H is joining us from Washington in just a moment. Bloomberg's chief Washington correspondent. Big conversations to be had down in D.C. Impeachment. We need to talk about the potential for impeachment. Unbelievable. From New York City, this is Bloomberg.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
I think it is important to be able to have a dialogue with China and with their leaders. And I think if we can continue to have that dialogue, that's probably the best approach to take right now. Maybe we can make some gains in trade and in some other areas like cyber, and at the same time, obviously, maintain our differences with regards to our military positions, particularly on Taiwan.
Effectively endorsing the position of the president over the weekend. That was the former U.S. Secretary of Defense, Leon Panetta, speaking on Bloomberg's Balance of Power in the past 24 hours. From New York City, welcome to the program. Pushing ahead to the iPhone 15 release a little bit later on this afternoon. Then on to this morning, rather tomorrow morning, CPI just around the corner. This morning, equities shaping up as follows on the S&P. We're negative by 0.2%, just a slight pullback, a little softer. Yields going absolutely nowhere. Your 10-year 428. Drew Mattis and Manulife just writing in. Drew Mattis is looking for 4% year end on a 10-year, 350 by next year. So 350 is this number, Tom, getting banded around here, there, and everywhere.
That's a working yield, and we mentioned Ian Lincoln with the drama of a screaming buy and all that, but there's a fair amount of debate about this. I mean, it's a range thing, and somebody's going to lose some money on this. I don't know who, but there's as big a debate in the bond market as there is in the equity market.
Well, what's been amazing, even with the likes of MetLife's Drew Mattis talking up 4% year-end, 350 next year, Tom, we're still in and around 5% on a 2-year, still in and around 430. On a 10-year, just sort of stubbornly maintaining these levels, even though many people have said they're not sustainable.
Well, that's the point. People say they're not sustainable, except they were for decades.
Are we back to the old normal?
In the old days, this was normal, and is a 7-8% mortgage normal? I don't think so. You got a real rate on real estate that doesn't work. But the answer is, this is sort of what it used to be like.
Is 7% mortgages still aren't normal? That's just the price right now.
There was decades
Torsten Slog of Apollo putting this one out over the weekend, Tom. The share of mortgages outstanding by interest rate at origination.
Yeah.
So this is dated data. It's from early this year, but I think it still holds. Below 3%, that's 23% of the market right now, Tom. 3 to 4%, 38%. 4 to 5 is 20. 5 to 6 is 10. Above 6%, only 9% of outstanding mortgages at origination. So the price we're told at the moment, Tom, is around 7, but ultimately Hard anyone's paying it. They're locked in for a whole lot longer.
Does policy clear this oddity? I don't know.
I'm not sure how it does.
Yeah, I don't know. Because it's not, to be clear, folks, in Europe and particularly in the United Kingdom, you don't have this.
No, different structure.
Because of floating rates.
Different structure. And the fixed rate agreements aren't this long. You wouldn't have a 30-year locked in this way.
A couple years ago, there was a 280-page jewel by the always brilliant Cass Sunstein. It was called Impeachment. And for all of us, including me, that think we know impeachment, but we don't know impeachment, the answer is Cass Sunstein wrote a primer back before Andrew Johnson in the ballet of the 1860s. Amory Horton joins us now on the 2024 impeachment debate of Washington. Amory, this isn't in Cass Sunstein's book. The Senate and the House, the polarity has to be historically unique, is it?
Well, they're very polarized at the moment, not just Democrats and Republicans, but the House and the Senate in regards to a number of issues. Impeachment inquiry looks to be one of them, as well as also comes to funding the government. If you look at how the House wants to have their appropriation bills tallied, and the Senate, which has had 12 appropriation bills come out of committee, and then we'll be seeing them hit the floor, we're looking at a $100 billion difference. It's going to be very difficult if the House and the Senate are both able to even pass those 12 appropriation bills. The Senate looks like it's moving in a more bipartisan fashion, though, and then it goes to a conference. It's going to be very difficult to see how they're going to end on the same page. The Senate actually wants to spend more than what was agreed upon in the debt ceiling deal struck between Speaker McCarthy and the administration, while the House is looking to extract more in terms of what they're calling fiscal responsibility and trying to cut even more off that deal.
Civics 101 with AMH. Let's do it right now. What this is about is linking a potential shutdown to a potential impeachment, I'm going to call it discussion or debate. How do those two conflate together?
Well, there's this potential impeachment inquiry, which we heard Speaker McCarthy talk about a number of times. He's really being pushed by the far hard right flank of his party. And Punchbowl News this morning, run by Jake Sherman, is saying that this week he's going to discuss this behind closed doors. So he's ready to move and give his promise that there will be an impeachment inquiry into President Biden's son, Hunter Biden, as well as the president himself. Obviously, that would be the impeachment inquiry, Joe Biden. And Speaker McCarthy is going to say that this means the House Judiciary, the House Oversight can continue the work of Jim Jordan, James Comer in getting the Biden family's bank records. The issue, of course, is does he have the votes to do this? There's a lot of Republicans in moderate districts that vote for President Biden that do not want to take this vote, even though the Speaker and a lot of individuals in the Republican Party say this is just an inquiry. But what Speaker McCarthy may be doing is holding and dangling out this impeachment inquiry to get the hard right, the ones that potentially want to see a government shutdown because they're not happy with the level of fiscal spending, to go along and vote for continuing resolution to keep the government open after September 30th. It's a bit of a carrot and stick approach.
The fact that this sort of Hail Mary approach is being floated right now, does that indicate that the chance of a government shutdown is looking more likely?
Well, it depends. If he's successful in this, potentially he will get those votes for a continuing resolution. Also, a continuing resolution could garner a lot of Democratic votes, but does he now isolate those Dem votes if he goes for impeachment inquiry? It's really difficult right now for Speaker McCarthy. I feel like I've said this a lot of times on this program, but this does feel like this is going to be one of the hardest mazes for him to navigate. I think one representative yesterday, Mr. Womack of Arkansas, put it very well. You have an individual, any individual in Congress is saying, I will only vote for this bill or this priority if XYZ demand is met. So you have about 15 Republicans who say they're not going to vote to fund Homeland Security if maybe Secretary Mayorkas is not impeached along with it. So these are the kind of demands he is dealing with in his caucus.
Has his leadership been challenged at all since a number of his health scares and his ability to wrangle the votes needed to get this through?
Not at the moment, but there's a growing number of individuals who are saying they will challenge him if he cannot deliver XYZ demand. Representative Matt Gaetz of Florida is saying that he will vote to have a vote of confidence to make sure that Speaker McCarthy is no longer Speaker if he doesn't follow through with, say, an impeachment inquiry. So this is why it is incredibly challenging for Speaker McCarthy, and it's even more so challenging because it doesn't have the support of the Republicans on the Senate side.
Emery, the president always, any president comes back from abroad exhausted. That's just the rule of the road. There's going to be a rest period for the president of the United States. What's his first order of work, say, Wednesday morning?
I would imagine the president this week is laser focused on what is happening in Detroit, Michigan. We still do not have an agreement between the UAW, the Auto Workers Union, and the big three car companies, and that contract ends 11:59 p.m. Eastern Time Thursday. That means we could see a strike at one or all three auto companies come Friday morning. This is going to be incredibly challenging for the president because obviously he wants to make sure these auto factories are up. This could have a big impact on car production, on the prices of cars that we've seen recently come down, given the rate of inflation coming down, and it can have an impact on the broader economy. At the same time, he has said he wants to be the most pro-labor union president in modern history, and that would make you think that he is going to want to lean into the support of the UAW. So this is going to be a complicated line for the president to walk, and as of now, there's no contract.
I'm not sure how he maintains that claim without leaning in that direction. Anne-Marie, thank you. Down in Washington, AMH, the latest on UAW, United Auto Workers, making a first move away from this 40% pay demand and dropping it to 36%, the smallest of moves. The Detroit automakers, according to our reporters, Tom, don't think much of the offer at all. That deadline that AMH talked about Thursday night is for nearly 150,000 U.S. hourly workers.
Is this like Disney Charter that before Monday Night Football, are we going to be there Friday, 9 p.m.? Bingo.
What,
deal.
coming in?
Yeah.
You want to do a special?
Yeah, we should do a special. Yeah.
I don't want to come in Thursday night. You can come in
Is it Thursday night or Friday night we come in? Thursday night. Thank you.
Thursday night. We'll deal with this Friday morning. Yeah, that makes more sense. No? Okay. Megan Graper of Barclays is coming up shortly. Your equity market's shaping up as follows. Just pulling back. Session lows here on the S&P 500. We're negative by 0.3%.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly with just a couple people. Our average restaurant now does about over $1 million per restaurant in digital sales.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. JetBlue has traveled a long way from its startup days, but CFO Ursula Hurley says growth won't change the airline's quirky attitude.
At the end of the day, we view ourselves as a disruptor and a maverick in the aviation industry, and I'm really excited to play a meaningful role in that growth journey.
Watch Chief Future Officer Wednesday on Bloomberg.
Equity market stocks on the S&P just off session lows. We're negative here by 0.25%, pulling back just a touch on the NASDAQ by 1/3 of 1%. Big event for the NASDAQ a little bit later, the launch of the iPhone 15 in Cupertino, California, later on this afternoon. That's the stock market story off the back of a decent day of gains. We look like this in a bond market. Yields going absolutely nowhere. 428.61 on a 10-year, still stubbornly close to 5% on a 2-year. 499.68, the main event for that one a little bit later this week. Tomorrow morning, CPI in the United States of America. Under surveillance this morning, the latest CPI reading from the US due tomorrow, with expectations that month-over-month prices are rising 0.6% on higher gas prices. Core will hold at 0.2%, according to our survey. How we trade these two stories is going to be interesting, particularly if crude and the commodity rally continues. If you want the latest data in the UK, new data in the United Kingdom shows the highest unemployment rate since 2021 of 4.3%. If you look to wages, wage growth is still close to 8%, Tom, excluding bonuses.
In the
Still
United
running
Kingdom,
at close
I
to
did not
8%.
know that. Wow.
Stunning numbers. Will be very interesting to see how these year-end negotiations go for UK-based companies.
Well, it folds into the UAW story here. My basic perception is Europe and the United Kingdom are radically different than here, and they really have a matter. I defer to the governor of the Bank of England, or I believe Catherine Mann is with Bloomberg today, but the answer is it's different over there. It really matters.
Big time. I'm not sure what Governor Bailey does with that. I want to get you the latest on the IPOs as well. I'm expecting to close its IPO order book early. The public offering is oversubscribed by 10 times, Lisa, according to our reporting. Shares expected to be priced on Wednesday. May come in above the initial range of $47 to $51 per share. Trading, Lisa, set to start on Thursday.
It shows how different it is when you have a business model that makes sense versus a business model that's more speculative. ARM is a solid contender. People want to buy profits going forward, especially in the tech space. Instacart, not so much, right? You're getting a different kind of interest. So the difference between these two point to the discerning features of investors right now.
I take your point that they're radically different, but to me, the whole thing is contrived. They're not selling anything near a majority interest of ARM. It is a contrived marketing scheme to bring money in by selling a little teensy bit of ARM. Thus, you get a 10 times oversubscription? Your 8,000 shares put it over the top. But the answer is, to me, and I'd love to hear from people, email in, tweet in, whatever. To me, the whole modern IPO process is just a joke compared to what it used to be.
There are two things here. There's one about the actual IPO process. There's another about SoftBank wanting to cash out of a small slice, but not too much to solidify some of the losses, because it still is substantially less valued than it was not so long ago.
Are they doing a service to the shareholders by doing this transaction with a 10 times oversubscription?
It makes a headline, doesn't it? You get the momentum, then you get the pop. You know how this works, Tom.
Exactly.
That's
but
the
it's on
ideal
steroids in the modern IPO game.
I understand.
Are they a SPAC?
Not quite. Stunning pictures out of Hawaii. Kilauea volcano erupting for the 3rd time this year. The eruption started on Sunday after a 2-month pause. The lava, here's the good news, a safe distance from people and structures, according to the Hawaiian Volcano Observatory. But Tom, these pictures, the imagery this morning, stunning, absolutely stunning.
I've had the immense privilege of being very close to this by the ocean edge, and it is jaw-dropping. I've never seen that much lava flow. It looks like the season ending of, I think, X-Files.
It looks like a different
Senior
planet.
5. It looks like a different planet. But the answer to me is, how is this like Mount St. Helens, which shattered our modern perceptions? And the pros here have a volcanic explosivity index, and Kilauea is not like Mount St. Helens, say the pros.
Yeah, this isn't going to necessarily be spewing. It hasn't been built up. Have you ever looked at the physics of underwater volcanoes and how they're so much more dangerous than actually above water volcanoes? I was actually looking at this yesterday, that it sucks in all the water and then it throws it out, and it's tidal waves and all sorts of things. It's just fascinating. I love this.
That's how you spend your afternoons. It's good to know.
Well, it was really interesting. It was a cool article.
Sure. This message just came in from a Bloomberg subscriber. This just for you, Tom. I'm feeling kind. Tom, spot on. Small float, sticky anchor holders. Okay.
Thank you.
On the latest IPOs.
Contrived is the only word I've got. It's so far from the spirit of what IPOs are going to be. They should raise the amount, bring in more money responsibly, and find where that proper subscription is. Besides your foolishness. That was a hell of a rubber chicken lunch. 10 times oversubscribed. Lots of good merch there from ARM.
ARM is its own beast. We've mentioned this a million times over the last few weeks. Anyway, let's move on.
12 months out. Right now, we're going to move on to, I'm thrilled with the research note. Megan Graver joins us right now. Excuse me, I'm gasping. I'm so anxious to get to this global co-head of debt capital markets at Barclays. Megan, thank you for featuring supply in your research note. Somebody said to me, rates are going to go up, they're not going to provide supply. I said, baloney. What are CFOs and CEOs doing right now? Everybody's issuing, aren't they?
They are. I mean, I talk about tidal waves. I think it's fair to say that our summer is officially in the rear view mirror, and investment grade markets in particular. We've seen just shy of 70 billion of supply in a matter of 4 days, which to put that into context is more than we saw in the entirety of the month of August. And a lot of that is really driven by treasurers, CFOs trying to front run what continues to be a data dependent market and trying to get ahead of the central bank meeting on the 20th.
Within your pros sitting on the desk, what is the maturity tip point of that supply debate? Is it the belly of the curve? Is it farther out? Is it in wicked close? Where's that maturity point you study closest?
Yeah, so I mean, it's a tale of two cities in terms of where the bid is gravitating, which is definitively searching for duration in the long end of the curve. I think from a borrower vantage point, those that are electing to move forward, the supply is arguably going to be heavily concentrated in short data maturities as issuers look to avoid locking in higher rates with the hiking cycle likely nearing the end here. So it's proven to be true out of the gates. I think we saw only about 13% of last week's record volumes, 15 years and longer. I think that's a thematic that's going to hold true through the entirety of the month.
The narrative last week was that issuance was going gangbusters and was going at the fastest pace. Some people were tracking since 2010. You put a different tilt on it, saying that, yeah, it might have been front-loaded. There were a couple of strong days, and after that, there's not going to be anything. And you're seeing a really slow September relative to history. Can you put into perspective the nature of the issuers coming to market, why they're coming to market now at a time of higher rates?
Mm-hmm. Yeah, I mean, as you say, it's been a misleading start to the month. And I do think we're likely to disappoint historic September averages. I mean, September tends to be the largest month of the year. I think 2023 is going to prove to be the exception to that, with the street by and large calling for the second lightest September going back all the way to 2015. Because I think there are borrowers who are all in yield focused here, or taking a view that the scales are really tipped to waiting. The reasons for that are somewhat multifaceted. Some of this is this notable front loading that we saw in the first quarter of the year. There's also very limited event-related financings that are fueling sort of forced issuance into this fall window. So that would be typical of most Septembers. We have an anemic amount of M&A volumes that are likely to look in this side of the fourth quarter. And there's just overarching patience in the face of recent rate moves. Issuers have manageable redemptions. They've got diversified funding avenues. So if you think about the functionality of primary markets across currencies, the euro market is open, the yen market is open, the sterling market is open. So issuers are not beholden to a singular market or to a singular currency to manage their financing needs. So it's containing the size that we're seeing. somebody like a Nestle is a good example of that. High quality borrower, well loved by the market, did $1.5 billion deal in dollars last week, and they followed suit this week with a deal in sterling. So there's an ability, I think, to appeal to multiple funding avenues to solve for size, and that's keeping volumes at bay.
We're talking about top-rated companies. We're not talking about lower-rated, higher debt level types of companies that have less reliable types of cash flow. From your vantage point, what is the sweat factor in CFOs' offices for some of these more speculative companies that aren't as profitable, that aren't maybe getting the same kind of access to markets?
Yeah, I mean, balance sheets are still in a very good spot. So, in fact, the fallen angel volumes that we've seen this year have been a fraction of expectations. So, even as we look to the high triple Bs that have emerged this week, it's requiring some incremental marketing. So, the majority of deals that moved yesterday that had less frequent issuance into the dollar market and/or were cuspier triple Bs did marketing to get investors up to speed prior to coming to market. But I think there's a comfortability with the fact that rising star volumes have been fivefold what we've seen in terms of fallen angels. So there's an underpinning from a just fundamental balance sheet perspective that's insulating investment grade.
Megan, after the Apple Roadshow today, after they announce earnings, whatever it is, the end of October, I mean, Tim Cook picks up the phone and dials 1-800-MEGAN. Are we going to see another Apple mega deal? I mean, aren't they just addicted to the issuance of bonds to buy back shares?
I'm sure investors would love that. I don't think I can speak to specific issuance. I think the key question we keep fielding is whether or not we're going to see any major reversals in terms of investment themes for names like an Apple or high quality tech companies that have dominated 2023. I think the short answer is not in the foreseeable future. And in large part, that's because the yield story is dominating everything. And the marginal buyer of investment grade credit, irrespective of where they sit on the globe, are compelled by those underlying yields.
Very quickly here, do you see spreads breaking? I mean, the huge surprise here for Bramo has been the idea that spreads have stayed in tight. Do you see any giveaway there?
You know, credit spread volatility is at close to a 2-year low. I think the IG corporate index at 119, it's still within spitting distance of year-to-date tights, but the consensus view is that risk assets are very fully valued here, and frankly, just not sufficiently wide enough as we approach the end of the cycle. But it's hard to be overly bearish over the near term, given the amount of cash that continues to be compelled by the carry opportunities afforded by credit.
Megan, thank you for the update. Megan Graper there of Barclays. Luca Maestri is the guy over at Apple. Just the CFO is just unbelievable when it comes to supply and issuance and timing.
Why wouldn't they? They do another cajillion, 8 tranches. One is a 50-year tranche. They don't go Austria.
Not quite.
You know, they could.
Hey, the chart of high yield spreads, Tom, is just hilarious. 370 now, near the tights of the year.
I mean, Bramo, this is the oddest market, and that was great. That was a window for equity people. That was a real window into bond chat, wasn't it? Major bond chat with Megan.
You know, people look at this and they say, how can I get scared about stocks if bonds are showing no fear also? And you look at the fundamentals.
If we've got the time here, I'm still going to say one of the essays of the last 12 months is Lawrence McDonald. I believe I saw it in Zero Hedge, but off his website as
Larry's
well.
Great.
Just the wall of money that's out there.
From Bear Traps.
Is incalculable.
We'll get Larry back on soon. He's great. If you're just tuning in, welcome to the program. The S&P 500 negative here by 0.25%. In the next hour, about 50 minutes from now, we'll catch up with Kathy Bosjancic of Nationwide, and then we'll be catching up with Bill Dudley, the former New York Fed president and Bloomberg opinion columnist. Tom, we'll be doing that shortly. That's one to watch.
James Dimon channeling Dr. Dudley here on Capital.
What did James have to say?
Today. James got upset at the Barclays Summit. He listened to Megan's bond chat, and then Jamie, started in on humility is in order, that government officials are getting a little boisterous in how they're treating said banks.
Did we learn the right lessons from some of the banking failures earlier this spring?
Yeah, he went right to it.
That's
and I think that's where Dudley is as well. It's so easy to go after people building mega skyscrapers on Park Avenue. I mean, there's no downside.
Have you seen the traffic on Park Avenue because of that mega skyscraper?
Yeah, it's great. Like every
Mr. James
boxed around it, everything's down to half a lane.
Being restricted to, maybe a quarter of a lane.
Yeah, a quarter
at times. Okay, we'll have that conversation. This one too. Can we talk about lags, long and variable? Jay Pulosky of TPW yesterday called it the lag reaper. The lagged reaper's not coming. He said, Bill Dudley wrote in the last couple of months that maybe we've seen the impact of 5.5% interest rates. We've seen the bulk of the tightening, Tom, and that's already come through the economy, come through markets.
I go to Dominic Constant, 8 months ago, 9 months ago, we're super restrictive with all these other global events impinging on what Jay Powell can do.
New York Fed President, the former New York Fed President, Bill Dudley, is coming up next.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
The names that move markets are on Bloomberg.
There's a complete change in the labor market. There's a complete change in the energy future that we are facing.
Under tightening would be a worse mistake than over tightening because we can course correct that.
The question is whether we need to increase the pressure or just keep pushing.
We've been getting good news. We just have to keep getting good news.
Nobody covers business like Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
I would love to know what they really want to accomplish. Did they actually learn the right lessons from Silicon Valley Bank and First Republic? I think they have enough authority to tell banks you could take this much interest rate exposure and not that. And that would have solved some of these problems right there. So it was never a capital problem. And so I'm like, what does they want?
The voice of Jamie Dimon, the JP Morgan CEO, speaking at a Barclays conference in New York, slamming a U.S. proposal from regulators that would require big banks to increase capital levels. Bill Dudley, the former New York Fed president and Bloomberg opinion columnist, agreeing with Jamie Dimon. I'm no apologist for big banks. Regulators were right to impose much higher capital requirements after 2008. Yet, there's a point of diminishing returns. Tom, capital is crucial, but more capital isn't the right solution for every problem. The words there of Bill Dudley.
Here's a lesson. Jean-Charles Rocher of Toulouse is the expert on this worldwide, and a major shout out to the Nobel laureate Michael Spence, who was definitive on this, tilting towards what you read there of Bill Dudley in about 2010. Swiss Bank Corp was taken out by an upstart Credit Suisse. They're both gone from Fortress Switzerland, which always had high capital requirements. I'm going to opine. Dimon's correct. Enough is enough. Joining us now, Dr. Dudley. He writes for Bloomberg Opinion. Of course, all of his work at the New York Fed in definitive market economics with Ed McKelvey years ago at Goldman Sachs. Bill Dudley, thank you for this important essay. On the calculus of diminishing returns, how efficacious is a lift in capital requirements of our big fancy banks?
I think the question is, what problem are you trying to solve? Is the problem that we saw in the spring, lack of capital among the big money center banks, or is it a problem with supervision, problem with bad accounting, problem with bank management? I think the problem is not that the big banks didn't have enough capital. If you remember, money was running towards the big banks during the turmoil that we saw in March, not away from the big banks. And none of the big banks got into any great difficulty in the United States. The problem with raising capital requirements over and over again is you're making U.S. banks less competitive, and that's going to push activity out into the unregulated non-banking sector. The question that creates is, are you actually making the financial system safer, or are you actually making it more unstable?
Should we raise the capital requirements of entrepreneurial upstart banks with a strategic gimmick to build growth?
Well, I think we certainly want to be very close, pay close attention to those banks that are using novel business models. And I think as the Fed itself admitted that we need better supervision, the problems of Silicon Valley Bank were identified in a relatively timely way, but then the supervisors didn't force the banks to make the changes necessary to prevent its demise. So I think that better supervision, more diverse stress testing, better rules on interest rate risk taking could go a long way to avoid these kind of problems. I'm not sure raising the capital requirements of the biggest money center banks by 15 to 20% is the answer here.
Bill, you talk about in your column the importance to recognize non-banking institutions as competitors, and that you really just increase their share by restricting the lending capacity of big banks. Should regulators be basically going down to the lowest common denominator of less regulated non-banks, or should they put more of an eye toward non-banks and regulate more closely some of those activities?
I think they should be focusing on what's the best solution for the resiliency of the overall financial system, banks and non-banks. Obviously, if you increase requirements a lot on banks, you're just going to have a bigger non-bank regime. And the question is, does that make you safer, or does that make you more vulnerable? So I think there needs to be balance here. Also, I think that the real question here is what was the problem and what's the right solution to solve the problem? It's not clear that raising capital requirements on large money center banks solves the problems that we saw in March of this year.
Can we say that the banking crisis is over to the extent that it ever happened, and that going forward this is not going to be some sort of bigger financial risk that could torpedo the Goldilocks scenario, at least for the moment?
You never know, but I think that so far the knock-on effects of what happened in March are pretty modest. I think that's because it really was concentrated in a few banks, and it was all happening in plain sight. People knew exactly why these banks were getting into difficulty. They could see their interest rate risk exposure. They could see what's happening to their capital on a mark-to-market basis. So this is not like the great financial crisis where everything was happening in the shadows. People lost confidence in their counterparties. So I think so far, at least, it looks like this is a pretty modest knock-on effect to the real economy.
So if that's the case, and that isn't necessarily a headwind going forward, do you lean into this idea that maybe the Fed should be done, and that we are looking at a scenario where they have the opportunity to just wait and take a look at the data on a longer and longer term basis to make any decisions?
I have no quarrel with the Fed waiting to get more information. I mean, they're pretty confident that monetary policy is at a restrictive level. If that's the case, it should slow the economy down. As the economy slows, we should have more slack in the labor market, and that should take away some of the upward pressure on wages and bring inflation down. I think the key question is, how restrictive is monetary policy today? It's possible that monetary policy is not quite as restrictive as the Fed thinks. And if they find that out over time, then they can obviously do more or keep rates higher for longer.
Bill, I want to finish there. You wrote about this earlier in the summer. I don't think it was picked up on nearly enough. I've been talking about it as much as I can. This quote from your column that read as follows, and I had the quote ready for you, Bill. There's considerable evidence that lags have shortened, meaning the economy has already felt nearly all of the impact of the Fed's actions. Bill, talk to me about that evidence. Where do you see that evidence currently?
I think the most obvious piece of evidence is what's happening in the housing sector. The housing sector, obviously was hurt a lot by the backup in mortgage rates from 3% to 7%. But recently, the housing market looks like it's bombed out and isn't having any further weakness because of the rise in rates. The other thing that's important to note here is monetary policy works faster than it used to because the Fed uses forward guidance to guide the market, not where it is today, but where it's headed. So financial conditions, most of the tightening in financial conditions that we've seen over the last couple of years happened last year, not this year.
I remember, Bill, a conference that you and I did together with Mohammed Al-Arian in the summer of 2021. I think it was early summer, around June time. And you were both talking about how inflation may well be stickier than people think. And I remember you, Bill, threw out the number that maybe rates have to go to 5%. 5% back then sounded absurd. We're through 5. We're through 5. And we've gone right the way through 5. Bill, what are you thinking about now? Best case on where you think sufficiently restrictive might be?
I think that it's more likely that they hold rates here or maybe one more rate hike as opposed to go ever higher. I think where the market may be a little bit off base is to think that the Fed's going to ease a lot in 2024. I think the last mile in terms of getting inflation down, I think is going to turn out to be pretty difficult. And so I think that means that the Fed's going to keep rates higher for longer than people think. And I think that's one of the things that is feeding into the bond market and why bond yields have moved higher.
Bill Dudley, thank you, sir. Former New York Fed president and Bloomberg opinion columnist. Some fascinating insight there, Tom, on the regulatory backdrop around the banking story, but also on how far this Fed might have to go, and how high they might have to stay at these levels, how long they might have to stay there through next year.
Well, that's a monetary ballet, which gets, 98.285% of the discussion here as well. And you see it, with Lisa's wonderful patience in this Fed speaker and that Fed speaker and all that. There's a whole other part of the Fed. And what Diamond's screaming about, and he's got a lot of company on this, is this conflation in people's mind of regulation, like what are you going to do with the big banks, versus supervision, which is go out there and look at what they're doing. And this conflating of regulation and supervision is the heart of the matter. Again, Roche at Toulouse owns the high ground on this, and we failed. And Diamond's 100% correct.
Just to put a bow on that, a supervisory failure, not a regulatory failure.
Yes, thank you. Excuse me.
No, you took us there. I just wanted to get to the headline. Tom, great guest for you to speak to all of this about Bob Michael at JP Morgan. You can ask him everything about Jamie's thoughts in the last 24 hours.
He wrote the script for Diamond. We know that. But, Bob's not going to talk about that. Is Salah still at Liverpool?
He is, yeah. He wasn't
at
sold.
least this week.
Yeah. The transfer
Maybe
window
Bob will talk about that.
Closed in Saudi. So Liverpool keep their man. That's the good news I get. He might have something to say on Everton.
Is the Merseyside derby, is that Everton and Liverpool?
It is, yeah.
Oh, okay.
The blue and red sides.
How many miles apart are they roughly?
Pretty close, same city.
Okay. I'm learning.
You are. Every day. Every day. Bob Michael, JP Morgan.
I got my Everton bow tie on.
Joins us up next. Bullish bonds. Is that what that was for?
Yeah, that's what it's for. We got a chairman of the board is all Everton, so I'm all Everton.
You keep referring to this. Is Mark Carney an Everton fan? I didn't know this.
Yeah, he called me up the other day.
Since when?
He's like, huge. I don't know. He's been an Everton fan since whenever.
Where does that come from?
I don't know. I said, can't you go with the Tots? And he said, hell no.
Everton. Oh, I didn't know that.
Yeah.
King was Aston
Know
Villa.
your chairman. Rule 1.
Yeah, that's some good advice, TK. Some good career advice.
How about that UNC football season? It's just great.
I'll get in touch. I'll try and work that out. From New York City this morning, good morning to you all. Equities on the S&P lower here by 1/3 of 1%. This is Bloomberg.
You have big plans to expand Visa's business in Africa. Tell me about them.
Well, this is one of the most exciting places in the world, and we believe that it has only really begun. There's been so much progress in the last couple of years, the last 5 years, but the progress that I see and the possibilities that I see for the next decade are incredible.
Why Africa now?
There's lots and lots of opportunity here. So this is a time and place where I think the infrastructure has advanced, still has ways to go, but it has advanced that it creates a good on-ramp for us. And we heard yesterday from the Secretary General of AFCFTA. I think that is a critically important platform. This idea of taking a pan-African approach is critical for companies like ours to invest, because we can count, what we're trying to count on is having a level of standardization and interoperability across the continent that makes it easier for us to invest in a broad-based way, as opposed to having to create bespoke solutions in 54 different countries.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. You are your global business authority.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
I do think that the recession risks remain out there.
There does seem to be a lack of upside catalyst.
We've got a long way to go before we can sound the all clear on inflation fight.
We need to be very careful about reading too much into a single data point.
I think for the most part, it's going to be wait and see, at least for this week, ahead of FOMC next week.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene on radio, on television. We begin the week with Apple. In this hour, complete curbside coverage, Bloomberg Technology in Cooper. Ed Ludlow will be there, I believe.
This promo's going well. Keep going.
You know, it's great. I mean, Ed Ludlow's going to join us in this hour about Apple foolishness. Let's clear that out of the way before we move to serious stuff. It's a product launch.
It is. The
That's
iPhone
all it
15.
is.
Apple captures just about every big story out there right now. I think from my perspective, the tension between the US and China, the competition you're getting from foreign brands, Huawei, and cost pressure here domestically in the United States. If the consumer is weaker, can it cough up higher average selling prices over at Apple? TK, that's going to be the test for the consumer later on this quarter.
Are we going to learn about those distractions today? I don't think so. They're going to stay on script.
No, this is
smiley,
the marketing, the happy stuff, smiles, and all of that good stuff. But what we want to know is, are you moving more to India? Are you moving away from China? Are you in China for China? And how much can you sell to that country? And is that Huawei, what was it, Mate 60 Pro Plus and all of that good stuff? Does it have the capacity to compete with you at scale in the world's second largest economy?
The Bramo fam is all Huawei. They're looking at it carefully. I mean, Lisa, the foolishness of this, the reality is it involves gajillions of dollars. It was a $3 trillion company.
Well, also, isn't the whole story of this year in the stock market kind of a big product launch with ChatGPT and artificial intelligence?
Yeah,
I mean, if we're looking at this idea of what's been driving the momentum in U.S. equities, it has been on the heels of products in the tech world. So that's why this is actually more important potentially in signaling not only, you know, the bottom line for Apple, but going forward, artificial intelligence, what's the future of computers? Are we all just going to be wearing goggles and sort of dancing around?
I mean, what we do is we have the different conversations here on Bloomberg Surveillance. We're going to do bonds in this half hour. If you're part of Global Wall Street, Bob Michael will join us here in a moment. But John, I got to go to the tag team equity moment we had this morning. Greg Bowdle, Bear, lifting, and Stuart Kaiser enthusiastic, reaffirming enthusiasm out into 2024.
So let's talk about the bear. Goes from 3,400 to 4,150 on the S&P. Was the biggest bear on Wall Street. Now just slightly bearish on the S&P. Well, Stuart Kaiser of Citi had to say, good news is good news.
Thank you.
He's very, very clear about that this rally has been built on good news, better news in America. And if things start to sour, then his view on the equity market will start to sour as well.
I think our conversations are so important. Let's do a speed data check. John, the real yield, 1.94%.
Bonds look like this, Tom. 10-year, 428.21. Yields just about unchanged. We've got a bond market bull around the table with us, so we'll get to him in just a moment. In the equity market, equity futures TK just a little bit lower, negative here by 0.3%.
Bob Michael joins us right now. He is with JP Morgan Asset Management, global head of, well, equities, bonds, currencies, commodities. I don't know, everything else.
Let's stick with bonds for now.
Let's stick with bonds for right now. Do you buy across the curve right now? Because simplistically, it is going to be price up, yield down.
So the product launch of the year isn't Chat GPT, it's the bond market. It's the repricing of bonds just across the system. And we are seeing money come in. And even though there's a soft landing cap, there's concerns about inflation, there's concerns that the Fed could keep rising rates indefinitely, actually, the highs from October, almost a year ago, have held pretty well in the long end of the curve, 5, 10s, and 30s. So it's not just me saying take advantage of the repricing of the bond market. We have clients left, right, and center, domestically, foreign countries, retail platforms, institutional platforms, looking at where to get into this bond market, and they are putting money to work.
Are they chasing income? Are they chasing total return? Worried about a slowdown, taking on duration? How has the nature of that money shifted in the last few months?
Yes, exactly.
All of the above.
They're doing all of those things, and it depends where they're coming from. Wealth management platforms are looking at municipal bonds, they're looking at corporate debt, they're looking at Treasury debt, and they're putting ladders of maturities in place. So they're buying bonds out to 10 years with maturities every 6 to 9 months, something like that. So they just want to get into the bond market before these yields disappear. Institutions, whether they're insurance companies or their pension funds, they're looking at their liabilities having deflated, and they're looking to put money into the long end of the market, and you have a whole host of others that are looking for total return. So you can do pretty much everything in the bond market. We haven't seen this since 2006, 2007.
There's only one sentence I heard in all of that: before these yields disappear. These yields aren't disappearing. They've been quite stubbornly high through summer. That's been unexpected for you, I know, Bob, relative to your call. What do you think's behind that?
Well, I think there are a couple of things. This reminds me a lot of the second half of 2021 when yields were ridiculously low. The Fed was talking about transitory. The market bought it. We were looking at inflation going up and saying, if they leave rates where they are, inflation's going to continue to accelerate. Now we're looking at rates very high. We're looking at very high real yields. We're looking at inflation coming down a lot, and the Fed is talking about leaving rates where they are indefinitely, higher for longer. I want to see the summary of economic projections. Is it tomorrow?
Next Wednesday.
Next Wednesday.
Yeah.
And the infamous dot plot. They've got 100 basis points of rate cuts priced in for next year from the last dot plot. And they've also got inflation coming down. So they're acknowledging that if they keep rates where they are and inflation comes down, then policy rates become progressively tighter and the economy may not be able to withstand that. I think what's keeping rates where they are is the market is believing the Fed rhetoric and not believing that they may have to cut rates.
Your previous call at the start of summer was cuts by September. Clearly they won't be cutting a week tomorrow. I want to understand from your perspective what's going to deliver those cuts. And when you're thinking about yields we haven't seen since 06, 07, some people might be listening this morning thinking, well, bad things happened after that. Do bad things happen now? And of course, I'm not saying on the same scale to the same magnitude of what we saw in 08, but are you anticipating bad things?
So at the start of this year, we thought something like recession by the end of the year. Then we had the regional banking crisis. And we thought, well, that's going to bring recession forward a few months, so they should be cutting by September. And I think what we looked at and probably got wrong was the backstop that the central banks, the Fed, put in place, the Bank Term Funding Program. And we likened it more to Bear Stearns bailout. It probably was more like TARP. It just created more liquidity. backstop the entire banking system. These things are still hiding in plain sight. The regional banking crisis hasn't gone away. I wish you had asked Bill Dudley when he was patting himself on the back in the Fed about, no, this is all in the rearview mirror. Really? Look at the Bank Term Funding Program. It's quietly increased in size the last 9 consecutive weeks. It's at $108 billion. So the regional banks are not working down their borrowing, and that's coming in at 5.5%. That's telling us that they still need cash available to meet depositor outflows. So I think there are plenty of things out there that are slowing down. Growth and inflationary pressures are coming down. For the Fed to pause, we've said for a long time, you need disinflation and inflation to come down to levels they're comfortable with. I think tomorrow we're going to get the third consecutive core CPI print at 0.2. That's enough for them to pause with a lot of the other disinflation that we're seeing. I think this time for them to cut rates, they're going to have to see unemployment go up. So it's possible that they may actually tip the economy into recession first before they start cutting rates, which would be something new for them. It would be positively ECB-like.
Well, okay, but going forward then, how does this cohere with a 3% yield curve across the board, a flat yield curve in the near future, by the end of this year, or even by mid-year next year? If you have a Fed that's being patient, not willing to cut, and you have economic data that's coming in hotter than expected.
Well, this is the Fed that promised us transitory and then within a couple months changed their mind and started hiking rates. We think we're going to see the same thing this time. They're going to tell us that they're going to keep rates higher for longer until inflation is at their target. But the magnitude of the slowdown we're seeing across the board tells us that we'll probably still be hitting recession around year end, so they'll be cutting rates by then. So I'm still incredibly comfortable that we'll see 3% across the curve.
Do you think high for longer is just a bad call, or do you think they're just misleading us that that's what they want to signal currently?
I think it's what they have to signal, because they were already wrong once on inflation with the promise of transitory. They can't be wrong again. They're telling us that they're prioritizing inflation over growth. And that means, like the ECB, you're willing to make the economy a casualty.
I guess what I'm getting at is, do you believe them?
Do
you believe they're prioritizing inflation over growth? Or at the first sign of weakness, do you think they back away?
Well, I think the consumer is incredibly stretched right now. When you look at the Beige Book, you're seeing signs of that all over the place. They're talking about the last bit of pent-up spending on leisure travel. They're talking about consumers that are trying to maintain their level of spending since their excess savings have run out by putting stuff on borrowing, which is a very high way to finance yourself. So things are going to slow down pretty quickly. We look at news coming out of Truist where they're starting to address cost pressures by laying people off. So the labor market doesn't look as robust as that mid-threes unemployment rate. We think that starts to go up, and it will force the Fed's hand.
Let's dig into that in about 5 minutes' time. Bob Michael of JP Morgan Asset Management is going to be sticking with us, TK, for a second segment to get into the latest data in America, into CPI tomorrow morning.
Well, it's the data flow that we're seeing, the data dependency that we're seeing. I got like 8 questions for Bob Michael. It's good that he's going to stay around for the half hour, but to me, it's just simple. We're completely data dependent starting tomorrow.
If you're just tuning in, welcome to the program. Equity futures on the S&P negative here by 0.3%. Coming up shortly, a second round with Bob Michael of JP Morgan Asset Management. Tom's going to deploy at least 4 of those 8 questions, Tom.
Yeah, Jamie Dimon gave them to me. He's so fired up. He said, ask Bob this.
Bob's got time at a commercial break to run now. You're going to squeeze a Liverpool one in there as well?
We got to. I mean, I'm fascinated. Bring me up to date. I adore Salah. He goes mental. He goes right for the net. It's just a joy to watch him play. He's with Liverpool, but there's still this option he could go to Saudi Arabia.
Well, that transfer window is closed now, Bob. So
but
that
they'll
threat
reopen it for a gajillion dollars.
For now, do you think that threat comes back a little bit later this year, next year?
I think it does. And I think the lure of Saudi could be appealing to him and to Liverpool, but they've got a deep team now. They've got a lot of scorers. They look very lively up front. They're not dependent on one player anymore.
Your opinion on Nunes has changed overnight, seemingly. He's like the man now. You're comfortable with him leading the attack?
They've got more than just him.
Okay. 8:30 Eastern Time, Kathy Bosch-Jancis of Nationwide Mutual Insurance will be joining us. So that conversation is 17 minutes away. We'll have another round of conversation with Bob Michael of JP Morgan Asset Management in about 5 minutes' time. Just to set up your trading day, equity futures here are negative by 0.3% on the S&P 500. Going into that launch of the iPhone 15 a little bit later on this afternoon. Apple in the crosshairs of US-China tension, driving a stock lower last week by about 6%. The weight on Tim Cook's shoulders going into this launch. Trying to sell it at TK for Ed Ludlow and Caroline Hyde. The weight on his shoulders to make this iPhone 15 a success has never been bigger.
Fanboy's with us this hour, right? Fanboy's with us?
Is Ed fanboy?
He's fanboy.
Ed
Wicked
Ludlow's
fanboy.
coming up in about 30 minutes' time from New York. This is Bloomberg.
London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg.
We've always had a recession in 2024. We're moving perhaps away from a recession in the early part to more the mid part of the year. But, you know, if the recession is still very much in the cards, and if that were to play out, I think you should start seeing a moderation in yields, or the sell-off in yields we've seen at the back end.
So Badger Ajapa, the head of US rate strategy at SocGen, with yields near 4.30 on a 10-year, near 5% on a 2-year, and the threat they go higher off the back of this move in the commodity market. Brent crude, new high for the year, $90 and about 60 cents, $91.50 is the new high for the year. Where we are right now is 91.45 and up by 0.9%. This headline right here. Thank you, Grant Smith, over in London, for writing up this story. Global oil markets face a supply shortfall of more than 3 million barrels a day next quarter, potentially the biggest deficit in more than a decade as Saudi Arabia extends production cuts. Just a little bit of a push higher off the back of that headline, Tom, moments ago.
Francisco Blanche giving us the microeconomic foundations of oil. And he said, we're here, we're where I want to be. And he set out the microeconomic case, supply and demand, to get to 100.
Headline inflation tomorrow will speak to this story. High gas prices. Core won't. The issue that I think we've all got, the question we're asking, Tom, is how much attention the Fed pays to this a week tomorrow.
I think they're going to look at the aggregate data. David Rosenberg's been a great student of this, and that there's this. But, Lisa, I think, has been on this. The answer is oil, and a gallon of gas is a political instrument in America.
And at a certain point, as oil prices go higher, it influences prices in other areas. And that's sort of the issue. And it really gives people the appearance of inflation. So it raises this question going forward. Does the Fed use that more than they think?
To me, it's behavior. I mean, if I'm where I'm living and I never go below 59th Street, I mean, that's an example.
Except every day when you come to work. But yeah, sure.
Okay, half a block. But I've been down to Soho in 14 years. But the bottom line is, the bottom line is, if I'm at the Jackson Hole Economic Conference, it's nothing to get in a Suburban and drive to the $1 Million Cowboy Bar, which is like a gazillion miles away.
Speaking about your own life.
And that's the way the rest of America is.
I hear you. They drive a lot.
They travel a lot. That's all there is to it.
The gas price means a great deal. It shapes their views on where inflation is and where it will be as well. That's the difference, Tom. It shapes expectations too. You see that in you, Mitch, quite a lot.
Yeah.
The correlation between expectations and where gas is right now.
Out to a new high on Brent, 91.50 printed moments ago. We continue with Bob Michael of JP Morgan Asset Management. What I was thinking about, Bob, and this goes back to the acclaimed toughest resume, toughest admit in banking, the analyst program of JP Morgan, is the real yield we're at right now began within the data that we have in the modern age in 2003. And that a huge body of our audience has never lived this rate structure and all of the follow-on to it. What's your counsel to someone, say, under 37, 36, 38 years old of how to address a whole new world after all?
Well, I think you have to understand that markets go through cycles. The cycles can be very long. Probably the last 15, 20 years weren't normal. They were the distorted years. They were the years that the baby boomers wrecked by over-leveraging the property market, crashing it, and then taking a decade to repair. We think we're going back to an environment that is more normal, where there is a demand for capital, there's a use for capital, it's productive, and there will be a cost for capital again. But you don't get there all at once. I think a 525 basis point rate hike is a shock to the system. It will slow things down. We think the next move coming out of the Fed will be to cut rates. We think you go back to 2.5% to 3%. Yeah, the next tightening cycle, maybe they have to go to 6%. And you start putting in place the mirror image of what we saw in the late 80s and the 90s with falling rates. You may now see rising rates. So we have to get them used to inflation can be real, and markets have to price that in. And central banks don't always bail you out.
There's a lack of clarity in terms of how central banks really understand inflation. They say they look at core, and then headline starts to move sentiment, and then they start going after that. How much do higher oil prices, materially higher oil prices, play into the risk that the Fed remains higher for longer?
There used to be a wonderful chart everyone would dust off every time oil prices went up, that oil shocks create recessions. And it was another one of these 100% perfect predictors. And we're getting another oil shock at exactly the wrong time. After credit conditions have tightened dramatically, after the cost of funding businesses and households has gone up a multiple, we're talking about business and households having to spend on energy at a time when their real incomes are much lower. So they're going to have to cut back somewhere else. I think it actually is another one of these things that's a warning that recession may be more present than the market thinks.
When does it count as an oil shock? Because we are seeing prices normalize. They're not necessarily going to the highest that we've seen of this particular cycle, but they are the highest going back to last year. What's your tipping point for when it is prohibitive of growth?
Well, you have to look at the cost of production and the cost of getting a barrel out of the ground and where we are now. And what we're seeing is that OPEC is telling us maybe demand isn't quite there, but they're not willing to live with much lower oil prices. They want the volume to replace the demand. It's not there, so they're going to make it back with pricing, and they're going to push prices up. We'll see how high it goes. But for me, it's another sort of yellow warning flag out there. I don't think it helps the economy at all. I think it's another thing that squeezes an already stretched consumer.
Bracket the inflation-adjusted yield right now. At what level up above 2% does it really begin to impinge on the system?
I think coming off of several years of infinite free money, we're seeing it bite right now. We're seeing it in the housing market. We're seeing it in the cost of funding credit card purchases. You look at businesses, they front-end loaded a lot of their borrowing, but now they're going back and they're addressing other cost pressures. And they're not doing it by just borrowing more and absorbing the cost pressures. They're actually starting to cut costs. So I think it is now starting to bite. I don't think long and variable lags to monetary policy, that law has been repealed. I think it still takes time, and we're still in the early stages of it. I think the next 12 months are going to be pretty painful.
What would you have to see to make you change your view?
I'd have to see a legitimate reacceleration of core inflation. And that would tell me that we're in a different regime. Maybe the XYZ generation is large enough, they're earning enough, they're spending enough, that it is driving an economy that is going to a new high, and central banks do have to come in and really dial down the desire of the consumer to spend. But right now, we're not seeing that.
Are you Googling the XYZ generation? Is that what you just did?
Yeah.
What are you up to?
What is the XYZ generation? I've never heard of it.
XYZ?
It's the X, the Y one, and the Z one.
Yeah,
it's
no?
Gen X,
okay.
Gen Y.
Like combined together.
Gen Z.
So think the 91 births. The 91 births are now the largest population cohort, and they're 32 years old. So that's the one. And if we go back to the financial crisis, they were 17 years old, and we wondered, how will we get through this before they replace the baby boomer as the dominant consumer? Now we're there. That's where we could be wrong. I don't think so.
They're the crew that, after the second REM album, they were never the same.
Thanks, Tom.
Yeah.
Bob, thank you. Bob Michael,
pleasure.
JP Morgan. I've got the official statement from Valerian on the Jets if you want it.
Oh, please.
So diplomatic, just writes in. The Jets showed inspiring spirit and determination, overcoming an early setback that would have derailed most other teams. We will remember this incredible win for a long time.
Oh, my God.
That's so official, isn't it? From Mohammed. Is that him
he's
auditioning
he's at the 50-yard line.
Does that sound like a man who owns the club? That sounds like a man who owns the club, doesn't it?
Yeah,
Might be the future chairman of the Jets. Is that what's next for Mohammed?
Yeah.
Potentially.
He wouldn't give us tickets, but hey,
That would be nice, though, if he did give us tickets.
His seats are unbelievable. They're like
I've seen
4
them.
rows up,
It's ridiculous.
50-yard line. It's like he's like a rock
hardly
star.
ever there to
You
sit
can see just above
I know.
Aaron Healy on the sidelines.
I know. Bob, thank you. It's good to see you. Coming up on the Open, Chris Harvey, Wells Fargo, Cameron Dawson, New Edge, Vichy Rapporteur of Morgan Stanley, and what we call in Ludlow, Fanboy.
Fanboy
from
Fanboy's
Cupertino,
He's got a black
California.
turtleneck on.
On the iPhone 15 in New York. This is Bloomberg.
always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Bloomberg Surveillance. How do you listen to what we do? We're going to pause here in the modern digital world and say, what do you do after the show? And thank you for watching us on Bloomberg Radio and Bloomberg Television. The first thing you do is read the Bremo letter. It's the Bloomberg Surveillance newsletter. Lisa, tell us about this. The people, Ray YouTube and the others that keep track of this say this newsletter is successful.
Well, it's basically that if you don't catch all the interviews, pulling together snippets. And I will say that people say such fascinating things and it can get lost, but they speak to each other, which is one really cool thing that I enjoy. That people kind of weave together the day's narrative together.
Yeah, Lisa and Ed Duffner got a team of like 7 people, 3 interns putting this tome together. It goes on pages and pages. And of course, on Bloomberg Digital on YouTube, look for our conversations. Stuart Kaiser on the market. Bob Michael, they're just brilliant on how the new bond market is the old bond market. With that in mind, in charge of all of our economic coverage, international economics and policy correspondent Michael McKee joins us. The next 48 hours, CPI is a big deal. I get it, but I got to dovetail it with the day later retail sales. Piece the two together. Inflation report, consumer report.
Well, the consumer report obviously is influenced by the inflation numbers because then
it's nominal.
It's nominal numbers. It's artificially increased. So it's more the trend that people want to see. And when I say people, I'm pretty much talking about the Fed and then anybody on a trading desk who's trading the Fed. And at this point, they're expecting a reasonably good month for the month of August with the retail sales up a little bit, but not going forward. That's the question. What happens as we get into September, October, November? And a certain amount of that will be determined by CPI prices, particularly. You've been talking about it all morning, oil prices, the fact that they're going up and they'll push at some point gasoline prices up significantly. So the interesting thing about that is we can wring our hands all we want, but there's nothing much that anybody can do about it.
Well, but it would be great to get your sense, to build on that, of how the Fed views oil prices, energy prices as an input, given the fact that it is inflationary on a headline figure, but does remove money from the discretionary pot of spending.
They could raise rates all they want. It's not going to change the price of oil. That's the problem for them. So they have to kind of look through it. They tried in the 1970s to be accommodating lower prices, lower interest rates in order to give people more spending power as gasoline prices went up, and we saw how that worked. So they're not going to do that again. I guess part of the question now is going to be when we get to CPI tomorrow, how much does headline matter to people versus core? Because the core is not expected to have gone up any faster, 0.2%, and on a year-over-year basis fall to 4.3%, which would be considered good news. And the Fed's going to be looking more closely at core. But after a while, if energy prices keep going up, it will feed into the core as well.
How many is the new data dependency when it comes to the number of months you have to see before Fed officials start to care?
would hesitate to put a number on it. They use the old pornography Supreme Court defense. They can't describe it, but they know it when they see it. A couple of months is of increases would put more pressure on them to raise rates again. It's going to be very interesting this month to see what the SEP, the Summary of Economic Projections, and the dot plot show. Do they still keep that last rate increase in there to keep the markets from thinking that they are done?
Michael McKee, with an eventful 48 hours coming up. We'll look forward to that. And of course, he'll go beneath the headline data tomorrow at 8:30 on CPI, core, this, uncore, super core, whatever it is. I can't keep track. One who can't keep track is Kathleen Bisjoncic, chief economist at Nationwide Mutual Insurance. Let's begin there, Kathy. Jerome Powell talks about the Dallas Trim Mean. I'm partial to the nationwide Cleveland Inflation Index and the rest of it. Which inflation series do you follow to get a feel for what America is feeling from inflation?
Good morning, Tom. Happy to be with you. Well, I look at all of them, but I think, Mike's comment was quite noteworthy in that the headline, so with oil prices rising again and putting upward pressure on gasoline, the consumer for some period of time may even also look through these higher energy prices and say, okay, this doesn't mean that inflation's picking up overall. But if it continues, that could lead through to inflation expectations. And again, that's still a worry for the Federal Reserve because inflation overall is still high. Less of a worry because we've seen some nice disinflation. And as you mentioned, the super core inflation, which is core services ex rents, that has started to roll over, especially the 3-month annualized. But the core, I mean, if you really want to boil it down simply, it's really the core CPI measures right now that matter the most, assuming we don't see oil go through, $100 per barrel.
It's a dual mandate Fed, and I got 3-month annualized forms of unemployment and jobs coming down nicely. Is the job market broken? Are we finally moving down to new levels of a lower non-farm payroll?
Well, far from broken. It's still a very strong labor market, but it seems to be cooling, and it does seem that the Fed's getting its way here. It's removing some of the demand, some of that froth, and yet not crushing the economy. Time will tell how this plays out, but you even see the wage growth numbers, cooling. So I think the odds for soft landing have gone up. We ourselves are a bit more cautious, but we've trimmed the recession shortfall. We now think it's more of a mild instead of moderate. We have to be, reflective and respect the incoming data that inflation does seem to be moving, downward more quickly than we thought.
We were speaking with Claudia Sahm yesterday, formerly of the Fed and the Sahm rule, and she was talking about how we just don't know yet. We're holding our breaths, trying to understand whether the decline that we've seen in some of the employment momentum is just a softening or whether it's the beginning of something more protracted. How are you viewing this? How are you looking at this to understand which it is?
Well, I agree with Claudia. We definitely, need time. But the recent blip up in the unemployment measure was really because more people came into the labor force. The labor force participation rate, as you know, went up. And particularly when you look at what they define as the prime-aged workers, 25 to 54, we're back over the pre-COVID level. So that's a sign of a very strong labor market. You're pulling people in. The fact that the unemployment rate went up is just because job growth couldn't keep pace with that. It's still not a weak labor market. That said, the fact that the Fed's going to hold rates, we think, steady, and as other guests have talked about, as inflation comes down, the real Fed funds rate goes higher. That's where the restrictiveness comes into play. But I think at the same time, if you do get inflation coming down, it just takes some of the pressure. And in real terms, growth is higher because of that, right?
Kathy, there's also this lack of clarity around whether there's a structural shift in the labor market. We'd been talking about that a number of months ago about how, there just were fewer workers. And so you had to pay up in order to get anybody in the door. How does the UAW potential strike, the negotiations we've seen there, we've just heard from UPS yesterday on Bloomberg Television talking about how the increase in wages and the agreement that they came to is going to impede some of their profitability, but going forward, this is the norm for them. How does that shape your view about what we can expect, the stickiness of wages, regardless of how much the jobs fall, et cetera?
Yeah, and a great point. And it is, that is the risk that we do get that stickiness still in wage growth and inflation, as talked about, maybe going from 9 to 3% on inflation was sort of the easy part because of year over year and energy prices, well, until recently coming down, but getting the core and especially service prices to moderate even further. And wages play a big role of that. So it's something we're watching very closely, and it's definitely it plays into that whole profit margin squeeze. That's why we still have a recession. We do think the profit margins get squeezed, but it's just not going to be quite as large of a shortfall as we thought previously.
You explained beautifully the complexities of our labor picture. Are the dynamics, the plumbing of how we look at the labor economy, is it a similar study to what you would have done 10 years ago or 20 years ago? Or do you have to have a whole new outlook on labor dynamics in America because it's a new America?
Yeah, that is a great question. And yes, you do look at it differently now because the backdrop, we have the demographic change rate in America. We have the aging of our society and the baby boomers continuing to retire. That's playing into this whole labor shortage. Yes, we have a labor shortage because cyclical forces, but also secular. And that is not going to necessarily go away. The question is how that is really handled by corporate America. Can they continue to adjust? And what we don't know, the big question is what happens with AI, right? And AI generative, does that replace some of the shortage of workers? And is it already doing that? So it is a very different dynamic. We never saw job openings relative to, the demand for workers relative to the availability be this strong. So job openings relative to unemployment is still very high. And we've not seen that, historically.
Kathy, are you going to be watching the Apple launch, the event, the marketing event, as Tom says, at 1 p.m.? And basically, are some of these product launches macroeconomic tools to understand the future of just some of those instruments?
Well, I have to say that myself, but particularly my younger son, is really very excited about these new launches. So if we don't catch it live, he shows me how to find it on YouTube. So I'll watch it one way or the other. But it is really exciting. And I think certainly in general, innovation, creativity, these are important. And obviously Apple being one of the big performers up until recently, some of the issues with China. But in general, what we're seeing really like the top 10 stocks in the S&P have generated 80% of the gain of the index. That's pretty concentrated, right? And pretty impressive.
Kathy, thank you so much for the brief on the American economy. Kathleen Bostjancic with Nationwide. Kathy and I go back years, and I love talking to her because of the knowledge and the granularity underneath the headline data that we blather every day.
Well, I also love that her son also makes her watch the Apple launches and really get her excited about the products that she will then be encouraged to buy.
I would take it to the international claim, and this is, of course, the debate here of the new cord that goes into the new iPhone, is we have that effervescence, what Ned Phelps would call dynamism, and they don't, and that makes for the American difference. Interesting market, percent change on the Standard & Poor's 500, a negative 0.2%.
Coming up, we are going to take a look at what to expect from this particular event.
We're actually going to do it.
Well, look, you call him fanboy, which I'm guessing is completely abhorrent to him. But I will say, look, this is a big deal, not for Apple per se, but because it's such a big company in the S&P 500, in the NASDAQ, because it is such a big aspect of the U.S. economy at this point, and because of AI and generative intelligence.
My observation on this, and I've always tried to not be a fanboy, even though there's a zillion Apple things at home, is what's different now, and I didn't expect this, is Apple is cool with the kids. For years, it was Android, only the old farts like you use Apple, and that's changed. And I did not expect that. And, it's not Huawei. Samsung's basic, I saw a chart the other day, it's shocking, the deterioration. But Apple's, because of the ecosystem, is cool.
Yeah.
I did not expect that.
Do you have cord wars at home? Like where people take each other's cords?
No, what we do is Dad buys more cords. So we have so many cords.
This is a real phenomenon.
The dogs chew on the cords and no one cares because there's another 5 cords to replace the one kennel fee.
The way you describe
kennel fee's the worst.
The way you describe your house is sort of 45.
Oh, you have no idea.
Completely mismatched under the couch, and then you've got cords that are chewed up, lying everywhere. People yelling.
Yeah, Kieran from Sydney knows this. We serve martinis at the front door.
I could guess
it's that bad. KB knows that. There's no question about it. Futures -9, Dow futures -24. Coming up, the most anticipated conversation of the day. Fanboy joins us from Cupertino. This is Bloomberg. Stay with us. Must watch, must listen.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1, so it's ready right when you pull up your car.
How do you manage these kind of 2 different staffing needs, right? And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Slice through the noise.
Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
It's hard to get away from tech. There is this structural growth story. So if we're in an economy that is slowing, albeit at a more gradual pace than we anticipated, then the structural growth stories are those that are going to outperform. The issue with tech is how far it's rallied this year. So I think the story going forwards in tech is going to be about being more selective.
Greg Bottle, U.S. Head of Equity and Derivative Strategy at BNP Paribas, earlier today as he talked about why he is abandoning some of his bear call, but also in the dominance of tech ahead of this Apple event, the marketing event. Tom Keene alongside me, John Farrow off at his 9 a.m. property preparing for that. But really right now, before we get to that, I want to just talk about oil, hit it quickly, because we are looking at $91.51 Brent after this announcement by OPEC that there's going to be a 3 million per day barrel per day shortfall in total production on the heels of what we heard from Saudi Arabia.
West Texas Intermediate 88.52. I was just a 90 print on American oil. We're not there yet. Would be really something as well. You got some movers today?
Yeah, I just wanted to take a look at some of the other stocks, and I really wanted to focus on the tech world. Oracle yesterday coming out and reporting earnings that were disappointing, in particular their cloud forecasts for their cloud sales. There had been such high hopes that it really explains why you're having such a significant drop. Almost 10% at this point. It was 10% at one point, which would be, if it holds, the biggest fall since March 2020. Tesla shares off just a touch, but this yesterday after they gained 10% on the heels of a recommendation by Morgan Stanley analysts to buy the stock, that it was undervalued because of some of its newer technology. And then Apple, Tom, ahead of what we're going to hear later today, shares up 0.4%. I think it's important to stress when we're talking about incremental moves in some of these stocks, the market cap of these trillion-dollar behemoths really points to why we care. This is a significant part of the market. It's a significant part of the economic optimism that we've been hearing throughout the year. And it shows how little disappointments or little upside surprises can make massive swings in the share price.
Well, they do there. And again, the growth rate is all, and it's the revenue rate. And we need to make the distinction here before we get to Ed between Microsoft with growing double-digit revenues and Apple's not. I think a lot of people don't understand Apple's not delivering double-digit revenue growth.
It's
That's
not
why
the same, right?
This soiree today is important. Is that it? Are you done with your, fanboy market
keep
movers?
Going, but let's leave it there.
We'll leave it right there. Joining us on this is really cool. Ed Ludlow with Bloomberg Technology. We bust his chops. He's not a fanboy. He's technologically a look at anything, including he knows how to pronounce Huawei, and I don't. But behind him, for those of you on radio, it looks like an ice rink, but it's not. It is the architecture of Foster and Partners, and it is the Steve Jobs Theater in the beautiful new Apple campus that they have out in Cupertino. In what way, Ed Ludlow, will Mr. Jobs be at this soiree this afternoon?
Because it's a pivotal moment for Apple to kind of prove that Cupertino knows what it's doing, right? Lisa makes the point that from a market or weightings perspective, Apple's really key, right? 7% weighting of the S&P 500. But they're also at the center of all of the headline and political risk that's going on with China. You are exactly right, Tom, that this is not a company growing at double digits. They've had 3 consecutive quarters of overall sales decline. But in the June quarter, it was a record for China. And that puts the iPhone firmly in focus because in China, in the June quarter, Apple swung to an 8% top-line gain from a negative 3% year-on-year gain the prior quarter. And what Tim Cook said, it was all iPhone. So then how do you balance the action by the Chinese government to clamp down in the public sector on use of iPhone, with Apple hoping that the upgrades of the iPhone 15 generation coming today is what's going to spur growth in that key market?
Steve Jobs, Ed Ludlow, don't let the noise of others' opinions drown out your own inner voice. Apple has been steely. Rumors of Disney and all this and all the other fanboy garbage that you and Caroline Hyde cover every day. What is the inner voice of Tim Cook right now?
The iPhone is everything. It's 50% of sales, more than $200 billion last year. And the criticism that they face is on the strategy of reserving the key technological updates for the higher end. So what we expect today is 4 variants of the iPhone 15, a base model, a 15 Plus, but then a Pro and Pro Max. And the strategy from them has been to say, we're going to keep our key upgrades to the higher end, raise ASPs, average selling price, and hope that that resonates in key markets if volume growth's not there. We know volume growth's not there. The smartphone market globally has had multiple quarters of decline, particularly here in the US. But one data point I point to, it does matter whether people buy the higher end phone. But while the overall market has retrenched in recent quarters, look at the market share data. Apple has been able to continue to grow its market share even though the overall market's declined. And they're hoping that those higher end technological updates today, which include a higher end processor, the A17, titanium edges as opposed to stainless steel, and advanced camera technology, that will be tempting enough for consumers in a difficult market in China, but also here in North America as well.
Earlier in the show, Tom was talking about one more thing, and he was joking about this. And typically, this has been sort of
Ed's
how they're remembered.
Ed's got a tattoo of that on his
one more
left
thing.
arm.
It has always been the main thing. One more thing, the exciting thing that people are going to cling on to. How much of a one more thing is baked into some of the expectations for today's event?
Well, full credit to Bloomberg's Mark Gurman. We know a lot of what's coming today due to his reporting. I think you guys talked earlier a bit about the charging cord wars. this is not the one more thing, but it is the thing that people will talk about, the USB-C, because it was mandated by the European Union. And it will be interesting to see to what extent Apple kind of claim it of a move made on their own volition or by their own volition, right? But it will settle debates across households globally. There is no greater pain or challenge to the global consumer electronics enthusiasts than the endless search of one's home to find a matching cable. And that may be settled today.
Well, okay, but that's not that exciting for people. Yes, it's exciting when it comes to settling some of the wars that happen frequently, but that's not exactly going to revolutionize the concept of Apple. How much do you expect them to start talking about artificial intelligence more materially after being so quiet in the hottest field of 2023?
I heard you talking to Mandeep Singh about this 24 hours ago. Tim Cook and co have shown absolute restraint in talking about specific generative AI tools. The line from Apple has always been that they have a long-standing competence in machine learning and AI. It is present in their software offering. All I can say is that will be a part of today's presentation, we understand, a later generation of iOS, but I expect them to show the same restraint about talking about AI.
Ed, one final question, because I know you got to get to the merch setup to get your Apple merch for this afternoon. The great surveillance to made of our guests is, will Telephone, T-Mobile, and Verizon come to the rescue? Do you just presume with all your, I'm serious now, with your serious reporting, are they going to do it again and competitively basically buy people's fancy iPhones?
Big part of the strategy here in North America. Go back and look at the questions on the earnings transcript about the support that Apple is expecting from the carriers. It involves heavily incentivizing the consumer. Because, again, we discussed it already, the strategy from Apple is to reserve the tech updates for expensive higher-end products. The carriers have to come in and offer packages in order to make it more accessible to a broader market. And how much pain they're willing to take to drive volume is at the discretion of those carriers. It's a fantastic question, and it's one that Cook gets asked about on the call often.
It's going to be fascinating today. We bust his chops about being a fanboy, but between Mark Gurman and Ed Ludlow, it is world class here at Bloomberg. Look to Bloomberg Technology this afternoon for our complete coverage of what fanboy is. Caroline Hyde fangirl? I don't even know.
I will not call them that.
Okay, I will.
I'm sure you will. I'll push back.
The fan duet will be with you with complete coverage of the silliness out in Cupertino, but it is a huge impact. I like somebody said today, maybe it was Lindsay Piegza, it's not a discretionary item anymore.
Yeah, exactly.
It's a staple. I guess that would be the right economic phrase.
But an iPhone 15 isn't a staple. Maybe an iPhone 8 for a kid. I'm just saying, if anyone's listening in the household.
They're not listening. Trust me.
I know. No, I will say, though, that the idea of ending the cord wars would be a very nice thing, and not having to search for all of the little attachments and the right cord for the right thing.
The little attachment thingy always breaks. That's always the first thing to break.
Exactly. Yeah. Or something gets in it.
I agree with you. I guess it's a nuance, and we don't like the Europeans to tell us what to do, except Francine Lacroix. But the answer is, I agree with you that if we just get to a more streamlined USB, it's UBS-C cord. They named it after a Swiss bank. No. They named the cord after a Swiss bank. That's your input from Bloomberg Surveillance this morning. This market's terrible. We're going south.
Oh my goodness.
After Apple this afternoon, James Chanos will join, legitimate world-class short guy. This is Bloomberg. Stay with us.
A cruise ship is much more than a flotilla of financials and numbers. Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet, an example of investment that's yielding returns in several different ways.
Originally, actually, we designed it because we wanted to have a really nice platform for tendering, because sometimes we can't home port
so
destinations.
Functional.
Exactly, value functional. And then we looked at it and said, why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space. And we created this bar. It went up and down.
Now, what does it take?
How about the Instagram? Can you about that?
I can imagine.
Instagram moment with the sunset, having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the design and the conceptual aspect of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. And the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Live from New York City this morning. Good morning, good morning. Equities just a little bit softer. We're negative here by 1/3 of 1% on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
Live from New York, coming up, Apple set to unveil its latest iPhone, United Auto Workers softening pay demands, and ARM's IPO is 10 times oversubscribed. We begin with the big issue, CPI, up next.
We're going to have the CPI data. CPI data.
It's the CPI print.
CPI is important.
It's going to be in line with market expectations.
The headline is expected to be fairly high.
We do expect the CPI to come in strong.
Driven by energy prices moving higher.
Energy prices have ticked up.
We'll see what happens with the core.
We're going to get a continuation of the positive trends.
It's going to be very important if core CPI actually increases.
That will be more problematic.
The continuation of the drop feels the most likely scenario.
What does the Fed do with that?
I don't think the Fed's really going to change the trajectory in terms of September.
The question will become the November meeting.
They're either on pause or they got one more hike.
This is a very complicated time for the Fed.
The last mile is going to be hard.
Joining us now to discuss Morgan Stanley's Vishy Drupator, Cameron Dawson of New Edge Wealth. Cameron, to you first. What are you looking for in that CPI report tomorrow?
Yeah, I mean, what consensus has priced in is a continued sort of moderation in the core CPI, a third month in a row of it being just 0.2% on a month-over-month basis. The real eye popper is going to be the headline CPI, of course, driven by higher energy prices. And then it's a question of how the Fed interprets that, or at least what kind of degrees of freedom that gives the Fed to be able to back off on their policy tightening. Because in a world where headline CPI is accelerating, even if core stays flat, we're not sure if that really gives them the wiggle room to talk very dovish. At the end of the day, we've had a great deal of disinflation driven by lower energy prices. We can see that in non-durable goods inflation, which has gone from 13% to deflation back back in June, but now that's starting to climb higher. So I think it presents an interesting predicament for the Fed going forward.
Particularly with crude close to 92, 91.80 on Brent, WTI just short of 89. Vishy, let's build on that. How do markets respond to what Cameron was talking about? Those two stories, headline CPI, driven potentially by gas prices, and core CPI, potentially showing some progress.
I think a lot will depend on the details. I think we do expect. I think Cameron, I agree with her. The core CPI will continue the progress over the last few months. Our expectation is 0.18% month over month for the August core CPI, and I think the deflation story in core goods will continue to be there. The acceleration in higher gasoline prices will mean month over month 0.61% is our expectation. I think this presents a challenging environment for the Fed for sure, but we think that there is nothing. We don't expect to see anything that will change the outcome of the September meeting, where we expect no hike from the Fed, and in our mind, Fed is done the hiking, and we think it'll be tough. The challenging thing would be messaging out of this would be a bit more challenging, but we think that the Fed has done enough to get their core inflation target heading towards their objective.
So Vishy, you don't think the commodity market changes that? This is the note from Marko Kolanovic over at JP Morgan in the past 24 hours. This is what he had to say. The potential for the commodity price surge to feed inflation and extend central banks' hiking cycles. Would you disregard that?
Our view is that the Fed has done enough to bring down. Remember, their target levels are in core PCE terms, and I think they have done enough to get them down, and they'll be pleased with the trajectory of it. We don't expect that they will do a victory lap, but their language will suggest that they want to be long all optionality associated with it. But we think that's this is one of the reasons why we are constructive on duration, John.
How constructive? What are you looking for in a 10-year? I've got 350 over at Morgan Stanley with Matt Hornback, your colleague. I'm hearing 350 from Mike Schumacher. Bob Michael earlier on this morning was pretty bullish as well on fixed income. What are you looking for, Vishy?
I think we are end of the year at 365. You've just revised our numbers up from when you had Matt on your show from 350 to 365, but still that's a pretty meaningful meaningfully lower yields by the year end. We think the narrative will shift from slowing economy, and I think the market has been excessively, in our minds, focused on this immaculate re-acceleration of growth narrative, which we don't buy into that narrative. I think the market will come to recognize that the economy will slow. There will be give up in consumption, and we will slow in the fourth quarter, and we won't expect to see an explosion
Chris Harvey of Wells Fargo expecting the mega caps to outperform as we near the home stretch of 2023. Your opening bell just around the corner.
What do you worry most about your economy in Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
The NASDAQ reminding us how old we are. Harry Potter, 25 years ago. Unreal. Futures on the S&P 500. Futures negative here on the S&P, down by about 0.4%. On the NASDAQ 100, we're down about 0.5%. The main event for the NASDAQ later on today, the iPhone 15. There's your opening bounce, switch at the board and get to the bond market. The main event for the bond market, the broader market, really is tomorrow morning, 8:30 Eastern Time. CPI just around the corner, then on to retail sales, PPI and all that good stuff later in the week. The bond market looks like this. Yields are lower by a single basis point, 427.62. In the equity market, we're doing our thing. In foreign exchange, the dollar's been stronger than weaker, then stronger again today. Euro dollar 107.13, we're negative 1/3%. And to finish on commodities, new highs for the year on crude. Brent right now, 91.63. WTI, 88.50. Big story in the last month or so. 30 seconds into the session, we are down 1/3% on the S&P. On the NASDAQ, we're down about 0.4%. The stock to watch at the open is Oracle. Shares moving sharply lower after reporting slower growth in cloud sales. Chairman Larry Ellison touting the company's AI contracts, saying this: companies have signed contracts to purchase more than $4 billion of capacity, twice as much as we had booked at the end of Q4. Abby has more on this one. Abby, that stock down and down hard.
It is unbelievable to me, John. I am simply stunned. I rarely talk about technicals on this show, but this stock absolutely gapped down to its 100-day moving average. That's a fancy way of saying that the buyers just literally an air pocket. They just disappeared. The sellers stepped in, and it actually actually confirms the stock for a sub 100 decline. Whether or not that happens, we don't know. But that's how bad investors are taking this quarter. And it's interesting because when you read about it, it doesn't actually sound so horrible. And analysts to some degree are actually defending the company at the lows, down 11.7%, the worst day since March of 2002. Right now, stabilizing, down just 11%, the worst day since March of 2020. As for that quarter, there was actually lots of strength there. To your point, overall, the cloud grew 30%, not so dissimilar from Microsoft, Amazon, Google. There was a subset of the cloud growth that was 64%. Doesn't sound so shabby, but the estimate was for 67% growth. Many analysts are saying that high expectations, that's really the story. Valuation got ahead of itself. Valuation on the surface wasn't so high, 22 times forward, but from a historical perspective to where Oracle usually trades, it was super high. Plus, Monness Crespi did actually cut the stock to a neutral from a buy on that valuation. Also talking a little bit about how licensing and hardware came in a bit below expectations. But again, this stock just getting absolutely punished on the day, John, down 11.9%. And I believe, I'm just checking right now, that does make it the worst day, going all the way back to, it's cycling through lots of data right now, March of 2002.
The pandemic, I believe, back to 2020, potentially, if we sink here at 12%. We're down about 12% right now. Oracle at 111 in early trading. Abby mentioned that note from Brian White of Monness Crespi saying this: valuation has become less compelling, sentiment is overly optimistic, and we believe the darkest days of the downturn are still ahead of us. This is brutal stuff. We are lowering our estimates and downgrading our rating on Oracle to neutral from buy. The latest from Monness Crespi there. Sticking with tech, Apple unveiling the iPhone 15 at the company's biggest event of the year, along with updated versions of the smartwatch and AirPods as well. Ed Ludlow was more on the ground at Cupertino, where all the action takes place. Ed, that one coming up in a few hours' time.
Yeah, and the market's watching. Apple modestly higher, 0.3% at the open. The event, 1 p.m. Eastern, 10 a.m. local time. As we outlined earlier in the show, the big ticket items are 4 variants of a next generation iPhone 15. I say the market's watching. I'm going to leave you to debate with your guests in the hour about the macro implications of what happens with Apple. But from a pure weightings perspective, this is a stock that is 7% of the S&P 500. It is normally the biggest points mover in either direction on the NASDAQ 100. And based on past precedent, the bar is high. Go back to 2011, there have been 12 iPhone unveil events since 2011. Apple shares have only risen on 3 sessions corresponding to those events. So usually they fall, and it's a kind of sell the news type event. But the bigger picture for Apple is more bleak. We've had 3 consecutive quarters of overall sales decline, apart from in Greater China, where there was a swing to top-line growth of 8%. Based on the guidance given on the call for this current period, it looks as if we're on track for a 4th consecutive quarter of sales declines. The question, therefore, is are these technology and hardware upgrades on the iPhone and what we expect from next-generation Apple Watch and AirPods Pro with USB-C connector going to be substantive enough that they drive the consumer globally to do this upgrade cycle that Dan Ives has talked to you about? The estimates range from 150 to 250 million units out there of people that have older generation iPhone. Will they be tempted to upgrade? And the same question for China. Will the iPhone 15 be a hit in China on the higher end Pro and Pro Max at a time where China's central government is clamping down on foreign handset use within government agency and state-backed enterprise?
Dan's been talking about that upgrade cycle as a bullish thesis for a long time. I touched on it with him in the last week. And at some point, don't we just sit here and say, we need to ask a different question. Why aren't they upgrading?
Yeah, I guess if you were to ask Mark Gurman, he would give you a pure technology answer, that the updates for generations of iPhone 14 and 13 were incremental. This time around, there is a heavy emphasis on the camera upgrade for the Pro and Pro Max, as well as the titanium sides, a higher quality material, lighter weight, more durable, sort of some Pro-specific software updates. Is that enough? We won't know, Jonathan, until after the fact. But this is being billed as one of the more substantive hardware upgrade cycles that Apple has done, or refreshes, in some time.
Ed, thank you, mate. As always, that stock marginally positive. About 5 or 6 minutes into the session, we're high here by 0.1%. I want to stick with tech. Google's antitrust trial gets underway today as it faces a pair of lawsuits that could result in the breakup of the 25-year-old company. Simone Foxman, I'm not sure how many times I've had to read a headline like that in the last 15 years, but there's another one.
Yeah, you probably haven't had to read one this century because this is the biggest DOJ antitrust suit since Microsoft, certainly the biggest for Google. Now, this really has to deal with arrangements that Google struck with various smartphone manufacturers, with the likes of Apple even, to make Google's search engine the default. Apple likely to get drawn into this in particular because just in 2022, it had $18 billion worth of revenue from having Safari use Google Chrome as or Google Search as its default search engine. So what the DOJ alleges here is that these agreements have essentially forced out some of Google Search's rivals, the likes of DuckDuckGo, the likes of Bing. That is predatory behavior by the monopoly. Google Search controls 90% of the market. Google, however, says consumers are just one click away from other search engines, and that its deals with these companies are similar to the ones that cereal makers, for example, strike with major grocery stores. Now, this trial is expected to go on for about 10 weeks. We won't likely see a decision until next year, and could be part of the reason that we're not seeing Google shares move too much outside of the market today, but the potential to break up the company, to move search away from things like Maps or Android, but the possibility that we could see, even if the DOJ wins, some smaller sorts of ramifications, John.
Simone, thank you. Thanks for the update there on Google, Alphabet, whatever we're calling it these days. I want to talk about ARM, planning to price its shares tomorrow, but it's closing its order book a day early, with it already being oversubscribed by 10 times. Mandeep Singh joins us now for more. Mandeep, is this how you build enthusiasm up against the listing? You just do things like this?
I think, look, I mean, it was expected that there will be a lot of interest from large companies. And in this case, you know, TSMC just announced a stake in ARM IPO, and we are hearing Apple and NVIDIA. And look, with ARM specifically, because it was a takeover target, you know, with NVIDIA trying to buy it at $40 billion, there is a sort of that floor on its valuation. So the fact that they priced the IPO around that $50 to $55 billion was a good sign, and I'm not surprised that it's oversubscribed at that valuation.
Mandeep, how much signal should we take from this in the broader equity market, given the uniqueness of this particular listing?
Look, I mean, the dominant theme this year is Gen AI, and it kind of built on cloud. And today we are talking about, you know, Apple launching a new smartphone. The core IP block that underpins all of the innovation is built around ARM. And even though they don't have the pricing power, which is the bear argument that, you know, ARM really relies on royalty revenue, and how often can they increase the pricing on that royalty revenue, the fact is no one wants to move away from that core IP that ARM has. And that's where I think they will have that IP for a very long time.
Mandeep, thank you, sir. A story, a conversation for us later on in the week. About 9 minutes into the session, pulling back by 0.2%. Chris Harvey of Wells Fargo making a bullish call on Uber Cabs, saying this: you're getting better growth, better balance sheet, stability with an AI kicker. What's not to like? Chris Harvey joins us now for more. Chris, I was reading through your research, and we'll get to the Uber Cabs in just a moment. This is what you had to say on Apple. You didn't have the iPhone ban on your bingo card. Well, Chris, it's on there now. Can you tell me how significant that is, that tension between the US and China, and what it might mean for some of these multinationals listed here in America?
Listen, anytime you have stress between the U.S. and China, it's going to play out in the capital market. It's not a positive thing, right? But I don't think it's the end of the day. Ultimately, what it does is causes volatility in the short term. It could create some quote-unquote opportunity, but we're not focused too much on that. What we're really focused on is seasonality. We're focused on FOMC, and we're focused on inflation or tomorrow's CPI print.
Well, let's talk about tomorrow's CPI print. Cameron Dawson of New Edge was on the program with us about 35 minutes ago, Chris, and she talked about the difference between headline CPI, driven by energy prices and gas, that's going to be elevated, and core CPI, potentially showing more signs of progress. Do you discount one, ignore one, and just focus on the other?
I mean, the answer to that is always, it's the deviation away from expectations, right? If there's a massive deviation versus expectations, you have to take that into account. But really, it is true. You do want to focus on core. You want to see what core is doing, and you want to see more relief. The one thing I will say is that we've looked back over the last couple quarters and last couple months, and one of the things we've seen is that when you have real rates going higher, when you have credit spreads widening out in the month before the print, that's usually not a real positive sign. What you should expect, and what the market's beginning to tell you, is it may be more of an inline to a little bit hotter print, because with higher real rates and higher, or excuse me, wider IG spreads, that's not a real positive thing for inflation. That's telling you the market's reacting to something, and you might want to be a little bit careful going into the print.
So what should I do with $90 crude, Chris? What does that mean for my equity market? What does 91.84 on Brent, 88.68 mean on WTI?
Yeah. John, it's a great question. I had a long conversation with Roger Reed, who covers our energy space. And one of the things he said to me, which I think is true, we're going to be in an environment where it's higher for longer. The incentive to create more supply just isn't there. There's still this very adversarial relationship between the hydrocarbon space and the administration. And you're seeing rig counts come down. So what do you do with it? I think that the belief is that it is going to be higher for longer because of some of the supply-demand dynamics. China, funny thing is, China really hasn't come back online. That could really change the equation. And the last thing is, if that's true, if it's higher for longer, later on, or if some people, if I'm wrong and a lot of people are right that there's going to be a strong recovery next year, then that probably brings the Fed back in because of that inflationary issue.
So Chris, how does that compete with the original call? Embrace UberCap Tech.
Yeah. So the original call, so just on a sector basis, one of the sectors we loved coming into this year was media and entertainment. And you do have a lot of UberCap names in there. The reason why we liked it is it was a perfect, or what we thought was a perfect GARP type sector. A lot of growth stocks that had gotten beaten down had been really bad performance last year, and we thought the fundamentals would turn. So it does fit in with the call. Ultimately, what we're telling people is, on a market cap basis, in the short term, it's UberCap. But if you're looking longer term, mid-cap growth is really a good risk reward longer term.
Chris Harvey of Wells Fargo. Chris, appreciate the update from you and the team as always. Chris there on why it's bullish UberCap Tech, even with the prospect of rates remaining high for longer. Remember that note from Marko Kolanovic over at JP Morgan in the investment bank, trimming their duration overweight by shifting 1% from bonds to cash. This is the why. Given the potential for the commodity price surge to feed inflation and extend central banks' hiking cycles, which speaks to this move in crude, just short of $92 a barrel right now on Brent. We're higher by 1.5% on the session. On WTI, just about to go through 89, up by close to 1.8% today. Coming up, negotiations continue as the auto workers' strike looms.
Part of this move on the labor unions, I think, for the United Auto Workers is staying relevant and making sure that whatever changes occur in the economy, they still have a place.
The latest from Washington, D.C. with AMH, and the latest from Detroit with David Welch. Team coverage up next.
Studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's always for the Fed to respond to it. And this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive
surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Part of this move on the labor unions, I think, for the United Auto Workers is staying relevant and making sure that whatever changes occur in the economy, they still have a place. Labor does have some more power now than it used to, just because the manufacturing is so much smaller now that the ones who are doing the manufacturing, if they do pull back, that is going to be an issue for those three companies. We're starting to see companies who have been able to charge more for the consumer, their workers are looking back and saying, hey, you guys are making record profits. We would really like a piece of this.
A deal between the United Auto Workers Union and Detroit's Big Three remains elusive just 2 days before the strike deadline. The UAW lowering its pay increase demand to 36% from 40%. But according to our reporting, the automakers not thinking much of the offer, seeing the demand as boosting labor costs so high that it would threaten their viability. Even a brief UAW strike would cause billions in economic damage. Anderson Economic Group finding that a 10-day work stoppage would reduce US GDP by 5.6 billion. Let's get to the team coverage. Bloomberg's Anne-Marie in D.C., David Welch in Detroit. David, first to you. What's on the table? Where is their movement? And what are the chances we get a strike at the end of this week?
The big issues all along remain. It's pay raises, cost of living to protect workers from inflation, and they want to bring back pensions. They've talked about other things like a shorter work week and that sort of thing. I don't think those are really the big issues. It's all about pay, inflation protection, and possibly bringing pensions back. We've seen movement on pay. The UAW went from 40% down to 36%. The companies don't think much of it, but at least it's some movement. I think if the union is serious about pensions, we could have a long strike. If that was sort of a low ball or high ball offer, as the case may be, and they're willing to maybe just get better 401k contributions or something like that rather than a guaranteed pension, then maybe we don't have a long strike. That could be a big defining issue, though, because I think the companies will also move on COLA because that's cost of living allowance. Ford made an offer on that the union didn't like, but you are starting to see the two sides bend a little bit on this whole pay issue.
David, what number do you think gets it done? Based on your reporting, do we have any idea? You've got the union at 36. I've seen offers close to 10% on the table. What gets it done?
I think if you take all the different ways of giving these workers a raise, somewhere around 20% over the 4 years could probably get this done. That's the best raise I've seen for union workers since I've been covering this, and it's higher than the automakers have proposed so far significantly. So somewhere around there, give or take, could maybe get it done.
AMH, we can picture a president nervously waiting in the White House, wondering what on earth he'll do if this strike actually takes place.
Well, that's exactly right, Jonathan, because what you see is really two competing aims of the Biden administration at play here. President Biden says time and time again he wants to be the most pro-labor union president. At the same time, he wants to be a climate president. And at the crux and at the anxiety, a lot of these issues for the UAW workers is the auto industry's move to electric vehicles. Just a month ago, the president put out a statement. Obviously, he was concerned. He talked about wanting the big three to make sure that UAW workers have living good wages to support a family and community. He also talked about the need for a just transition to EVs, and so that those workers should be the first to give a shot at working on an EV plant. Also, Jonathan, the end of the month, we saw the administration give more than $15 billion in funding and in loans to auto companies for the factories to retrofit to EVs. So this isn't starting new plants, say a battery joint venture in the South, but actually using those same factories. So you see the president trying to do two things at once: support the UAW workers, but at the same time support a transition, which may mean you're not going to need as many of those workers.
A transition away from this $92 Brent, $89 WTI. AMH, while you're here, let's finish on that. What does that mean for this White House, this country?
Well, it's very difficult, obviously, because we remember last summer how painful it was for this administration when they were dealing with $5 a gallon gasoline at the same time that we have seen inflation across the board go up, whether it's not just gasoline, but whether it's rents or whether it's groceries. So much so that this was painful to the administration that the president, who once called a pariah the crown prince of Saudi Arabia, Mohammed bin Salman, he actually went to Saudi, and obviously we all saw that meeting and the fist bump that pursued. You have now a gallon of gas inching nationally towards $4 a gallon. This is very concerning for an administration because the president continues to get low approval marks across the board, but especially on the economy.
We're going to say inflation's coming down, and then we're going to look at 384 on gas. AMH, thank you. Anne-Marie, alongside David Welch. Your broader equity market at the moment, 22 minutes into the session, pulling back by just about 0.25% on the S&P 500. On the NASDAQ, down by about 0.1 with some sector price action. Here's Abby.
It's interesting, John, because that's a relatively small decline, and yet we have most S&P 500s trading lower. So it's a broad-based decline, and specifically 9 of the 11 sectors are down. 2 higher. Energy, not surprising, leading the way up 1.4%, being boosted by that high price of oil you were just talking about. To the downside, healthcare, real estate, and tech, those are the worst, down more than 0.5%, but no big decline. So as you would say, not a lot of drama here. Where we do have some interesting trading action on the month, though, is September right now is shaping up to be an okay month for the S&P 500. The top sector right now is consumer discretionary, led by Tesla and Amazon.
Abby, thank you. Your trading diary up next.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Coming up Up to 26 minutes into the session, almost 26 minutes into the session, we're down here by 0.2%. That's the price action coming up through the day and through the rest of this week. Apple's Wanderlust event kicking off at 1 p.m. Eastern Time. Wednesday, we'll get US CPI. Thursday, initial jobless claims, US retail sales, and an ECB rate decision, plus the UAW strike deadline. And on Friday, China eco data, including property prices and industrial production. That's your week ahead. Kicks off with Apple a little bit later this afternoon, and then on to tomorrow morning. The main event is CPI in America. We'll have full coverage of that for you from New York City. Thank you for choosing Bloomberg TV. Good luck for the rest of the trading day. This was the countdown to the open. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The names that move markets are on Bloomberg.
There's a complete change in the labor market. There's a complete change in the energy future that we are facing.
Under tightening would be a worse mistake than over tightening because we can course correct that.
The question is whether we need to increase the pressure or just keep pushing.
We've been getting good news. We just have to keep getting good news.
Nobody covers business like Bloomberg, your global business authority.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From the financial centers of the world, this is Bloomberg Markets with Alex Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day, Tuesday, September 12th. Here are the top market stories that we're following for you at this hour. Apple up. The company will unveil the iPhone 15 today. A big upgrade with some phones potentially made in India. Stock trades a little heavy, though. We're going to get the latest on the ground. And packaged up, Smurfit Kappa buys WestRock for $11 billion to create a packaging industry powerhouse. We're going to speak with Ken Bowles, Chief Financial Officer of Smurfit. And America up. B of A's fund manager survey shows a rush into U.S. stocks out of China as long big tech is the most crowded trade. From New York, I'm Alex Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Guy, good to have you back. One cold open I also missed was oil up. That That's a pretty powerful rally that we're seeing, which will definitely have interesting read-through to our conversation tomorrow after CPI.
CPI is the big event tomorrow. It does feel like markets are a little quiet ahead of that, but I think the Apple event this afternoon could be really quite significant. And I think given the importance that Apple has, it really needs to deliver. So I think CPI is big. I think Apple is definitely up there as well. I think the question of the day around kind of this Bank of America note, talking about the fact that people, I'm not sure it's buy America or sell China. I've got this theory, basically, China is so bad, and you've got degrees of separation. It's China, which everybody seems to be selling aggressively at the moment. Then it goes emerging markets. Then it goes Europe. And you end up in the United States. So if you want to go as far away from China as you can, you ultimately end up in the United States. So is it sell China or buy America?
Right, but that's why I think Apple's interesting, because that is an America tech company, but obviously has that huge exposure to China. And then if you can't have the kind of demand there because of restrictions to buy the phone, that's going to be an issue. So I think that's where kind of all the issues come to fore.
I also think Apple in many ways is similar to the luxury stocks as well. These new high-end phones, we'll talk about it with Ed Ludlow a little bit later on. These new high-end phones are super expensive, and the luxury names are warning of a slowdown in America. They're warning of a slowdown in Europe as well. China was meant to be the counterweight to all of this. It's not happening. Anyway, we should discuss. We should figure out what is happening here. Is it a sell China or is it a buy America? Jess Menson, Abigail Dewitt will join us to discuss. Jess, what do you think? Is it sell China or buy America?
Well, it definitely looks like when you're looking at what fund managers are feeling, they really want to buy more America. And especially when you're thinking about the dynamic, the world's second largest economy, when you are looking at China, and especially if you think at just the bearishness in this particular survey from Bank of America, when it comes to China, the sentiment there is actually even more so bearish than it was a year ago. That was obviously right before the reopening there, and especially what was happening with COVID. But this year, when you're looking at China, especially when you're thinking about what's happening with its property debt issues, that's caused some concerns there. But this also not even just China, but moving more away from emerging markets, more toward these U.S. stocks and equities, and even some of the more client-related positioning data from Bank of America, specifically toward their clients today, showing that they're still seeing those inflows into technology shares.
Yeah, and cash too. Okay, it makes it easy to say buy America, aka maybe buy tech, but then Abby, I got to be honest, Oracle.
Yeah, Oracle.
Totally a different story.
Yeah, it's getting decimated. The last time that I took a look at it, it was down the most since March of 2002. That's the degree of selling. It was actually a decent quarter, so investors are really blaming it on valuation to some degree, that this stock was trading with high expectations coming into the quarter. Relative to China versus the U.S., though, and putting aside Oracle, because it's having a breakdown that I would almost say is more macro-related than stock-related, the degree of that selling. I think that what this Bank of America survey to some degree is saying that the U.S. Is buying the best house on a bad block. Now, I will say yesterday, Kyle Bass used to be, at least in my mind, one of the preeminent China bears out there. And if I heard him correctly, he was saying he wouldn't short China. He's neutral China. Even so, if you're neutral China or if you want to sell China, and you have to remember this sell China crowd right now, they were super bullish back in February. So I almost have to think that maybe there's some kind of a contrarian play there. But if you're buying the best house on the bad block, because of course China weakness could trickle into Europe as well, you're going into the U.S. The thing I would say about U.S. tech, though, it's really overvalued. The tech sector is trading at 30 times. The growth in a lot of cases is no growth. Apple, if you can believe it, there's no growth there, which is really pretty amazing to think about. So it may be time to look at catch-up trades here in the U.S.
That's interesting.
Nice double top, potentially, on Oracle as well. That chart looks great. I'm sure you're going to bring that to us later, Abigail. Abigail, is Europe therefore the proxy in all of this as well? To what extent is Europe affected by that China narrative? I look at the last 3 months and I look at the sector story out of Europe. The car sector down 4%. Names like Mercedes, big exposure into China. Miners, big exposure into China, down 5%. Travel, down 6%. Luxury, down 7%. Tech, down 8%. If you exclude the tech side of things, a lot of those sectors there have big exposure into China. Is Europe trading on Europe, or do you think Europe's trading on China and the effect that it has?
Well, it's really interesting, Guy, because we, of course, are a connected global economy, and I don't think that you can really separate any of these economies. China, as you know, is the world's second largest economy. For some reason, there is, I would say, a narrative or psychology that Europe is more closely tied to China in terms of those products. I would argue that the U.S. Is just as closely tied, but our economy right now I've heard of people they're saying that the situation in China, the economy, the slowdown there is actually worse than is being reported. So if you take that, I would have to think that at some point it's not just trickling into Europe. Maybe Europe is seeing it a little bit earlier. Maybe because of that narrative psychology, some of those sectors are trading off a little bit more, especially the luxury products and the idea that when China flocks to Europe and some of these luxury brands, that could really be a boost. But at some point, I would think that it would, in fact, also hit the U.S. It's hard to see China going into a recession and the U.S. staying out of the recession. So that's something that I think should also be on the radar screen.
But Guy, to your point about Apple and buying expensive stuff, U.S. real household income apparently fell 2.3% in 2022. That's about $74,000, and CPI was 8%. So just like keep that in mind when we're talking about then these guys. Yeah. Yes, the luxury story, but also then the Apple story.
I wonder what that number's going to look like though this year. Because last year it was about inflation. Everybody had the shock of inflation last year. And this year, look at what's happening with the UAW. You look at what is happening here. The UK's now got a massive pension problem because it's had to solve the public sector wage round with some really big one-off bonuses that are now going to mean the pensioners get some big one-off bonuses. So last year in some ways was about the inflation hit. This year's about the wage hit. To what extent though will that be enough to keep the consumer on track?
Yeah, well, exactly. And at least here in the U.S., though, the consumer is what's holding everything up. So it feels like if that cracks, it's a different story. Jess, so it wonders like if Buy America is not the right case here, if the consumer's going to crack.
Well, I feel like especially when you're looking at some of those retail earnings that we got recently, and also Barclays is more optimistic, particularly when you're talking about retailers and the consumer, and they actually upgraded a number of those names next year. And if you look at the ECFC function in the terminal, even on a quarterly basis, there's no longer a contraction there. So it is a bit hard there. I know a lot of people are talking about, obviously, the student loan repayments, what's going on potentially with Washington as far as different issues there. But still, when you're looking overall, the consumer has been more resilient, but there's still a lot of questions out there about how long, and especially companies and margins, how long they can continue to pass those price pressures on and those costs there. So that's going to be a big thing. But overall, when you're looking at more just, especially the odds with a recession at 60%, when you're looking, a lot of economists are still shifting a little bit of their tone here and pushing those forecasts out more so.
Yeah, exactly. Anyway, really interesting stuff, you guys. Thank you so much, Jess Menton, Abigail Doolittle of Bloomberg. Thank you so very much. Retail sales, I think, coming out on Thursday. All right, coming up, more perspective on the question of the day. Buy America? Sell China, sell Europe. We're going to ask Anastasia Amoroso, iCapital Chief Investment Strategist. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
CPI data.
CPI data.
It's the CPI print.
CPI is important.
It's going to be in line with market expectations.
The headline is expected to be fairly high.
We do expect the CPI to come in strong.
Driven by energy prices moving higher.
Energy prices have ticked up.
We'll see what happens with the core.
We're going to get a continuation of the positive trends.
It's going to be very important if core CPI actually increase.
That will be more problematic.
The continuation of the drop feels the most likely scenario.
What does the Fed do with that?
I don't think the Fed's really going to change the trajectory in terms of September.
The question will become the November meeting.
They're either on pause or they got one more hike.
This is a very complicated time for the Fed.
The last mile is going to be hard.
Those were some Bloomberg TV guests weighing in on inflation data due out tomorrow. I want to get to the question of the day, though, and this is really based on Bank of America's Fund Manager survey that just shows a huge overweight in U.S. tech. Is it a Buy America story? Do you sell China? You sell EM? What goes with that? Joining us now, Anastasia Amoroso, iCapital Chief Investment Strategist. All right, Anastasia, Buy America, question mark.
Yes, the answer to that is yes. And, Alex, the reason to that, if you look at the U.S. economy versus the European, for example, we are in such much better shape. I think part of that has to do with the U.S. lack of interest rate sensitivity. And what I mean by that, if you look at mortgage balances, for example, in the United States, they're not adjustable rate mortgages. They're fixed rate mortgages. And we know that's not the case in Europe, where a large percentage of those mortgages are adjusting higher. And that is a pain point for the consumer there. That is not the case in the U.S. Then I think about the energy story. And, first of all, U.S. is a net exporter of energy. Europe, for example, is a net importer. And when you think about the beneficiaries of higher oil prices, of course, it's energy stocks. And in the U.S., they're benefiting. So there's many reasons to kind of think that it is a buy U.S. story. U.S. is on pace to grow 1.5% or 2% consensus GDP growth this year. Europe maybe is just going to deliver right around zero. So I think it is a Buy America story, it is a Buy Tech story, and of course there's a lot of tech in the U.S.
Anastasia, America's expensive, tech is expensive, Europe is cheap. Isn't that enough to maybe look outside the United States?
No, it's not enough. And yes, you're right, Guy, that the discount of Europe relative to the U.S. is at one of the highest levels we've seen. But, I always look at a formula, which is valuations plus positioning plus a catalyst. And, yes, you may have a valuation that is cheap, but what is going to be that catalyst that is going to propel Europe high near term, for example? And by the way, this may all change, and we can have a very different conversation a couple of months from now. But for now, what I know is the earnings revision story, for example, in the U.S. is the catalyst for U.S. stocks. And if I look at earnings revisions for U.S. stocks looking out at this year, their net positive earnings revisions are now 23% versus plus 3% for the world and something in between for Europe. Mm-hmm. So, I think it's lacking that catalyst for Europe at the very moment.
The argument that if there is a disruption, the U.S. has more to fall than Europe. I understand that's a different take on the value play, but if we do get into a harder landing where the consumer falls out of bed, U.S. is going to crater a lot more.
Well, I don't know if that's a given, because when I think about the imbalances that we have today, for the U.S. to crater a lot more, we have to have this excessive leverage, and when I look at the consumer has delevered. When I look at corporate balance sheets, whether it's investment grade, whether it's a high yield, we're actually in better shape than we were during the financial crisis or immediately after that. So the big question mark for the U.S., of course, is what's going to happen with government debt, and there's concerns around that are being priced into the market. But corporate America, American consumer, I don't think would crater because there's not this deleveraging spiral that would be offset.
In terms of why this is happening, is it because simply the federal government is continuing to spend money at an aggressive rate, which makes the American economy look so much better, and by extension, therefore people want to own U.S. stocks? And as you say, isn't the risk therefore around the U.S. bond market, we talk about Buy America. Are we being very specific here? Is it Buy American stocks, not American bonds?
Yeah, I think you're right, Guy. It is Buy American stocks. I am concerned about parts of the bond market. There's some good news for why bond yields are rising, but there could potentially be some bad news. The good news is bond yields are rising because growth is rising. Growth expectations are rising, and of course that's a benefit for stocks. But we could also get a worse move in Treasury yields, for example, if there is more of a concern about budget deficit spending that we have not addressed.
and the fact that we're going to continue this for several years, that will add to additional interest rate expenses. So I'm concerned that bond yields may move higher because of that additional issuance that is coming. So it is buy stocks and not bonds. And, to your question about why is this happening, why is there's this U.S. resilience, I think it is, again, lack of interest rate exposure. But if you look at unemployment rate, 3.8%, if you look at wage growth, it is still very much on pace, for 4% year-over-year gains for the U.S. consumer. So all of those things contribute. And by the way, just last Friday, we got the consumer household net worth number, which is $154 trillion. So we've had a large, substantial gain in consumer household net worth.
Yep.
So consumers feel well off, and I think that's why they continue to spend as well.
Despite the fact we just had that headline that household wealth, right, for 2022 was up fell 2.3%. But it's like a bifurcated, the median income versus household net worth. But you still square that with people have jobs and they're getting paid more for those jobs. And I think that's what's propping up the sentiment. Is it a sell EM or a sell China thing?
Well, when I think of China, I don't think you want to sell at this very moment because it is probably the world's least favorite trade at the moment. So going back to this sort of, positioning and valuation and catalyst standpoint, I do think that China is very unloved and therefore contrarian. And the government there is certainly trying to do more and more to stimulate the economy. I suspect at some point over the coming months they will be successful. And so the data that we're going to see coming out of China is not going to be as dire as it is right now. So I don't think it's sell China, but when I look at emerging market revisions have been very negative relative to the U.S. So I'm probably not going to be quick to step into that.
Anastasia, very nice to see you as ever. Thank you very much indeed. Anastasia Amoroso, ICAP Chief Investment Strategist. What are we going to talk about next? Packaging, paper, cardboard, stuff that turns up to your door on a regular basis. Smurfit Kappa announcing an $11.2 billion deal to acquire US-based WestRock, creating a packaging industry powerhouse. Ken Bowles is Smurfit's CFO. He joins us next. This is Bloomberg.
What do you worry most about your economy in Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question because I want to make sure that in 5 years from now we will not have sacrificed the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands which are more sensitive.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg.
So shares of the Irish paper and packaging product maker Smurfit Kappa are plunging. I got it down 9.4%. This after the company this morning announced an $11.2 billion deal to acquire US-based rival WestRock. Let's talk about the deal. Let's talk about the reaction we're getting from the market. Ken Bowles, Smurfit Kappa's Chief Financial Officer. He will continue in that role. at the new business, as will the bulk of the senior management team coming from Smurfit. Ken, great to see you. Thanks for taking the time to speak with us this afternoon. The market's got the stock down pretty hard today, down around 10%, 9.4% right now. The reaction I'm hearing is that the investor base is concerned that this is a distraction at a time when you need to be focusing on costs. What do you say to those investors? What do you say to those concerns?
Hi, Guy. Listen, thanks very much for taking the time. I think ourselves and WestRock are at a point in time where this makes absolute sense for our two companies to come together. I think Smurfit Kappa in particular has spent the last 7 years on a journey through multiple capital plans in kind of right-sizing the cost base, right-sizing the asset base, and indeed improving the customer kind of proposition. And we're watching WestRock begin that journey also. They're maybe slightly behind in their transformation than we are, but given where we both are in this particular cycle, and where we both sit in terms of balance sheet strength and opportunity, it's the right time to kind of join these two great companies together and further improve that asset and cost base, to your point, improve the efficiency, improve the footprint, and fundamentally bring two great management teams together and improve that customer proposition.
Hey, Ken, it's Alex in New York. So congrats. Are you overpaying?
No, Alex, in short, I think when you look at this on a relative multiple basis, ourselves and WestRock are trading just around 7 times, which is well below any kind of precedent trading multiples for deals of this scale in this sector. I think generally in the last few years, we've seen deals of this size go for 10, 11, 12 times. We're trading basically at 7 times equal, which makes absolute sense to us. I think, sometimes when you look at the premium on its own, it's kind of a point in time or day in time, but the reality is that both sets of shareholders get to kind of participate in a much bigger scaled organization, but at the same multiple.
Ken, why WestRock? Did you look at anything else?
Listen, paper packaging is a relative village, and we all know each other well. But I think in WestRock, we see an organization that's culturally aligned to the way we speak, very market focused, very focused on innovation, very focused on sustainability, which ourselves and Smurfit Kappa are leaders in. I think also if you looked at our portfolio, Guy, the big gap was North America, and the opportunities that come from ourselves and WestRock being able to cross-sell in each other's markets now where we don't have overlap is incredible. So we did look around, but WestRock, from a cultural fit, a people fit, a geographic fit, made the most sense.
Is this a play on the U.S., Ken?
Listen, you can't ignore the U.S., Alex. You know that. It's a big packaging market, and WestRock has a big position there. We've been in the U.S. since 2013, but in a very small scale. So we have good market intelligence. We know how the market works. This is absolutely an opportunity to scale up in the US. It's a market we've been trying to get back into for many, many years, since being there in the 90s when I was still in Smurfit at the time. So it's a great opportunity to come back, and a great opportunity to come back with a great partner.
So how do you see, we just go macro for a second then, Ken. How do you see the global economy then sort of evolving? Like, is it about, okay, maybe stagnation in Europe and more growth in the US?
I think generally we see the US come out of these kind of cycles quicker than the Europeans do. And I suppose when you put this business together between the European, North American and Latin American footprint, it gives you kind of a portfolio of kind of businesses that kind of work through the cycle in a very balanced way. So as one's coming out and one's nearing the end, you get less volatility through the cycle, better handle on free cash flow. But fundamentally, I think as a company of this scale, able to weather any kind of storm that might come along.
Do you see other consolidation within the space now? Like, is this going to kick off more?
Who knows? I suppose it's going to be hard for people to ignore the fact that this particular combination puts us significantly ahead of our nearest peers. So who knows? It's a sector that's enjoyed a lot of consolidation over the last number of years. This is clearly the biggest deal in it, but let's wait and see.
Ken, are we going to be seeing more cardboard on doorsteps? I'm kind of wondering where you see the future of this industry going. Every time I think about paper and packaging and e-commerce, I'm trying to figure out how I get less on my doorstep. I throw tons of this stuff away every week. What happens next in this industry? Where does the innovation come from in this industry as you think about where this business that you're creating today is going to be in a few years' time? Is it just a scale business, or is it an innovation business?
I think it's an innovation business at the heart of it. I think we've been innovating since 1934 in Smurfit Kappa. So I think what you're seeing, though, is an ever-increasing push from the consumer to less destructive materials in the environment and more sustainable materials at heart. So, I know you get a lot of cardboard dye, but I think you'll find over time it's probably less air in the box, less waste in the box, less other substrates in corrugated, and fundamentally lighter. So it's over time we have a policy to reduce waste fundamentally, and that's the innovation in cardboard. I suppose what we've seen in the last number of years is the ability of cardboard to replace less renewable substrates, and that's going to continue.
And Ken, where do you see what is happening in e-commerce right now? You've got a ringside seat. You're part of the process. What is happening there? Where are we in the economic cycle? We're all trying to understand whether the US economy is rolling over, whether the European economy is rolling over, what's happening around the world. What insight can you give us in providing the packaging that we all get our stuff delivered in at the moment as to what volumes look like? I know we're near the cycle bottom at the moment. Do you see it picking up? Is that consumer driven? What is going on?
I think we're beginning to see it, Guy. I think what we've seen in the first 6 months of this year is certainly an element of destocking, which we think is largely done, if not all done. I think we've also seen people prioritize, travel, leisure, services over durable goods, particularly in the kind of post-COVID world. E-commerce has been a kind of constant underpin to that kind of volume and growth demand. More mature markets in the Americas, clearly more North American than Latin, and Europe's still growing. I think what you're going to see in e-commerce in the years to come, though, is a kind of broadening out of the value proposition. So less brown box, more high-end, more returnable, more customer-focused and driven. That idea that the customer wants a personalized brand experience in e-commerce just as much as the retail environment. And that's still a very small part of those volumes. So I think the opportunity around that still remains quite large.
I'm still getting a box like this big for something that actually is this small. Ken,
not from Smurfit Cap, Alex.
This is true. Agreed. Hey, Ken, talk to me about when you wind up merging in terms of how you're going to be looking at the labor force, in terms of how much synergy there, and are you at all tempted to kind of hold on to labor because we don't know what any kind of real bounce back is going to be within Europe and the U.S.?
I think the competition in the labour market globally is seriously hot, and we recognise the talent that exists in the WestRock team. And I suppose the beauty at the outset of the transaction, it's largely a very big bolt-on transaction. So that sort of doesn't even enter the equation for most of the businesses we run here. But I think it's about retaining talent in this environment than letting talent go, Alex.
Do you think you're going to have any regulatory issues with the deal? There are areas where you're going to have a pretty big footprint. Are you going to have to offload anything, do you think, Ken, to make the regulators happy? Somebody flagged to me earlier that maybe Mexico could be a problem, maybe some other markets as well.
No, we have relatively limited overlap in most of the countries in which we operate, and don't necessarily have competing products. Mexico is a country where we both have a reasonable presence, but we don't currently see any issues from a regulatory perspective.
Ken, look, it was so good to catch up with you. Really interesting. Ken Bowles, Smurfit Kappa Chief Financial Officer. So, Guy, I do think, though, that how companies wind up treating their labor force and dissecting it, whether or not they're merging, will be quite interesting in terms of the labor hoarding. We're going to speak about this in just a moment, but the NFIB, labor is still an issue. And you have to wonder how much that will distort the jobs data.
Absolutely. It's interesting, the latest NFIB data, it seems to signal that actually companies, A, are still dealing with inflation, and B, are still dealing with labour market issues. I still get a lot of boxes in which you get one small thing and one big thing.
Yeah.
That may not be a Smurfit Kappa thing. I imagine you get a lot of boxes.
Less than I used to, but nice try. For my daughter's birthday, though, I feel like literally we got huge boxes for like a little teeny tiny decoration, but no shopping. All right, that's what he's
trying to get me to say. There was a time when my children would play in the boxes, but no more.
Oh, yeah, no, she wants to create designs of the boxes, and then we just stays there in the apartment forever. All right, anyway, we digress. We're about an hour into U.S. trading session. Stock's trading a little bit heavy. Abigail Doolittle is tracking the moves. Abby?
Yeah, and it almost feels a little bit surprising, Alex, because we've had this bit of a rally for stocks, breaking up the drop that we had. So basically a lot of choppy action over the last few weeks. But today, it's not a big decline, but for some reason, it almost feels heavier than it is. The S&P 500 down 0.4%, the NASDAQ down more. So clearly big tech taking a bit of a hit. We'll be taking a look at that in a moment. We also have some pressure coming from the Bloomberg Dollar Index, and then yields up slightly, not in a huge way. So investors, of course, waiting for CPI. We'll be taking a look at what they're waiting for in a moment. But we do have one star sector, and that is, of course, energy, not just higher on the day, but over the course of the quarter, we have the energy sector up 12.4%, headed for its first only up quarter of the year, the best quarter since December of 2022. Oil has put in, for me at least, what's a total stealth rally up back above $90 a barrel, perhaps a combination of the OPEC plus cuts and maybe some idea that demand here in the U.S. is okay. I'm not sure. It's hard to almost put the narrative together on it, but oil is clearly higher. On this, we have ExxonMobil trading up 2.5%. Tesla just moments ago had been up more than 1%, perhaps still some afterglow at that time on the Morgan Stanley call, but now down just a little bit. Apple, though, take a look at this, down 1.1%. Now, this is not so surprising. They, of course, have their iPhone reveal event, their product reveal event today, and I believe most of the days of this event, the stock does drop, so that's pretty typical. Something I would point out, though, that the valuation on this stock is really pretty high. The growth is low, so investors could be thinking about that. Plus, after the quarter, and then more recently, we've had this massive decline for Apple, or a pretty big decline. Technically, the stock is challenged. The sellers are really waiting to pounce. They're doing that clearly today. But take a look at the sellers here on Oracle, down nearly 13%, the worst day, I believe, since March of 2002. The quarter was actually okay, just high expectations around the cloud. There was one downgrade, but it seems that investors are simply not willing to tolerate it. Now, I would guess that a big factor, of course, will be the Fed next week, but tomorrow we, of course, have CPI. I've never taken a look at CPI this way, but it's kind of interesting. So if we take a look at core CPI on a month-over-month basis and headline month-over-month basis, but analyze, this is really interesting, Guy. And again, I've never taken a look at it this way. We're actually at the Fed's target. We're at 1.93%. Now, I don't think the Fed looks at it this way. They're really looking at PCE, and they're looking at the month-over-month figures. But if you wanted to have a little bit of hope here, maybe there it is.
I'll take any hope I can get. Abigail, thank you very much indeed. I hope for amazing things coming out of California a little bit later on. It is 7:32, time for the starter. 7:32 on the West Coast, that is. Top tech stories from the Bay Area and beyond. Silicon Valley very much starting its morning with a lot of anticipation. Cupertino, that's the live shot. That's what you're looking at. They're all getting ready. It's early in the morning, but everybody's excited, including Bloomberg Technology co-host Ed Ludlow. Ed, it's a big day. Is it going to live up to expectations? Yeah. How different is today?
Yeah, it just comes down to how substantive the hardware or technology upgrades are for the latest generation of iPhone, right? What we're expecting is 4 variants of an iPhone 15, a base model 15, 15 Plus, and more importantly, the Pro models, iPhone 15 Pro and 15 Pro Max. And the strategy from Apple has been really clear. The three of us have talked about this on the show for years. You reserve the most serious technology upgrades for the higher end Pro models, right? And that's where we expect next gen A17 processor, proprietary silicon, next generation camera technology, taking magnification from the hardware side from 3x to 6x on the Max Pro, and titanium sides as opposed to stainless steel sides because people get upset about finger smudges. Is that enough to drive an upgrade cycle? That is the question for the market.
Literally been talking about that upgrade cycle at least since 2016. Ed, I understand this is a big event for the Apple lovers. I understand how it's maybe a buy the rumor, sell the news, or vice versa, just on tactical trade. But like for a broader investor, what are really going to be the standout moments? Is it going to be that certain phones that were going to be distributed are made in India, for example? What's the broader look?
Yeah. I mean, John Ferro told me earlier this morning that there's a strategist out with a note saying that whatever happens behind me this afternoon will have a macro impact on the global economy and markets. So, you know, that's an interesting line to take. But 7% of the S&P 500 from a weightings perspective. iPhone is 50% of revenue, but that revenue is $200 billion in 2022. So the scale that we're talking about is important. We get a good read later on the consumer, just depending on how substantial those hardware upgrades are. You know, I think if you're an investor as well, Apple, frankly, is at the heart of news flow recently on political risk, the relationship with China. I don't know if you guys saw the story overnight from Bloomberg that this will be the first iPhone launch where a made in India handset will ship straight away. Usually it comes 6 to 9 months later. That tells you a lot about the situation that Apple is in.
Yeah, I'm sure that was welcome news for the news flow for Apple executives after the China mess. Ed, thanks a lot. You can catch Ed and Caroline Hyde and Bloomberg Technology coming up in about 90 minutes. Great view. Ed will also be back in the next hour digging a little bit deeper. So Guy mentioned it earlier that the NFIB Small Business Optimism Index did fall in August, with 1/4 of respondents saying inflation is their biggest concern. Joining us now is Holly Wade, NFIB Research Center Executive Director. Holly, this is one of my favorite economic indicators because so many surveys just cover large companies, and it's the small businesses here that really drive it. What were your biggest takeaways here?
Yes, so the 49-year history of the survey has never seen an environment quite like this for small firms. And looking at the index, it did slip a bit in August. It's now the 20th month below the 49-year average of the index, and small businesses are pessimistic. They're not optimistic about what business conditions look like going forward. But the interesting part of this is that the labor dynamic is still really tight for small business owners.
Yep.
And they're still struggling to fill those open positions.
Holly, they're disappointed, but are they frustrated as well? Is there a sense that you've got this economy where the consumer is looking really strong and wants to spend money, and they're not able to satisfy that demand? How much frustration is there?
A lot of frustration among small business owners. So that's one of the areas that we've talked to many small firms or small business owners about, is that they're not able to capture all of the sales opportunities that are available out there because they're not able to fill those open positions like they would like to. And they're competing on the wage front, still strong compensation increases in the small business sector. And so they're doing all they can. It's just still a difficult environment for them.
So I also wonder if this changes how they think about hiring/firing down the road. Like, they're not going to give up workers because they're so afraid of getting into this again, which then winds up distorting labor data in terms of the underlying strength.
Sure. Well, they don't quite have the margins for labor hoarding as maybe some of the larger firms are able to do, but certainly competing to retain those employees that they have on the payrolls currently, and again, competing to attract applicants for those open positions are huge challenges for them. And still, almost a quarter are saying that it is their single most important problem in operating their business right now is labor quality. The other quarter is inflation, and that picture hasn't changed yet for small business owners. So inflation pressures and the tight labor market are still the two biggest obstacles for small business owners.
Holly, how are small businesses being treated by big businesses?
Well, right now, for those who are, either in the supply chain of a big business or competing directly with big businesses, that's a challenge. But for the most part, small business owners are selling to, the general public. And so that hasn't kind of crept in as a larger issue for most small business owners. Still, that's one of the questions that we have on our list of kind of the single most important problems that we ask them. And still, that has remained a relatively small issue for those who are in that environment. Inflation and labor quality are the top two.
Holly, any sense as to how small businesses in the survey feel about the consumer? I feel like we talk a lot about, they're going to crack, household savings is coming down, the cushion is coming down, student loans are going to kick back up. You have a sense of that from the survey?
So actual sales expectations going forward have slipped a bit. So we have seen a bit of deterioration on that front, but not markedly where we would anticipate a recession, in the next quarter or so. They're still missing those sales opportunities for a lot of them because they're not able to fill those open positions. So that's one of the main challenges. Poor sales, while it is impacting a few small businesses out there, especially those who are in the position where their customers are financing the product or service that they're purchasing, and those costs are rising and impacting that customer base. But for the most part, consumer spending has been very supportive of the small business sector so far.
Holly, love Love the perspective. Thank you so much, Holly Wade of the NFIB Research Center. I mean, I think that says it all, right? Like, we keep talking about the clouds that are coming for the consumer, but they're not there yet. They're just not there yet.
Well, I thought the fact that she talks about the fact that Holly talks about the idea that actually the small businesses are frustrated. The demand is there. It's the supply side, the issue on inflation, getting the goods at proper prices, the labor story. There's a frustration that they can't satisfy maybe all of the demand that is coming towards them at the moment.
Yep, and then still prices are still high. I mean, that feels like still a different signal to the Fed than maybe what the narrative in the market is discussing. Anyway, coming up, we're going to take another look. You got DHL, talk about shipping and packaging here. They're launching their first network flight to Argentina. The company is expanding its global shipping network. We're going to get more on that with Mike Parra, DHL Express America's CEO, who joins us with more. This is Bloomberg.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
From New York City.
From London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. JetBlue has traveled a long way from its startup days, but CFO Ursula Hurley says growth won't change the airline's quirky attitude.
At the end of the day, we view ourselves as a disruptor and a maverick in the aviation industry, and I'm really excited to play a meaningful role in that growth journey.
Watch Chief Future Officer, Wednesday on Bloomberg.
We're actually seeing iron ore imports year on year for August up 9%. Steel production continues to do well. I think the Chinese are going to be over 1 billion tons in steel production again this year. I think we are just in the beginning of seeing growth because of what the Chinese government have put into place over the last few months. Europe's steel industry has been in a recession. And again, last month, we just started to see a little bit of growth again in the European steel industry. So we're fairly optimistic going forward.
That was John Wobensmith, Genco Shipping CEO, speaking to us yesterday on global growth and kind of some green shoots they're seeing potentially in China. So Mike Parra, DHL Express America's CEO, joins us now with more on global growth, any challenges facing the industry, and where you guys sit. Good to see you.
Thank you.
Thanks for joining us.
Thanks for having us back.
So can you just give us like a wide lens, sort of where are the strengths in the global economy, where are the weaknesses as you guys see it?
Yeah, so first and foremost, uncertainty remains. We're really aiming towards really a jump back or point to increase in Q2 of next year. But what we are seeing is we're seeing the China plus one starting to happen. So we're seeing it in Mexico. So this comment of made in Mexico is a reality. We're seeing growth coming out of the north side of Mexico as well. E-commerce remains strong, so we're seeing that continued growth, and we expect a soft peak season forthcoming, and that's what we're planning for. Our business to business is flattish, which is a good sign as well, and we're starting to see some recovery in some of the other countries. We're starting to see growth in the Americas, so we're starting to see nearshoring, omnishoring, friendshoring, depending on what terminology is being used. And as a result of that, we're well positioned as an organization to support those organizations that are growing in whatever market they're in.
Mike, good morning. It's Guy. Lovely to see you.
Yep.
Our question of the day is it Buy America? And basically the premise is this. China's got a problem, therefore Europe's got a problem, which means America doesn't have a problem. Money's flowing towards America. How would you compare the Asian economy, the European economy, and the US economy right now?
Well, what I would say is one of the great things that we're starting to see is our outbound business out of the U.S. is growing right now. We are still seeing some growth out of Europe and out of Asia. It's just happening in different markets. But we're seeing a stronger growth outbound from the U.S. and more specifically in the space of e-commerce.
What do you think peak season looks like?
It's going to be soft. It's uncertain. We're going to know a lot more here towards the end of the month, this month in September, early October. That's going to be a clear indication for us. What we have seen is on the ocean, that is softened as well, which tells us that inventory levels are reducing, but everybody's not in a hurry to replace them, number one. The good thing for us is that once they get in a hurry to replace it, we're right there to support them through our fixed air network operations. But soft is what I would say, and we'll know more towards the end of this month.
Are we still in a services-driven economy, Mike? We were talking to Smurfit Kappa a little bit earlier on, talking about what is happening with the e-commerce side of the business. They obviously provide the packaging. You provide the way of getting it there. What do you see right now? Is it still about experiences and restaurants and Taylor Swift? We'll talk about Taylor Swift later, rather than stuff turning up in cardboard boxes.
We're seeing a bit of both. Obviously, experiences were the big winner this year, and we saw that also through the increase in air travel costs that you would have seen as well as I did from that perspective. But e-commerce, we are seeing a growth. It's been resilient from that perspective, but more money continues to be spent on experiences, and we expect that to continue into next year as well. But we are ready and we are equipped for the growth of e-commerce that will happen. If there is a peak season, we stand ready to do it. If there isn't, then we'll just stand down appropriately.
You sound pretty confident that once inventory is worn down enough that you'll see a buildup again.
Yes.
What if we stay in a just-in-time inventory scenario versus like we're going to build some stuff and let it sit there?
Yeah, well, we win through that process because
so either one you're saying you win?
Either one we're going to win in either, and we prepared ourselves from that perspective. One of the great things about our company is that we've got a flexibility in our air network, and we've had that. We've been flexing down over the last 18 months, but at the same time, we're going to new markets. Argentina is an example where before we were using a commercial airline, now we're using our own aircraft. Brazil, we were using commercial, now we're using our own aircraft. So we're able to flex up and flex down rather quickly. And from a just-in-time perspective, if you think about what happened during COVID, commercial airlines started to take down capacity. We have a fixed air network operation. We can flex up or flex down during times like that.
Mike, did you say that there is a risk that there may not be a peak season?
No, what I said is there's going to be a soft peak season, is what I said. Now, it's going to follow around the same guidelines of what we saw last year. So we're planning for similar growth as we saw last year, and we're planning for continued growth specifically in the area of e-commerce.
How do I make sure that I don't get a little thing in a big box Again, that was the question to Smurfit Kappa.
We were just talking about that offline before we came on air. I was saying to Alex how my wife is a big purchaser of Amazon goods. If she's listening, she knows this. And we were talking about how we get an Amazon box that has 2 very small pieces. I think as time goes on, innovation goes on, and change in packaging style goes on, you're going to start to see smaller shipments arriving at your home.
It happens on a regular daily basis at my house as well. Mike, great to see you. Thank you very much indeed. Mike Parrott, DHL Express, America's CEO. Thank you, sir.
Thank you.
Okay, coming up, SEC Chair Gary Gensler telling Congress this hour the crypto industry is rife with fraud and abuse. We're going to get more highlights from his testimony in just a moment. This is Bloomberg.
Regulatory regime that will govern any analytics tool and is inconsistent with decades of legal and commission precedent regarding the handling of conflict of interest, including the Commission's own fiduciary.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open. Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
SEC Chair Gary Gensler is testifying from the Senate Banking Committee this hour. He said the crypto industry is rife with fraud and abuse. Bloomberg's Kaylee Lyons is on Capitol Hill right outside the Senate Banking Committee's hearing room. Just kind of in, just kind of out. What have we learned so far, Kaylee?
Well, some of this is stuff we've heard repeatedly from Chairman Gensler, including that line about the crypto industry being rife with fraud and abuse. He also said he couldn't talk about any ongoing litigation processes because, of course, he's been dealt some poor hands in court lately in regard to the Ripple ruling or the Grayscale ruling, for example. I actually spoke with the chair of this committee, Democratic Senator Sherrod Brown, asked him if the courts were saying in not so many words that the SEC should be regulating crypto differently. He said there are some judges that are just Wall Street hand-picked. He also said there are members of Congress, Wall Street acolytes, who will say that the SEC is overreaching, doing all of these things. But broadly, he is defensive of Chairman Gensler and his leadership of the agency. Really, this hearing so far has been kind of divided on those partisan lines. Democrats, by and large, are supportive of what Gensler has been doing. They actually, in some cases, are pushing for him to do more on things like climate. Elizabeth Warren, the senator from Massachusetts, told me she'd like to see more in that regard. But Republicans are much more critical. They're more likely to say he's overreaching. They've had some questions of their own, not just in terms of climate disclosures, but around things like hedge fund rules as well.
Is the sense from this, and we haven't seen Gensler for a while, is there any update here, Kaylee, on what Gensler is saying? You talked about the fact that some of the lines have been repeated. We haven't heard from him from a very long time. Do we get a sense of where he's going next?
He's always pretty reluctant to make news in that regard, Guy. And again, he has said he cannot discuss ongoing litigation, and really that is where a lot of the news would be made. But there also is the question of whether or not he's actually going to change in the rulemaking process things like Scope 3 emissions, some of those climate disclosures that have received a lot of pushback. So far, we haven't gotten a ton of new information, but of course, he won't just be appearing here in the Senate today. He also, toward the end of this month, will be appearing in the House Financial Services Committee, and those members are likely to push him even harder than what he's getting today.
Hey, Kelly, before we let you go, Google's trial finally, I feel like, starts today. Can you set it up for us?
And so it might be something.
Yeah, it starts today. It's going to last for a long time, 10 weeks. It's expected to go until November 15th. But of course, this is significant because this is the biggest tech company that's going to a monopoly trial with the U.S. in 25 years, since Microsoft back in the late 1990s. And this is the first time that the Department of Justice, together with state attorneys general, have pursued this kind of action against a tech company since then. Their central argument is that Google operates a monopoly by paying billions of dollars a year to be the default search engine on mobile phones and on browsers. Google says that those agreements it has with certain companies are benign, that the choice is still there. Competition is just one click away, but this is really the fundamental argument. And I spoke with Senator Elizabeth Warren about this case in particular, asked her if Google should be broken up. Here's what she said.
This is a company that should be broken up. This is a company that has used multiple tricks to try to make sure that it is the only company that anyone uses for search and that everyone has to use for advertising.
So that's the words from the senator, but we'll see how things play out. Again, this trial going to last for several more weeks, guys.
Kelly, thank you very much indeed. Lines in a corridor. Great work, as ever. Thank you very much indeed. Kelly Lyons joining us from Capitol Hill. Okay, coming up, the European close. Kiran Ganesh, UBS Multi-Asset Strategies, is going to help us answer our question of the day. Is it that simple? Do you buy America? Certainly, that would be the story thus far. That is the story coming out of the Bank of America survey. European luxury certainly has been dinged up recently, as have the...
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real real-time numbers, real-time analysis. Weekdays. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Tuesday, the 12th of September, European stocks, to be honest, drifting. We're waiting for US CPI. There's some individual stocks like Smurfit that are really interesting. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Big picture, nothing to see here. European stocks drift a little bit lower. Continuing theme, volume's actually all right today. Check the AVAT function on your Bloomberg. 455.38, we're down by 0.2%. The euro's drifting a little lower as well. We're down by 0.3%. Still north of 107. We're waiting for CPI data. We've got the ECB, though, coming up, haven't we? We're going to watch that very closely. The individual stock story, once again, remains, I think, really interesting. I know this is a macro-driven market, but these single names are fascinating. Smurfit Kappa, the one that really stands out today. We were talking to the CFO a little bit earlier on. Basically, a bolt-on acquisition in the United States. They're buying Westrock. The market, though, a little concerned about the distraction that maybe this provides. The company says, this is the time to do this deal. This is the time for us to get bigger in America. The stock, though, down by nearly 10%, Alex.
Well, here in the U.S., Guy, we are picking up a touch of steam to the downside. NASDAQ 100 off by 0.8, S&P off by 0.4. One reason is going to be Oracle for sure. That stock down 12%. That doesn't look like a lot, but if you look at a chart with moving averages, there is an enormous gap down to below the 100-day moving average. Really tremendous. So cloud sales disappointed. It just shows also the kind of optimism that may be in some kind of these tech names if they wind up missing. Now, also to point out, in the S&P, energy stocks best performer, and this is the why. Crude, New York crude, not Brent, WTI is almost at 90. OPEC says there's a 3 million barrel oil a day deficit in the next quarter, despite the fact that they're still trimming production as well as Russia. Very big head scratcher for me, and that's really helping support this price. They want oil between 80 and 90. That to me is the base case. Really tough for the Biden administration. And the dollar up by 0.2%. So that relief we got yesterday from a weaker dollar, totally not the story today, Guy.
Yeah, let's talk about our question of the day. Let's talk about what is happening here. The Bank of America survey providing the bedrock for this. Buy America, that's the question. That certainly seems to be the narrative coming out of that survey. Or is it just sell China? And where does that leave Europe? Alex, I think this chart really sums this question up really neatly. What you've got here since the beginning of the year is the Euro Stoxx 600 in white. That's the car sector. That's the 600's car sector. Then you've got the Bloomberg Intelligence, BI, European Luxury Goods Competitiveness, peers sector. Basically, that's the luxury sector. I probably should shorten these down a little bit. And then you've got the NASDAQ 100. You've basically got this scenario, which I think is kind of backed up by this chart here. You've got China, which was expected to do well this year, but hasn't. And that then ripples out across the global economy, into the emerging markets, then into Europe. And what is left after that is America. So that's where the money is going. And that continues to be the theme. Got the NASDAQ there. European cars, massively exposed to China. European luxury, massively exposed to China. Both of those roll over. Takes down a little bit, but by no means as much.
Yeah, it's interesting. Kyle Bass was on with us yesterday, Heyman Capital Management CIO, and he talked about sort of how he sees the Chinese economy, like dire straits, as in like, don't even bother investing.
You've got the Chinese economy circling the drain. You have the real estate market falling apart. You've got what? Every single private developer is in some stage of bankruptcy today. And you've got about 190 billion worth of offshore bonds, dollar bonds, in some sense of default.
Takes us back to our question of the day. We asked it in the last hour. We're going to continue asking it in this hour. Buy America. Is this an equity market story where you just want to be stateside? You don't want to be anywhere else? Joining us to discuss, Andy Hoffman and Eddie van der Walt of Bloomberg M Live. Andy, let me start with you. Is this a buy America or just don't buy everything else? China looks terrible right now. We've just heard that. By extension, Europe doesn't look that clever. What's left? You buy America.
Well, that is certainly one way to look at it. But looking at it from the perspective of European luxury stocks, we've seen this sentiment sort of start to play itself out. I mean, we saw LVMH, which was not so long ago the most valuable company in Europe. We've seen that come off quite a bit. We've seen Novo Nordisk, the pharma company, overtake it as the largest stock here. We've also had, some luxury CEOs, important executives say that things are slowing down here in Europe. We saw Johann Rupert, who is the chairman of Richemont, which is one of the biggest watchmakers and certainly jewelry makers with Cartier, say that they are starting to see inflation finally bite and take a chunk out of the European consumer. That's something to worry about. They warned about a slowdown in the U.S. a long time ago, back earlier this year, and now they're starting to see that perhaps we're on the other side of that. China's disappointed everyone, there's no doubt about it.
Yeah, and we had to price that out after pricing that in. Hey, Eddie, is it a sell everything else, buy America in terms of stocks?
Yeah, look, if you're going to price the US versus Europe, and then, by extension versus China, because in many ways those are the same play. I think if you're going to price it that way, then yes, America looks great, the US looks great, and that's where investor money has been flowing. And the US is outperforming the global shares so far by a fairly small margin this year, mainly because it is such a big part of the basket. But I think that overlooks one particular big market that I would like to draw attention to. I think Japan is a very interesting market. I think if you start to see policy normalization, and particularly with the slowdown in China, I think Japan could do very well. It's also very well positioned, on things like, on the tech front and on the hardware behind tech. And I think that for those reasons, I think other markets, Korea, for instance, I think those kind of markets could do really, really well. I think investors will have to be creative. But I think if you're looking at this kind of, just the world, split the world in two between Europe and the US, then yes, absolutely the US.
The question I think you've got to answer, Eddie, is how do you persuade US investors to take that opportunity? At the moment, there does seem to be a massive home bias. I'm wondering how good the opportunity needs to be to overcome that home bias. Everything else doesn't look as good as America at the moment. And I think that's the struggle for US investors at the moment. Yes, there are going to be pockets, and Japan is more than a pocket, but nevertheless, how do you overcome that home bias at the moment?
Yeah, I think at the moment, one of the big drawing cards of the US for an outside investor has been a firming dollar, and I think that will play in its own way for the equity market. Of course, that will make US goods more expensive around the world, but I think you're seeing that turn in the dollar now, and I think just from a portfolio allocation perspective, you've got to take that dollar headwind that I think investors are going to start seeing and take that into account. And I think that will probably make other markets a little bit more attractive. And look, the dollar has been the flip side of the everything rally. So if you see the US, the dollar starting to weaken, there's going to be a lot of other markets that suddenly start looking attractive.
Yeah, we had that for like a day, and then it changed back. Andy, I'm curious, when we talk about pricing out the strength of the European and Chinese consumer for top luxury, where are we in that process? Do we have an idea yet?
It's a good question. I mean, Eddie was talking about the US dollar, and we've had a lot of the Swiss watchmakers here are obviously producing and paying their workers in Swiss francs, start to complain about the weakness of the US dollar and the strength of the Swiss franc. And they're saying that if that gets much worse, this is going to be a big problem for them with that US consumer. They're going to have to raise prices. And if they raise prices significantly, that's going to put them in a different category. And that is going to have a significant impact on the sales. So that's something to watch if we're thinking that the U.S. consumer is the strength point here and is going to save certainly luxury and high-end goods that are produced in places like Switzerland.
Andy, can I ask you a sort of bigger picture question? In some ways, the European luxury sector has been one of the biggest beneficiaries of QE. Money has been cheap. We've seen, and Richemont were talking about this, 10 years of excess they talked about. Yeah, Rupert was talking about that. The US tech sector, in some ways, is a much more forward-looking animal. It is driving innovation. It is driving productivity. There is a case to be made for the impact that it's going to have. It's not simply just a beneficiary of there being too much money in people's pockets that they need to spend. Is that the fundamental difference, you think, that is going to widen out between these two sectors?
Well, I think it's a very good question, and obviously we're hearing a lot today from Apple, and I'm not the first person to say this, but many would say that Apple is a luxury company. Apple's products are luxury products. I mean, you know, an iPhone is $1,000. This is not a cheap product. And the question is, did people buy more Apple products when they had better access to capital and cheaper money? Is that going to play out for them in the same way that it may play out for luxury? At the same time, when we're talking, let's not forget that when we're talking about very high-end luxury goods, watches priced at over 10,000 francs, when you're in that price point, it doesn't matter that much. You can be quite immune to the impacts of QE and of cheap access to capital.
Right. $1,000 iPhone may be a bit different. Hedy, before we let you go, we were talking to Anastasia Amoroso that the rally in oil is also a good Buy America sign because we wind up exporting so much of it. What are your thoughts on that?
Yeah, I mean, that's an interesting one. The US obviously is in an interesting place, and it does the fact that it's exporting, but it's also a big consumer of oil, and I think it's a good sign that there is underlying demand, and I think that demand probably coming much more from the US than from China. So yes, I think that is a good sign for the US, and it will obviously support the US dollar, on the back of those exports as well.
Guys, really appreciate it. Really good conversation. Andy Hoffman, Eddie Vanderwall. Thank you both so very much for joining us. So coming up, more on the question of the day. Do you buy America? Kieran Ganesh, UBS multi-asset strategist, joins us with his take next. This is Bloomberg.
What do you worry most about your economy and Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that in 5 years from now we will not have sacrificed the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
And the markets are on the move.
The focus, of course, is on Ukraine.
The market is so hyped up about AI.
Unless we see dramatic changes, it's just going to keep getting hotter.
For further market analysis, we're going to go get straight to some breaking news. We'll have a full roundup.
Going through some of the numbers.
And what investors should make of them.
We have so many important conversations. Let's check in what you need to know.
The discount of Europe relative to the U.S. is at one of the highest levels we've seen. But I always look
look at a formula, which is valuations plus positioning plus a catalyst. And, yes, you may have a valuation that is cheap, but what is going to be that catalyst that is going to propel Europe high near term, for example? But for now, what I know is the earnings revision story, for example, in the U.S. is the catalyst for U.S. stocks.
Anastasia Amoroso of ICAP speaking to us, to Alex and me a little bit earlier, talking about our question of the day. Let's go back to our question of the day. It's a fairly straightforward one and seems to be getting a lot of traction. Buy America. Is it that simple? Joining us now, Kiran Ganesh, UBS multi-asset strategist. I'm talking about equities here. Is it that simple? Is it China doesn't look very good, therefore Europe doesn't look very good, therefore actually what you really want to own is the United States?
I think to take a step back, you have to buy America. If you're a private investor in equities, at least half of your equity allocation really needs to be in this market because you've got some of the best companies in the world there. It's the biggest equity market in the world. I think the question we really have is how much America? In the MSCI world, it's now 63% of the weighting. We think you need to be a little bit less than that because we think that's getting a bit too concentrated in one country, a bit too concentrated in some of the big tech names. So we suggest a bit less than that 63% allocation. And then, of course, there are opportunities elsewhere in the world.
Well, Karen, though, if a large portion of allocation is in U.S. equities, isn't that just a bet on big tech? Because over-concentration is so intense.
Yes, and I think that concentration risk is something that we're thinking about how to manage. And for example, one area we're recommending to our clients is to look at the equal weighted S&P 500 instead of that market cap weighted index, because then you have a bit less concentration in those big names, a bit less concentration in tech, and a bit more exposure to the rest of the S&P 500, which is actually at much lower valuations than when you look at an index level.
Is it about, though, buying America, or is it about not buying everything else? China was expected to be really big this year. It hasn't turned out to be really big this year. And by extension, European luxury is starting to suffer a little bit. The European car sector, big exposure into China, starting to suffer a little bit. European mining sector, big exposure into China, suffering a little bit. Is that the story? Is it not about buying America, but actually not having much choice other than buying America?
I think in terms of short-term catalysts and earnings growth, then clearly the US has got a lot going for it. We're seeing these big upgrades in earnings related to that AI demand story. But when you look in the rest of the world, you do have more of a value argument. So if you're looking to build a longer-term portfolio, then having that exposure to the rest of the world is important. If we look in Europe, we're trading on 12, 13 times price-to-earnings ratio. That should be good for long-term returns.
Should be, but they've been cheap for a while.
Yes, but if you're earning those earnings yields over time, you're distributing those dividends, that should compound over time. And then in emerging markets, China has been problematic, but we're looking at markets like India, getting a lot more investor interest now. Some of the external difficulties have now eased. So we think places like India will be able to deliver capital returns, and they have done over the course of the past couple of years.
So what does that then mean? When we say buy America, does that mean buy the dollar too? Because then that also throws off that other part of the thesis.
Yes, and the dollar is one area where we are more cautious. So we think that the Fed is probably done with hiking interest rates, and we'll see soon what happens with the ECB, but we think that they are going to hike again because inflation is a bit more embedded in Europe. So from a currency perspective, we do expect to see more strength for the euro relative to the US dollar, and that should also support some of those returns of the ex-US markets if you're doing it in an unhedged way.
We're talking about equities here. Let's broaden and widen it out. What about US bonds? What do we think about the bond market right now? Do you want to buy American bonds, or do you think bonds look better elsewhere?
So we think that US yields will fall quite sharply because, as I said, we think the Fed is done with hiking rates and the US is likely to slow. People have been quite bullish about some of the resilience in the US economy. But we do think that bond yields are going to fall quite dramatically over the course of the next year. So we're looking at around 3.5% on the 10-year. So it's almost a full percentage point lower than we are today. So we're going to get good price returns from US bonds over the next year.
Really? So it's not about just getting the yield. It's about, you really think, capital appreciation.
Yes, absolutely. I think in a portfolio context, you're getting that capital appreciation due to a slowdown in the economy, which might be causing issues elsewhere in the portfolio. So we think that is valuable. So it's both yield and capital appreciation when we look at the bond.
So you're more in the Matterhorn camp than the Table Mountain camp. It's not higher for longer.
No, so we think the yield, interest rates are likely to come down over the course of the next 12 months. The Fed will indicate that we need to keep rates higher for longer, but we do think that once inflation starts to get close to that 2% target, and once growth falls below trend, then there's going to be little stopping them from cutting interest rates.
You should have seen my eye roll guy when he brought up tabletop or Matterhorn. He's all over this divergence with mountains. Karen, What do you think the ECB is going to do on Thursday? And how do you sort of position for that?
Yeah, so it is a close call. This is one of the closest calls at an ECB meeting we've had for a number of months. We think they are likely to hike because you have seen inflation remaining relatively resilient. We've got obviously oil prices now moving up as well. So we do think a hike is likely from the ECB, but it is a relatively close call. In terms of positioning, as I said, the euro is a currency which we like. We think it's going to appreciate against the dollar over the course of the next 6 to 12 months. So we're talking to clients about how to manage exposure to the dollar and the euro around that.
In terms of kind of what happened, what's your degree of certainty as to what happens next? Is the rest of the year on a glide path? Is next year looking less volatile than this year? One of the themes that I constantly get from investors when I talk to them is this idea that whatever the narrative is, you can't expect it to last for long. There's a short-term story, which I think is probably more relevant to sort of hedge funds and traders, and then there's a longer-term kind of more thematic story. Are you guys convinced that the sort of thematic story is on rails at the moment? Or do you think that actually in this current volatile environment, some of that kind of long-term thematic stuff is still looking vulnerable? Because people are really struggling with how to invest. And when they invest, they're getting whipsawed out of positions.
I mean, we actually think that this is a pretty good time to be investing compared to recent months. So we've got a bit more data and certainty about how the US economy is performing. We've got now real wage growth is now positive, so that suggests that consumers don't need to dip into their savings anymore. So that's a support on the economic side of things. And then we look at the story across asset classes. Bonds, we talked about, good yields, good capital appreciation. And on the equity side of things, we've got a combination of either quite well-valued markets, but also this growth story in terms of AI, which I think creates a bit of an upside potential story for next year when we look at some of the earnings forecasts we're getting in terms of upgrades for the tech sector. So we think it's a pretty good time to invest across asset classes right now.
All right, Karen, thanks a lot. Karen Ganesh of UBS. We really appreciate it. So some breaking news for you. House Speaker Kevin McCarthy says that he does back opening a President Biden impeachment inquiry. He's making some comments now on Capitol Hill. This is in part to satisfy some of the Republican hardliners as they sort of work towards trying to get a budget done by the end of the month as well to avoid a full government shutdown threat. So he says he is open to potentially backing a Biden impeachment inquiry.
That's why today I am directing our House committee to open a formal impeachment inquiry into President Joe Biden. This logical next step will give our committees the full power to gather all the facts and answers for the American public. That's exactly what we want to know, the answers. I believe the president would want to answer these questions and allegations as well. This effort will be led by Chairman James Comer at the Committee on Oversight in coordination with Chairman Jim Jordan for Judiciary Committee and Chairman Jason Smith.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
there's a bunch of stories we're watching which really stand out today. One of them which really kind of strikes a chord with me, Alex. UBS talking about moving some Credit Suisse staff out of Canary Wharf, out of the wharf, relocating them into the City of London to the UBS offices that are just round the corner from here. Just another company that is moving staff out of the wharf. And I think this is an ongoing theme. I don't know if you know, the difference is quite stark. You work in the City of London, it's got its kind of quirks. You work out on the wharf, obviously that's a kind of purpose-built environment. Some would argue maybe a little more soulless, harder to get to, certainly from places like Waterloo. It's an ongoing process, and it seems to have turned from a trickle into a wave recently. And I'm wondering what happens, therefore, to the wharf.
Canary Wharf has all the shopping stuff, right? Aren't there like really nice shopping centers in that?
Yeah.
But it was before the pandemic.
But it doesn't have the vibe that the City of London has. Doesn't have that kind of. It doesn't have the same social element. Maybe doesn't have the same quirkiness that the City of London has. It just doesn't have the same feeling. And despite all the train lines, it is still kind of for many people a stretch to get out there as well. Then you've got to get back from it as well. Talking of train, I understand you've got a train line issue. I get a train line issue on a regular basis over here. Nobody ever talks about it. We get a train line issue in New York City. It makes the front page on the Bloomberg.
Okay. We were going to talk about sports, but you're making me go to Amtrak, so fine. Okay, so the train basically between Penn Station and Jersey are facing delays. But yeah, because there's like no other way to get there except if you take a bus out of Port Authority, which is not a very good option, or if you already had a car that you're driving in. Apparently, they're operating and significant delays due to a disabled commuter train. When you have Amtrak saying significant delays, that does not sit well.
Daily basis here. I appreciate we're not on an island. We are on a big island, but we're not on Manhattan Island. You wanted to talk about sports. I feel you should have an opportunity to do that.
Yeah, but it's too late now. We got to go to break.
So well.
Computer's going to cut us off.
No.
I can't do Aaron Rodgers in 10 seconds. Go.
I understand he's got an ankle issue. Not a great investment. Anyway, rugby's much more important. I'm not going to do the pre-close either. We've kind of run out of time there as well. But the close is coming. This is Bloomberg.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
doesn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We're wrapping up the European equity session. To be honest, unexciting. Alex still wants to talk about sports. Maybe that opportunity will present itself later on in the show. You never know. Today, what's happening? DAX is down a little bit, 0.5%. CAC's down a little bit, 0.4%. FTSE's up a little bit, 0.4%. These are not exciting markets at a headline level. Below the surface, there are things happening. Oil is certainly an interesting trade. Look at what is happening stateside with WTI. You've still got this kind of ongoing theme around what is happening with China, and there's some M&A that we need to focus on as well. Here's the session. We've been kind of on a gentle glide path lower. The stock 600 is down by 0.2%. Volume's actually all right, which is interesting, given the lack of kind of index action. We are, to a certain extent, I think, probably waiting for CPI tomorrow. ECB coming up as well. Smurfit Kappa, down nearly 10%, announcing the Westrock acquisition in the United States. We spoke to the CFO in the last hour. He says it makes sense. The market is questioning that a little bit. There's a concern that maybe it is a distraction. Smurfit stock getting knocked down on the back of that. Stellantis, the car sector is actually doing okay today. Stellantis, one of the standout stories. Keep an eye on what is happening with the UAW. Maybe looks like Stellantis is making progress. That stock certainly responding to that. And then you've got a JP Morgan upgrade on HelloFresh. The price target has been upgraded by JPM. I think they put it on their focus list as well. The stock is trading at 31.97, which is kind of where they were in their previous target. They haven't upgraded the rating, they've just upgraded the price target. The new price target is 38. It's a significant headroom on that stock. It is really responding today to that note. We're up by over 8%. That's today. Let's talk about tomorrow. I'm sure it's going to be significantly more exciting. Ursula von der Leyen is going to be delivering the State of the Union with regards to the European Union. The European Union has a lot on its plate right now. Then we get UK industrial production. The data today out of the UK I thought was fascinating. What you've got is very strong wage growth, but actually some loosening in the labour market, which is fascinating. We'll see how long that continues. The wage data, though, does pose a problem for the government when it comes to pensions. Eurozone industrial production as well is going to be worth watching out for. We continue to see this industrial slowdown. Are we nearing the bottom? And then we come to what I think will be a really interesting story tomorrow. Inditex, the Xara, is going to be out with its numbers. You're going to get H&M, Henderson Maurits later on in the week. This stock has had a great run so far this year. Are the numbers, Alex, going to live up to expectations?
Yeah, and also what they say about theft, which has really been prevailing across all retailers. So apparently the company is facing a pretty daunting challenge in that area, deterring those thefts. The company is trying to iron out some bugs in its new anti-shoplifting system, and the company did away with those hard plastic tags on clothing and instead put RFID chips into security tags. But staff said in several countries they're raising alarms that the new technology is actually making theft easier. The thieves can go in and sort of rework the chip. But this is a huge problem. You heard it from all the dollar stores when they talked about that. Target's also suffering from it. We've seen pictures and videos, I don't know if you have online, about like flash mobs when it comes to retail theft. This is a huge, huge problem.
The struggle is they can't make it work. And actually, I think there is a bigger story here from an Inditex point of view, which I think is fascinating. They're using RFID because this is a company that has really pushed forward with trying to meld together its e-commerce offering and its store offering. And RFIDs have been one of the factors that has been behind that. And it's been hugely successful, that plan. It hasn't worked necessarily on dealing with shrinkage, with dealing with theft, but it speaks to the idea that this is a company that is doing very well in A, managing its inventory and managing that inventory story, Alex, in store and online. And the fact that those two are becoming so interchangeable is one of the huge opportunities for this business.
Yeah, they were one of the big winners in the pandemic because they had that just-in-time inventory anyway, so they didn't have all the massive discounting that you saw and currently continue to see. So let's get more on Inditex. We are joined now by Jeffrey Demendez, Bank of America Global Research Consumer Discretionary Research Analyst. Great to see you. What's your target rating on the stock, and what are you looking for tomorrow?
Yeah, thank you very much, Alex. Thanks for having me. So tomorrow they're going to be, Inditex is going to be reporting Q2 results pre-market. We're expecting 15% growth for the quarter and close to 18% EBIT margin. So overall, we are slightly ahead of consensus expectations, about 4%. So we expect another strong print from Inditex tomorrow.
You've recently upgraded your forecast. So you're clearly expecting this company to be going places. It's had a really good run already this year. Can we keep this going? What's necessary to keep it going?
Yeah, so that's how we actually approached the investment case and the upgrade that we did recently, is to find that next leg of earnings upgrades that we expect to see in the next 12 to 18 months. We have about 10% upside to consensus numbers. And the way that we see this happening is through revenue growth. The company has been growing about 15% their revenues year to date, when the industry is like more something like mid to high single digits. And it's not a coincidence. It's because the company is reinvesting heavily into its supply chain, into its product, into its business model and marketing. And we think that this is going to continue. Just to give a couple of numbers, they've recently announced that they're going to increase their CapEx, the capital expenditure investment, to 1.6 billion, which we think is going to continue over the next 2 to 3 years. To put that in comparison, the second biggest spender in apparel retail is H&M, and they will spend half the money Inditex is spending. So they are just trying to expand the gap relative to the competition to maintain that leadership in retail.
Jeffrey, usually though, that would be a bad thing. Like we look at that and say, ooh, too much CapEx spend, that's a no-go. Why is it a good thing?
Because, thanks. Actually, it's a good question. Look, I think the market is expecting or is looking for companies that keep on gaining market share in consumer, because potentially that can be the driver of earnings growth going forward. I think we need to remember that Inditex is a cash generation machine. They have about 18% EBIT margin year in, year out, when the rest of the sector is closer to mid-single digits. So the point that we're trying to make here is that Inditex is one company that can afford spending in order to preserve that competitive advantage. Just to your point, when they announced that increase in CapEx, which was at the full year results, that was unexpected by the market. The stock went down about 5 to 6% on the day, potentially because of this, but it then very quickly recovered because investors value the fact that the company can reinvest and gain more market share.
Inditex versus Hennes, how do you see them as investment opportunities?
Look, Inditex is the best apparel retailer that there is in the sector at the moment. It's very strong in terms of execution. It's a top-line growth story, and it's a compounder. Okay, so it's a high-quality business. H&M is a different story. Not that it's not a high-quality business, but H&M is about a margin recovery story. It's a turnaround story. So maybe you have more risk toward H&M because there is execution risk around the turnaround story, but potentially you could have more upside if they can deliver on this. The good news about Hennes at the moment is that they really started their turnaround story this year, and they have absolutely executed on this. You can see that the share price has been a strong performer so far this year. They're going to report results later, or sales trading update later this week. We're going to have maybe more indication on the back of this.
Jeffrey, we started the segment talking about theft. What do you expect to see as the hit from H&M and Inditex on theft?
So this is something that usually they don't really communicate on. We've read the press reports this morning from Inditex. They say that it's not a material impact on their sales. And on top of this, the fact that they said that the rollout of the new technology might be delayed, they also mentioned that it would not be incremental impact on their revenue. So look, let's see if that actually happens. But I can't remember the last time Inditex or H&M really flagged out theft as being an issue. Although I must recognize that in the broader retail space, this seems to be a newer and a bigger phenomenon that happened really recently in different regions. So maybe we're going to hear about this, but look, so far we haven't heard anything.
The RFID thing has, though, really worked for Inditex, hasn't it? I keep reading more and more about the fact that they have this integrated supply chain, that you go into store, that you can collect from store, that they can manage inventory. How big an advantage is that?
So the big advantage that you can see is on inventory management and on their ability to replenish products basically every 3 days. So when you're a store manager at a Zara store, you have no incentive to buy too much inventory just for the next 3 weeks, because Zara at headquarters level will be able to replenish your stores every 3 days. And you can track all this through the RFID. It's very important. That's the technology that allows it. Yep. And therefore, on a store basis, there is rarely excess inventory at Inditex, which means there is rarely discounts, which means the margins are higher. That's the difference. It's brought by this technology.
That's where I was hoping you're going to go. These are the words that Alex Steele never wants to hear. No discounting.
It's true. That's why I don't shop there. I don't shop there because of that exact reason.
Yeah, well, I'm sure the shareholders are very happy then.
Totally, yeah.
Jeffrey,
but, I'm just saying.
Very nice. Nice to see you. Come back and see us again soon. That was great.
Thank you very much.
Jeffrey Mendes of Bank of America Global Research. We're done with the day. Let's take a look at how we finished the session. These are the final numbers. Talking of sales, the DAX is on offer, down by 0.5%. CAC as well, down by 0.3%. London's standing up a little bit, but these are markets that are drifting, looking for a sense of direction. Maybe we get that direction from Apple a little bit later on. Next, we're going to take you live to California. We are awaiting the launch of the brand new line of Apple products. We're going to find out exactly what they're going to mean for you and Apple. Next, this is Bloomberg.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really it's not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. We do a breakthrough. We look at technologies that could produce remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons, a year in terms of what we have to replace.
Steve's ability on the course may not etched into any records, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
So we are just over an hour away from the much anticipated reveal of the Apple iPhone 15. Yep, we're up to 15. It's like now tapes. We're now expecting new AirPods. We're expecting a new line of Apple Watches that are going to be more powerful. For details on what we can expect, Ed Ludlow of Bloomberg Technology, as well as Anurag Rana of Bloomberg Intelligence, they both join us now. Ed, we talk about things being new. How much of what we're going to see today is new?
Yeah, I think this is probably the largest upgrade refresh cycle that we've had for some time. What we expect is 4 variants of the iPhone 15, iPhone 15, iPhone 15 Plus, but as is in line with Apple's strategy, the biggest technology upgrades are reserved for the higher end Pro models. It's everything from the aesthetics, a titanium side as opposed to stainless steel, through to the compute. We're expecting Apple's next generation A17 processor to go into the Pro variant, whereas the base model 15 and 15 Plus will just borrow last year's iPhone 14 Pro processor, the A16. And a big question is, A, how many units of prior generations of iPhone are out there? And B, how much traction does that new technology get? I guess the question for Anurag is, how much does he need to see to be convinced that those with older generations of iPhone are actually convinced to go out and spend more money based on the tech upgrades?
Anurag, you don't need me. Go ahead.
Yeah, from my point of view, the only thing I'm looking for is there a price increase in the Pro Max, and how much is it? Because that's what's going to drive iPhone sales for next year. It's not going to be a double-digit increase in unit shipments. That's not where we are seeing. We are seeing an elongated refresh cycle of the smartphone industry, and Apple's not immune to it. So those are the things that we are looking for, is the price increase. Because the second thing is, and we just saw it last week, China is a wild card in this story because China has done very well in the last quarter. We are going into a quarter of very easy comparisons compared to last year. But if there is any spike in nationalism in China and they choose not to buy the iPhone, then it's not a good year for Apple coming in.
Well, Anurag, I feel like there'll be hay made about certain parts being made in India, or a made in India phone shipped the same day that they actually do go on sale. What should I really be reading here between those lines, Anurag?
Yeah, see, the phones made in India are not the Pro model. They are the base model. They're going to drive a little bit of growth in India, but it's not. I mean, that's really not a needle mover. China is the big market for them at this point. Down the road, maybe 5 years from now, India is going to be the big growth driver. But right now, it's going to be China, and it's going to be the refresh cycle from last year.
Ed, the watch hasn't had a significant upgrade, certainly in processing power, for really quite some time. How big an upgrade are we going to see here? And as the watch starts to gain kind of traction and ability, does it compete with the iPhone directly or indirectly?
Well, what Apple would say to that is that it's about the sort of installed base of devices and convincing existing iPhone users to expand the number of devices that they have. What Bloomberg's reported is we expect 2 watch updates. The Apple Watch Series 9 in 41mm and 45mm sizes, and then a second generation Ultra, which sticks with that 49mm size. And then they'll talk about the relevant iOS update. With emphasis on healthcare, right? That's been a big story for Apple in trying to position the Apple Watch as something tied to health and health data. But again, I go back to the iPhone, and the wild card for me in all of this is China, kind of tied to what Anurag said, that how do you price in the impact of government policy on China on the consumer's willingness to buy or upgrade an iPhone 15? Whether you're a sell-side researcher or you're on the buy side, that's impossible.
So I have to wonder if the path of least resistance for the stock then, Anurag, is just going to be up. It's already gotten down by, 7% so far this month. Is it a sell the rumor, kind of buy the news no matter what?
I think when we get more clarity on what's happening in China in terms of unit shipments, which is going to be over the next 1 month, that's going to dictate the way Apple shapes up, because that really, otherwise, for the next 12 months, we're not going to see a massive uplift in iPhone sales in terms of revenue. And, that really dictates what happens to Apple. It's not the watch. It's not any other device. It's really the iPhone combined with the AirPods. Those are the 2 most important products in our view.
Yep, I gotta get those AirPods. All right, guys, thanks a lot. Really appreciate it. Good luck. I know it's a long day for both of you, Ed Ludlow and Anurag Rana of Bloomberg Intelligence. Thank you so much. All right, here's another story I'm watching. I finally get to talk about it. In football, the New York Jets won last night's game against the Buffalo Bills, but fans are pretty bummed, and I know this from literally walking through my office. So So less than 5 minutes into his Jets debut, the superstar quarterback tore his Achilles tendon, putting an end to his season. That puts a major damper on the team's Super Bowl dreams. And it's been a very long struggle for those Jets fans. The last time they won a Super Bowl, 54 years ago in 1969. It is the only Super Bowl the team has ever played in. But interestingly enough, Aaron Rodgers had recently just renegotiated his contract, and he still has, like, what, 75 mil or something? No, the whole thing was about 75 million. Oh, 75 million is fully guaranteed money. And overall, his contract was about 112 million. So even if he can't play, like, he's going to be okay.
I think he's going to be okay. I think the fans will be okay as well. But this is what makes sport great. This is what makes sport so exciting. You just don't know what's going to happen next. You can think you're going to know. In some ways, older player, danger of doing some sort of a sporting injury, definitely in there. That's probably why the contract was written in the way that it was.
Yep.
But yeah, things happen. That's why sports is exciting, Alex. That's why it is so good. I appreciate you talking about it today, but this is why we love it.
I really feel like this is a metaphor for doing live TV with you also. You never know where it's going to go. The old guy can kind of go anywhere. It's really exciting.
Sorry, are you talking about me or somebody else?
You! We have a plan, but it can go anywhere. It's what makes anchoring with you fun.
I can't believe you just called me the old guy. That's my new title. Look, I'm probably old to play professional football, but I'm definitely still okay to play this game.
You're definitely not the oldest on air. It's just true.
No, this is true. This is true. Wow. Just being called the old guy in a segment we're talking about some old guy hurting his ankle. We old guys, we take this stuff seriously.
We don't like
to be called old.
There's a plan, and he goes off the plan.
Just so you know, just in case people are watching, we've got this new benchmark that we're going to set up, Alex and myself. Basically, everywhere that Alex shops is now a short. Yes. And everywhere she doesn't shop is going to be a long. Basically, if you discount, she shops there. If you don't discount, you're going to make some money.
There should be an index for this.
We're going to work on this. This is the new index play. Can't believe you call me the old guy.
This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Stocks trading a little heavy here. Abigail's tracking the moves for us. Abby?
Yeah, they certainly are. So here we have some green. These are a couple of the sectors that are actually higher, but the S&P 500 and the NASDAQ right now, both down. That S&P 500 down by about 0.4%. The NASDAQ down closer to 0.8%. And you can see that these two sectors under more pressure, communication equipment, so think of your Googles and those sorts of names, and then tech down 1.1%. So we've had a couple up days Today, though, breaking that, and a lot of it has to do with Apple. We, of course, have this big reveal event on the day. Typically, the stock does sell off, maybe a classic sell the news. If we take a look at Apple in the month of September, it's doing the opposite of the S&P 500. Yesterday, we looked at the S&P 500 chart in the month of September, and it's going against the typical September green, up just a little bit. But take a look at Apple, down 5.8%. And, of course, there was last week on that news around the China ban of using Apple in certain settings that could really weigh. Their numbers right now are declining. It's scheduled for growth in the December quarter, but if that China ban really hits, maybe it's going to continue to have low growth for Apple. What does this mean for the NASDAQ 100? Well, we're kind of in a holding pattern here. On the year, we do have this beautiful uptrend, and it's worth noting that these recent dips are holding it. I would say, though, this is right around the 50-day moving average. Apple has already gone below the 100-day moving average, sort of begging the question, Guy, on this rounding down RSI, are we going to see the NASDAQ 100 and the S&P 500 perhaps follow Apple back below the 50-day moving average? And what would be the impetus? I almost think it might be more macro, like CPI, PPI, retail sales, or next week, the Fed.
Macro matters, like single stocks matter as well. I'm not sure. I think Apple probably fits the bill of being both. Single stock, but actually macro in reality. Abigail, really nice. Thank you very much indeed. Abigail Doolittle on the market. So what are we watching? As we've just been hearing, Apple's annual product launch kicking off in around an hour's time. New super high-end phones, but apparently it's all about China. Right now, about the same time. No, right then about the same time. I could probably learn to read better, but I'm old, so my eyesight doesn't always work. The US Treasury will be auctioning off $35 billion worth of 10-year notes. Barclays Financial Services Conference also underway in New York. I think Morgan Stanley's having a good day off that. Today's speakers, Walmart's Doug McMillon, Barclays CEO CS Venkatakrishnan, and Goldman Sachs's David Solomon. We've also got, talking of age, Alex, and maybe showing it, the MTV Music Awards.
You joke, but the reason why I really care about this is that for the first time ever, only women are nominated in the show's Artist of the Year category. Taylor Swift, Beyonce, Doja Cat, Nicki Minaj, Karol G, and Shakira are contenders for the prize. I feel like this definitely fits with the Taylor Swift Barbie economy that we've seen.
There's some great statistics. I think the Taylor Swift economy in the US this year is bigger than 50 other countries. Absolutely amazing. Yes. Anyway, MTV, I remember it back in the day. Back in the day.
Yep, this is Bloomberg.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more
That's for sure, with 2 more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow, live in Cupertino, here at the Apple campus. Behind me, the Steve Jobs Theatre. This is a special Bloomberg Technology for coverage of Apple's iPhone event.
So much to digest. Coming up on this program, we'll have, of course, that extended coverage on Apple, its product launch, as the company, of course, faces internal chip delays, restrictions in China, and a shifting supply chain. We'll break down everything you need to know, and we'll cover Google's biggest antitrust challenge yet. That's as the Department of Justice and 35 U.S. states sue the search giant, accusing it of maintaining a monopoly over the search market. More details ahead. And we'll hear from Endeavor president, that's Mark Shapiro, as the company completes its takeover of WWE and combines it with UFC to create a newly publicly traded fighting giant. We'll talk the streaming implications, all that and so much more ahead. But first and foremost, we've got to be discussing what's happening in the world of Apple. And this really is an exciting time in terms of the 15 launch. I almost feel we know exactly what to anticipate. We always know our reporting is so strong here at Bloomberg. But there is a lot of headwinds facing Apple. Do you think that we can see the tailwinds today?
Yeah, and it's why the iPhone is everything. That's kind of the key of what we're expecting. 4 variants of the next generation iPhone 15, a base model, an iPhone 15 Plus, and then a Pro and Pro Max. And as you know, Caro, Apple kind of reserves its biggest technological updates for those Pro lines. Higher price point, it raises the average selling price. Is it enough to convince the consumer to upgrade? We know there are tens, if not hundreds of millions of older generation iPhone handsets out there. Are they going to be able to boost volumes, or are they going to rely on higher prices? That's going to be a key question.
And are we going to see revenues start to increase again? This is, of course, the key $200 billion juggernaut of Apple's revenue, that is the phone. Let's dig into it all. We're so pleased to welcome Mark Gurman to the show, of course, who has already kind of braced us for what to expect throughout the announcements. But is it all about getting them to pay a higher price point, Mark?
Certainly, Apple is pushing, like Ed said, its latest features and advancements to the higher end models, right? They're going to be differentiating the Pro models from the non-Pro models more than ever, right? And on top of that, the highest and the most expensive Pro model, the iPhone 15 Pro Max, is going to have additional features like a periscope camera, which essentially means it can have a much wider range of zoom using hardware. So being able to zoom in double the amount you could on the regular 15 Pro without degrading the quality of the image. So certainly they're pushing people to the top with the better cameras, titanium, and faster performance.
You know, Mark, there's a big emphasis on the higher-end processor for the Pro and Pro Max, right? A17, you've reported about Apple's latest generation processor, additional memory. So there's a compute factor there, but there's also a battery life factor. And then, of course, not of Apple's own volition, a European Union mandate for USB-C. Talk to us about what you've reported on those 2 items.
Yeah, the 3nm chip, this is going to be Apple's first 3nm component. This is a chip manufactured by TSMC. And what 3nm allows is better battery life and better efficiency. So you'll see some battery life upgrades on the 15 Pro and 15 Pro Max because of that. And of course, back to that differentiation point, the higher end phones will get that A17, whereas the lower end, the 15 and 15 Plus, the 2 entry-level phones, those will both get the A16 chip from the 14 Pro and 14 Pro Max from last year. And in terms of USB-C, all 4 models will get USB-C instead of Lightning. But there is a little bit of a trick here because the Pro models, they're going to get USB-C with faster data transfer speeds, which would be good if you take very high resolution video on the Pro models to connect them to your computer and transfer them over a cable. You'll be able to do that at a much faster rate with some specialized Thunderbolt cables than you would on the regular models. So certainly the talk of today will be how the Pro models are going to have extra bells and whistles to really bring people up to the higher end models.
Great, so all those lightning cables I've been accruing since 2012 are now completely redundant. Thank you to Bloomberg's Mark Gurman. We're just getting started here in Cupertino, and I'm delighted to bring in Creative Strategies Principal Analyst Carolina Milanesi. We will get to the USB-C debate. I think the big discussion we've had on Bloomberg Technology has been there is an unknown number of older generation iPhones out there. If it's the tens of millions or hundreds of millions, we've reported and what we think is coming. Is the technology upgrade enough to spur this genuine upgrade cycle?
I think it is. If all the rumors play out, Mark was talking about moving people to the higher price point. I think there's two markets, right? You have the early adopters and the Pro users that can do that, but then you have a huge base of people that have devices that are 4 or 5 years old that need to continue to go on that path. So creating more separation between the Pro model and the non-Pro model is critical to get those people to move up.
As you know, I focus a lot on the technology from a sort of processor compute standpoint, but actually switching to titanium sides or edges is interesting. Why would that make a difference in the smartphone market?
I can tell you that just from a consumer perspective, getting into the store and holding one of those new phones is the most tangible expression of the phone being different, right? Weight on something that you use so much during the day makes a difference. It might also invite some people to go to the larger form factor because the weight is no longer the factor that is deciding whether or not you want to carry something that heavy. There's obviously a sustainability story as well linked to titanium. And it'll be interesting to see how far Apple is going to push that sustainability story today.
USB-C. Did Apple wait too long? The European Union mandate is for the end of 2024 deadline, but they're going now. What impact will that have?
It makes it easier for people that are within the ecosystem. It's one less cable, but as Mark was talking about, for the Pro version, if it does do the higher data, it's nicer for creators, right? It's actually useful. It's not just about doing the mandate for the requirement. It'd be interesting to see how they spin the story because we all been waiting, and from a portfolio perspective, the iPad has it, but the phone does it. And so you start to see, discrepancies within the portfolio. Now we have one cable across the board. I'm sure that the AirPods will also get a new case with the USB-C.
I am all in on one cable. Carolina, tell me a little bit about how they're going to spin the green element. You just took us there a little bit, the sustainability narrative. Feels as though that's going to creep into the watches as well.
It seems so with materials, and there's been a lot of speculation about abandoning leather, both with their own bands and with the relationship with Hermes. And I think that if you look at Apple's DNA around sustainability, they always had a very strong story. They have a goal to be carbon neutral by 2030 across their supply chain and products. They're already carbon neutral for their own operations already today. And so it'd be interesting to see whether the material is one aspect of it. We saw the badges today are all recycled. There's no plastic in today's events badges. So it seems like sustainability is definitely going to be a story.
What about the watch in general? How much are they continuing to want to innovate on that particular product? How important is it to them?
It's a very important product to them just because health and fitness is an important story to tell, and they have made a huge impact. It's been interesting to see how much the Ultra version of the watch has taken consumers by by storm. It's not just for the fitness. When we were talking about this actually on the program and said there's a lot of wannabes health and fitness people that will buy this watch. So for Apple is another way to lock customers in, and I know that they hate that term, but it's true. If you have your phone and your watch, it's harder for you to move away and move to a different brand and ecosystem.
Carolina, the company story for Apple has really been China. Yes. In the June quarter, it was a record in Greater China, 8% growth when there was overall decline. How important is this iPhone 15 for that market? Does it get traction with the consumer in China?
It's very important, and I think the story about the processor for the Maxes and the Pro is important for China. China has always been a market that is more about real technology, and so processors is something that they look at very closely versus design and materials. So I think that separating that Pro line with a different processor, with a dedicated processor that can give you more, is going to be really critical for China.
Carolina Minolesi, Creative Strategies Principal Analyst. This is a strong start, Caro, to our special coverage for Bloomberg Technology of Apple's iPhone event.
Brilliant with you on the ground there, Ed. Let's get back to what's happening in trading more broadly, because actually it's a bit of a risk-off day around the Apple wait-and-see mode. Of course, some earnings that come and stump the market. We're off by 0.5%. Interestingly, in the commodity space, we're seeing a drive higher, oil on the higher side. OPEC saying, look, we've got a tight market. I'm looking at what's happening in Bitcoin, though. Actually higher versus the US dollar on the moment. We're seeing it up by some 4%, so volatility back a little bit with Bitcoin. Move over and see what's happening on individual micro levels, though. And I want to draw attention not only what's happening in course of Apple shares off by 0.75%. PayPal getting a bid, tightening its relationship with Uber, going to be expanding that payment processing. But I'm looking at Oracle. This is the other story of the day. It is down the most. I had to triple check. The most since 2002. This is as this company is saying, look, 30% revenue growth in the cloud. It's not good enough. They wanted to see more in terms of the overall analyst community and the investor base. We think hard, and it drags a lot of other names to the downside. But back to Apple in a moment. This is Bloomberg Technology.
What do you worry most about your economy in Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that in 5 years from now we will not have sacrificed the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands which are more sensitive.
Let's talk about Google, facing its biggest antitrust challenge yet over accusations it's maintained a monopoly over the search market via, of course, those agreements with tech rivals. The company facing a pair of lawsuits by the US Justice Department and state attorneys general.
that could result in perhaps even the breakup of the 25-year-old search giant? For more, let's bring in Jennifer Reed, Bloomberg Intelligence Senior Litigation Analyst, who's been listening in already to some opening statements. Does this feel reminiscent to the 90s?
You know, it does. It really does. And there's so many parallels being brought to the big, huge case against Microsoft that I think we all know about. And the thing is, it is similar. You know, there are allegations. You know, Microsoft was entering into agreements to try to block out Netscape and Java. And the allegation here is that Google's entering agreements to try to block out rivals like Bing and DuckDuckGo, other companies that people would use to search the internet, right? So there are a lot of similarities there, but there are also some very big differences because of what these tech companies have learned from the Microsoft case.
And to that end, the argument's going to be coming from Alphabet, the parent company of Google. Are they in any way going to diverge from basically what we learned in the 90s?
Yeah, I think so. Look, they're going to say, we've done nothing to prevent anybody from using Bing or DuckDuckGo to search the internet. You know, in Microsoft's case, it made it very difficult for anybody using a Microsoft PC to download and use Netscape, right, as a browser. They technically made it difficult. You could not do it. But in this case, actually, it's quite easy to change your default search engine. Google may have that agreement to start as the default when you buy your device, but you can go in and change your device. So it's questionable as to whether is this really foreclosing Google competitors or isn't it? And so we're going to have to see how that testimony comes out about how sticky it is to be the default, how much users actually do switch back and forth.
And isn't it interesting that it's coming all at this moment where we're suddenly thinking the monopoly is under attack from ChatGPT-4, the idea that AI is really the competitor of choice now?
You know, the interesting thing about technology is that the markets can change so quickly and so drastically, you know, and this is one of the things that all the tech companies will claim. Look, I may have a monopoly now, but this could change any day, and we're always trying to hold on to our position. And technology changes, and you really can't judge it sort of the way the antitrust laws are judging it right now. You know, you have to think about ChatGPT. I tend to think ChatGPT is a bigger threat to Google, actually, Google search, than this particular trial.
Interesting. Jennifer Reed, we're so pleased to have her here from Bloomberg Intelligence. And look, we want to dig into the legal ramifications a little bit more, the arguments being set forth. For Rebecca Allensworth, Professor of Law over at Vanderbilt, it is wonderful to have your perspective here, Rebecca. And the track record thus far of the government in the antitrust cases, it ain't been good. I mean, are you bracing yourself that perhaps they could land this one?
Well, all antitrust trials are really hard to win, and this is no different. The government's arguments are good, and I think that if they have a chance of winning in any case, they have a chance of winning in this one. I do take issue with the idea that their track record has been bad. It's true that they've lost a lot of cases in terms of the final outcome, but along the way, there have been some important holdings that I think actually vindicate the current enforcement attitude that the FTC and the DOJ is taking.
Let's dwell on that a little bit, because this isn't just about winning individual fights, but it's about sort of changing the narrative, the leaning of how future FTCs as well and future administrations might just tackle big tech. Do you think that has changed?
I think it has. I mean, there's a case from about 15 years ago, actually involving Google, in which the court said that there cannot be any antitrust harm in a market for which consumers don't pay for the product. And that just is not likely to be the holding in this case, because we've realized that free products aren't really so free. So that's just one example of how, yeah, it's changed over time.
In terms of the technicalities of this particular case, how do you think the arguments will land thus far when you're hearing of the $10 billion being paid by Google to maintain basically key relationships with phone makers? How do you think the alternatives are going to land coming from Google?
Well, I think that they have some strong arguments too, honestly. So they're going to argue two things. They're going to say, first of all, we are big not because we have these exclusive dealing contracts, but we're big because we're better. Consumers have voted. That's what competition is supposed to do. And we won. We're the best search engine. They're also going to say that these are not actually exclusive dealing contracts. Competition is just a click away. This, I think, is a less strong argument. And I do think this is a lot like the argument made in the Microsoft case. But kind of put together, there's an intuition that, consumers really like Google. They're not downloading Bing and DuckDuckGo to their phones, and that's competition. So that will be hard to overcome for the government.
We're looking at a year-to-date chart of Alphabet shares right now, up 54%. It doesn't feel as though the investor and analyst community are particularly fretting over some sort of big breakup or impact to the overall revenue streams for this business. That's largely about where artificial intelligence takes us. But for the here and the now, Rebecca, do you think that some sort of risk does need to be factored in? How do you think that people are bracing themselves?
So I think as far as market risk, I don't know that this trial poses a huge risk to Google's bottom line. And that's for a few different reasons. First of all, I think that they're more likely than not to win. I think that maybe speaks to the weakness of our antitrust laws. But the other thing is Google is big and Google is dominant for reasons other than these exclusive dealing contracts. I think a breakup is unlikely. I think even if the government wins, what they're going to get is an injunction against these contracts. And it's a small piece of why Google is so dominant. I think this trial matters more for precedent and for antitrust law and for what it means for the rest of tech.
Rebecca, really great to get your expertise. We thank you so much, Rebecca Allensworth, Vanderbilt Law School professor. This one's going to roll on, so I have a feeling we'll be inviting her back. Meanwhile, coming up, look, cage matches. They've become part of a technology show much more than I ever envisaged. But let's have a look at WWE and the UFC today, combining as a public entity, trading on the New York Stock Exchange. I'm going to be discussing it all with Endeavor COO Mark Shapiro. That's next. This is Bloomberg Technology.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside? Time now for Talking Tech. First up, Arm, preparing for the biggest IPO of the year, and its CEO is pitching investors with a bit of a pivot. Instead of focusing on chips for smartphones and other electronics that sell for pennies, Arm is doing complex design work, it says, focused on specific products tailored for what sees as a key area of growth, of course, largely being AI. Currently, its listing is oversubscribed by 10 times. Plus, Alibaba will put artificial intelligence and user experience at the top of its priorities as its new leadership seeks to reclaim customers and indeed market share. CEO Eddie Wu laid out his vision in a memo to staff, stressing its approach to go AI first, while not forgetting the hundreds of millions of users that help create one of China's largest corporations. And senators here in America will question the nation's top technology leaders as Congress confronts threats posed by what they see as a rapid rise of artificial intelligence. Tomorrow, it's going to be a closed-door inaugural AI forum. You're going to see these two gentlemen, Elon Musk, Mark Zuckerberg, also Sundar Pichai, and others who are going to be attending to answer questions and concerns of the burgeoning technology. Meanwhile, talking of those two individuals, Zuck and Musk, remember we were all talking about cage matches? Well,
we're talking also fighting more broadly, the billions of money it brings in. Endeavor today completing its takeover of WWE and combining it with UFC to create a publicly traded fighting machine called TKO. That's technical knockout, being the boxing term. Now, earlier I discussed the news with Endeavor and now TKO's COO and president, that's Mark Shapiro. And this is what he talked about in terms of competition. Take a listen.
The market completely overreacted last week because ultimately PIF came out and said they were going to make a $100 million investment in the PFL. And you know what? We're fans of the PFL. We're fans of any entity that supports MMA for the UFC. Rising tide lifts all boats on this front. And the UFC is where everybody wants to get to. I mean, the UFC is really the NFL of combat sports. So we welcome it. I think the overreaction was really about fighter pay. If there's more and more competition and there's more and more brands coming to the table, is fighter pay going to get out of control and hurt UFC's margins? And it couldn't be farther from the truth, because the real growth of UFC, the revenue growth, has been driven by high margin revenue streams, such as our media deals and sponsorships. And at the end of the day, any fighter pay increase can be absorbed by the increases we're seeing in those revenue streams and results still in margin accretion.
Let's talk about the board that, of course, you said that you're going to be controlling, but there's a bit of a key man risk with being McMahon himself of WWE. How do you see that and his real dedication as executive chair to the overall TKO?
He's very similar to Dana White. I mean, Vince McMahon is very similar. He's a founder, he's a pioneer, he's an innovator, he's a hard charger, he's got unbelievable relationships, and he's grown this sport from nothing to be the global behemoth that it is. So I welcome him being executive chairman. Ari and I are very excited to partner with him. And just in the early days, while we haven't been able to kind of get in there and really integrate, we've already seen a willingness to do that. Terrific communication, terrific collaboration, and I think Vince really recognizes the areas of business he has under-monetized, or his team is under-monetized, and that's why the merger, the partnership here, because we can teach them something, meaning UFC and Endeavor, and WWE can surely teach us something. And at the end of the day, 1 + 1 = 5.
He's been subpoenaed, though. Is there a legal risk?
What I would say on that is, federal law enforcement and regulatory agencies, they are doing their investigations, and there will be due process, and we're not going to get involved in that. We'll stand by, we'll listen, we'll take our cues. He'll be executive chairman, he'll do his day job, and if somebody else tells us something we need to do differently or pivot, course correct, we will.
And let's talk about coursing and charting a course in this economic environment where you are seemingly very excited by the opportunities to monetize, to get more brands in. But look, brands are scared to spend money right now. The economy is volatile, to say the least. How do you see that?
What I see in that is the 30-second spot. Traditional ad budgets are certainly being compromised. But from an activation standpoint, an experiential standpoint, which is where we sit, right? We have 350 events annually. We have 1 billion fans. We have 1 billion social followers. Advertisers want access to those fans.
Meanwhile, we've got to talk Apple once again. We're going to be joined by Mirabel Lopez, founder and principal analyst of Lopez Research. Her take on what to expect from the key event. This is Bloomberg Technology.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. We are going to check in on these markets on the all-important day ahead of CPI print for macro, day of micro news when it comes to Apple. Looking at the NASDAQ 100, just off about 2/3 of a percentage point. There is some nervousness out there regarding some of the big macro headwinds and indeed, well, some of the read across from earnings that I'll dig into in a moment. Bitcoin, though, actually getting a bit of a push higher at almost 5% on the upside, 26,300. And remember, there's a lot of volatility in overall crypto as we anticipate whether there'll be FTX sales. But we also think that Franklin Templeton seems to be adding its weight into the rush to get a spot Bitcoin ETF, adding a little bit of, well, music to the upside on Bitcoin. I'm looking at Bloomberg Commodity Index up 0.1% despite a stronger dollar today. That's more about the strength of oil and OPEC saying they're seeing these tight markets. Let's move on from the macro to the micro pictures. I want to shine a light on what's happening with Oracle. As I said, having its worst day since 2002. We're up by 12%. We see revenue growth not living up to expectations. They actually put in 30% increase in terms of cloud revenue, but the market wanted higher. We're seeing also Intel on the upside, actually divesting some stakes in a nanofabricator in particular, IMS, and we're seeing it, well, 10% stake being offloaded. That makes the shares just rise about 2%. They're selling it to TSMC. And I'm looking, lastly, at Apple. Maybe there's the question of how much we're still worried about the headwinds of China. We're worried about the chip implications of still having to turn to Qualcomm. Ed, we're off by 1.5% as we anticipate those big unveils over there where you are in California.
Yeah, these Apple events are always a bar is high for the market moment, right? There's been 12 iPhone launch events going back to 2011. On the day, the stocks ended up down 9 out of 12. So that's kind of the precedent that's set. There's so much more to recap. With 30 minutes from the start of Apple's Wonderlust event where we're expecting 4 variants of the next-gen iPhone 15. Let's keep the conversation going. Maribel Lopez Research Principal Analyst, joining us on Bloomberg Technology right now. One thing we haven't quite talked about is the camera upgrade on the Pro and Pro Max. Historically, camera upgrades are important. How important are they this time around for Apple?
Well, predictable, they're a very popular feature with consumers. They're looking for better cameras, and this time we have the opportunity to get a hardware-based sensor option combined with AI software, so we expect it's going to be a big leap in performance and perhaps what all the Wonderlust is all about.
Caroline and I have been very busy for the last 7 days talking about what's happening in China. Bloomberg reported that China's central government is expanding a clampdown on the use of foreign handsets, in particular iPhone, for government agencies and state-backed enterprises. Is that a concern ahead of a big launch of a next-gen iPhone for Apple?
You know, we see it's still posturing right now. We think it's a long way from a wholesale ban on Apple tech in China, but it is concerning because it starts with the government and then it could roll into government-owned companies or government shall we say, government-controlled companies. So there's a lot of opportunity and risk associated with this right now, but I think it's still too early to call it as an issue for iPhone sales in the near term.
In the near term, then, is the US economy an issue? Or do you think that everyone is willing to continue to pay up for a more high-functioning and indeed lighter device, even though the price point just keeps on getting higher?
I think where we are in the market right now is that Apple is really targeting a premium consumer, an aspirational consumer, and they are still willing to pay for these device upgrades. We're expecting that there's going to be a price increase on the Pro Max, but we also expect that that premium aspirational buyer will be willing to pay that. The real risk for Apple is if they do not have a set of smaller, cheaper product category, do they cede share to someone else in the market? And I think their perspective is, we don't really care. We want the premium buyer. We want the higher margin.
Okay, what about, the competitive space that is wearables as well? How much focus do we give the watch and the announcements?
I think the watch is something that we have continued to wait for that big bang on, and it's only broken through a certain set of the consumer base. What I do think will happen is that watch buyers are very attracted to this product and will continue to buy upgrades to this product because it is part of their overarching health and fitness goal. The big question is, can we get new markets into it? They've made a play for the elder population, and a lot of people have bought these devices for their family members. We still see opportunity there. There is still actually opportunity for the wearable in the workplace, particularly as we look at first-line workers, where it can actually provide quite a bit of health and safety. We've really not seen any penetration in that market, so it could be that 2024 is the year that we start to see the watch get better enterprise play as well.
Maribel, the kind of other bucket of things we expect are a move to USB-C, USB-C going into the Pro AirPods, and then some kind of, the watch changes that we just outlined. How much importance do you place on the other bucket that we just talked about?
I think the other bucket is a nice to have. They'd still sell the products without the USB-C, but having said that, there are regulations that have been proposed that they need to address. And if you're going to do it in one region, you have to do it in all regions. We think it's going to be really good for consumers. It's really going to open up the ecosystem to a wide range of companies that already have USB-C product. So that is going to be good for Apple and good for the people that build around the smartphone, smartwatch ecosystem.
Maribel, there's a piece of data, it's been stuck in my head for a few days now. Tim Cook talked about several quarters of slowdown in the US smartphone market, 3 straight quarters of sales declines for Apple. But if you look at IDC, in that period, particularly the second quarter, they grew market share, even in a market that's pulling back against Samsung. What does that tell you, Apple's ability to gain market share?
They've had tremendous resilience in what's been looking like a major smartphone slowdown / smartphone winter, similar to what we've seen in the PC market. There could be double-digit declines that continue on. But what we're seeing happening with Apple is the strength of the Apple ecosystem in terms of the applications and in terms of the cool factor has really kept them in this more resilient position. We expect that since they're the only provider of iOS software right now, that they're going to have strength through the next several quarters, despite it being a difficult market. Perhaps not as strong as we would all like to see them perform, but I still think they'll do well compared to the market at large.
Maribel, do they need to remind us of the Vision Pro and the cool factor there?
They do, but the reality is it still seems like that being a market that's going to really add top line and bottom line dollars to Apple is still quite a few quarters away. I think they'll talk about it so that they can keep the momentum alive and get people thinking about it for 24 buys, but I'm not sure it's going to be a big year for that this coming year.
And lastly, what everyone has waited for a void to be filled by Apple is what they're going to be doing about artificial intelligence, how they're going to be interweaving that within its services. You really talk about the power of the Apple ecosystem within that, I think, fintech, but I also think Siri, and I think about the ways that ultimately generative AI might up the ante. Are you waiting for that moment?
I think we're already starting to see that, Mehmet. We're seeing it in software that's being built. We're seeing it in the chipsets that Apple provides. And, back on the earlier discussion about the chipset, this has been a big push and concern for Apple. And being able to control at least some of the hardware behind that allows them to be better positioned to actually embrace this Gen AI wave that is really rushing over us at this point in time. So I think that they'll have a strong showing in AI-related products as a result of the power of the processor. And it's one of the things that keeps the phone expensive, but it's also one of the things that keeps the phone interesting.
Maribel Lopez, founder and principal analyst of Lopez Research. Great to have your take there. And Ed, isn't it interesting that Maribel ends her point on it keeps on allowing them to up the price point, but it makes it more interesting. Ed?
Yeah, if you're Dan Ives of Wedbush, you point to 250 million old generation iPhones around the world that are due for upgrade, and that drives volumes. If you're Anurag Rana at Bloomberg Intelligence, our analyst, he would say, look at prices. iPhone 14 Pro was $999 US. What if Apple prices the iPhone 15 Pro and Pro Max incrementally higher or substantively higher than that? Are those kind of first adopters that Carolina Milanesi was talking about, are they willing to spend at that price point?
And to that point, what does it do for the overarching average selling point? Does it mean that we still see people gravitating to those pros? Do they then decide, actually, I can forsake a bit of an upgrade in my camera here and indeed perhaps some speed to the chip. I would rather hold on out. I maybe just wait until I can get an iPhone 15 on this particular generation. I don't know, Ed. The people you're speaking to in California, I feel that they're early adopters. They're going to be in no matter what, right?
Yeah. Yeah, they focus on the technology. So the processor has faster speeds, more memory added. But the other benefit is better battery life or battery performance, which for everyone watching this program, let's all agree, battery life on iPhone is key.
Yeah, Mr. Two Phones Ed. I'm sure you can agree. Meanwhile, coming up, look, we're going to have a bit of a book club moment. Going to take a pass from Apple just for a split second and discuss 2 new books detailing the thoughts and actions made by, some pretty polarizing figures. Sam Bankman-Fried, Elon Musk. Stay tuned. This will be like technology.
The names that move markets are on Bloomberg.
There's a complete change in the labor market. There's a complete change in the energy future that we are facing.
Under tightening would be a worse mistake than over tightening because we can course correct that.
The question is whether we need to increase the pressure or just keep pushing.
We've been getting good news. We just have to keep getting good news.
Nobody covers business like Bloomberg, your global business authority. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's for the Fed to respond to it. And this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn. Is that what we're doing right now?
Yeah, the big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern
Feels an age ago, but boy, the collapse of Sam Bankman-Fried's FTX, it sent shockwaves throughout the crypto market, and it rather lined up in time for a new book called Number Go Up. It's inside crypto's wild rise and staggering fall. Bloomberg's investigative reporter Zeke Fox goes down basically an entire rabbit hole to learn more about digital tokens, lesser-known mechanics of the industry, and well, Zeke, am I fair in saying that you came back kind of underwhelmed by the whole situation? It felt as though it was just funny, raucous, absurd, but at times pretty shocking. Remind us how it all began.
So I started out like a lot of people, just FOMO. Like I saw my friends getting big scores on Dogecoin, Solana, like whatever. I thought the whole thing was kind of annoying. It seemed dumb, but I got sucked in. I decided to investigate, and I found myself on like this crazy adventure. And by 2 years later, I was in Cambodia investigating crypto-fueled human trafficking. And then I was at Sam Bankman-Fried's penthouse in the Bahamas just before the cops showed up. So even though I resisted, I was glad I went down the crypto rabbit hole.
I can imagine when you start to ascribe writings around human trafficking that those are the moments as a journalist you need but don't always want. I mean, what was the really dark underbelly of what was happening in the crypto world?
So you always hear things about like, oh, crypto might be used for money laundering or other illicit purposes. But what I found is that there are whole like office parks in Cambodia, in southwestern Cambodia, where there's like floor after floor of people who are working around the clock under threat of beatings and torture, sending spam text messages to people in richer countries, trying to trick them into investing in crypto and other like crypto and gambling scams.
Was there any repercussion from that? Are you starting to see, I mean, ultimately we had to see a blow up of gargantuan proportions for regulators, for people to start to become involved and dig more deeply on what ultimately was the FTX showdown. But what about human trafficking in Cambodia? Who is looking at that?
Yeah, so it's starting to get more attention from like Interpol, the UN. It's like an international issue. But within the crypto world, like when I was it's been sort of ignored. Like when I went to go talk to Sam Bankman-Fried for the last time at his apartment when things were blowing up, I was like, have you read about any of this? Like, do you realize that some of these criminals are sending money like to your exchange? And he's like, like that sounds bad.
So go into his psyche. Like, obviously you saw him at probably the most extraordinary moment. But what do you think his overwhelming drive was? Because we've got to remember the trial is happening relatively soon and he's still deeming himself, not guilty.
So when I met him, I was fascinated by this idea that like when he was a teenager, he was like, I want to do something good for the world. Somebody convinced him the best thing to do would be to get rich. And then like 10 years later, at least on paper, he's one of the richest guys in the world. And some people think that like it was all a lie, he was a monster the whole time. I actually think that this drive, this belief in his own self-righteousness led him to take insane risks and led him to where he is today.
Hubris. I mean, ultimately, the reason crypto is sort of like a media gift that keeps on giving and an extraordinary rabbit hole for you to have gone down is sort of celebrity meets vast quantities of cash, meets overnight success, meets ridiculous acronyms all sort of bombarded into one. There's a lot of schadenfreude. There's a lot of like, these celebrities who lost vast amounts on NFTs. But I mean, you bought a Bored Ape at one point. I mean, how do you think this ends up playing out? Ultimately, everyone loses money?
I mean, anyone who's seen like the last couple of years, if you paid any attention, it's hard to say like, oh, let's run it all back. Like, let's wait for the next cycle. I think that's pretty unlikely. But it was pretty fun to be a part of it this last time. And yeah, buying a Bored Ape, I got to go to Ape Fest, which was like a week-long party for people who own these $100,000 ugly cartoon JPEGs.
But that's loyalty, right? That's creating a club. You think that's dead entirely?
The party cost, for 20 grand, you got to go mill around with a bunch of drunk dudes. I did get to confront Jimmy Fallon about the investment advice that he'd given these people. So for me, I think I was happy I went, but I think most people are going to be more mad about all the money they're losing than happy about, they got to see Amy Schumer tell some jokes about NFTs.
Maybe Jimmy Fallon wasn't so pleased you were there either, but Zeke, I'm glad you were there. And to tell the story, what an amazing read. Just go read it. He's always got some incredible anecdotes and really deep, thoughtful, important reporting. Zeke Fox, we thank him. Number go up. It's now available for purchase. Meanwhile, let's talk about another key book you might be wanting to look at, the biography about Elon Musk. It's shedding light about, well, his often dismissive behavior when given advice by powerful advisors. Walter Isaacson's Elon Musk comes out this week too. Bloomberg News social media reporter Aisha Counts, you've had a deep dive on it. Anything particularly shocking in there as someone who covers the ins and outs of Elon Musk day in, day out?
You know, when you start to cover Elon Musk, you realize you shouldn't be shocked by anything, right? Expect everything. But there were a few anecdotes and details that I thought were interesting. So he had more advisors than I had initially realized. So people like David Zaslav from Warner Brothers Discovery advised him and was saying, hey, you're kind of engaging in some self-destructive behaviors that are not helping advertisers want to spend money on your platform. And they had about an hour-long conversation about that. And he was like, you should focus on video. You should make your ads better. I think Musk kind of ignored that because he continued to send out tweets and things that kind of irked advertisers. But it was interesting that I didn't know that Zaslav advised him at that point.
I mean, 95 chapters and 600 pages. How much of this is about leadership style? How much of this is going to sort of inform us about what apparently could well be happening within the businesses he runs at the moment?
I mean, I think it gives you some sense of how he is as a leader, right? There's a lot of stories and details of Musk kind of going out and taking charge or making erratic decisions, which we all kind of thought he was doing that and sort of knew from what he was doing with like Twitter, which is now X, or other companies. But you really start to see kind of behind the scenes how many people were saying, hey, maybe you shouldn't do that, right? Even down to his own brother was like, I don't know if you should tweet that, and was not able to sleep at night because he was worried about what Elon might tweet. So you start to see details like that there were more people in his inner circle that were sort of advising him, and Musk kind of just made his own decisions.
And to that point, Aisha, does it therefore drive an investor base looking for dedication, someone who is completely hands at the wheel, to pardon a pun, of Tesla, ensuring that he is doing what he needs to be doing when it comes to an incredibly valuable private company that is SpaceX?
I mean, it's a good question, right? I think investors are probably mixed. I think it sounds like some, right, especially some venture capitalists that he's close to, like David Sachs or Andreessen, liked that Musk sort of was willing to break the rules and go out and do things that people said couldn't be done. And then other people were like, I don't want to deal with this. He's too erratic, and I can't trust what decision he's going to make. Like the chair of Tesla at one point was like, hey, we're concerned about how your work on Twitter and X is distracting from what you should be doing at Tesla. And I'm sure SpaceX investors felt the same. So it's a mix.
It's a mix. And of course, he's got XAI as well to be taken under his wing. Aisha Counts, really fascinating deep dive on the book that many are going to be eyeing up. We thank you. Meanwhile, coming up, look, we've got to go back to Cupertino. Live at the Apple Wanderlust event, our own Ed Ludlow has the latest ahead of the all-important unveil. From New York, from San Francisco, this is Bloomberg Technology.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. JetBlue has traveled a long way from its startup days, but CFO Ursula Hurley says growth won't change the airline's quirky attitude.
At the end of the day, we view ourselves as a disruptor and a maverick in the aviation industry, and I'm really excited to play a meaningful role in that growth journey.
Watch Chief Future Officer, Wednesday on Bloomberg.
The Apple Wanderlust event starts in, just a few minutes' time, 1 p.m. Eastern Time, 6 minutes from now, Ed. You're live there in Cupertino. Getting exciting?
Yeah, I'm getting excited. You know, this is a big event. It actually feels like a much bigger event than WWDC when we got the Vision Pro. And it kind of makes sense, right? Remember, WWDC is on the developer side. This is about iPhone. $200 billion of sales last year, 50% of revenue. It touches people over the world. We know what's coming, 4 variants of the iPhone 15. What we don't know is about pricing. Like, what if they raise prices in a big way?
And whether people want to be going to that average selling price. Because it's interesting, isn't it? It dovetails at a moment where they've been looking for new types of buyers, a middle class growing in India.
Yes.
But also that speaks to the supply chain changes that we see at hand as well.
This was really important Bloomberg reporting overnight. According to our sources, this will be the first launch where an India-assembled iPhone will hit the market in India and other markets around the world straight away. Traditionally, it's made in China, and then 6 to 9 months later, the lowest spec base models of iPhones start production in Foxconn facilities in India. What we're hearing from sources is they're accelerating that, starting straight away in India, which speaks to the supply chain story.
And maybe just shows the focus on diversifying a consumer base that at the moment we potentially see headwinds coming, particularly in the Chinese buyer at the moment as well. Ed, you're going to be telling this global story, but it's an investor-based story, it's a revenue-driven story, and we're going to be all across it because coming up, we've got our coverage continuing. It's a Bloomberg Technology extended special edition. We're going to be focused on, guess what? Apple. As we count you down to the annual product launch, just a few minutes away. We're going to be live right here from New York, right over there in Cupertino. And this really is a focus on a raft of products, the high end, the Pros, the Maxes, the overall 15s, what they're going to have on offer, the cameras, the chips, what goes into them, and indeed a fair focus on the smartwatch too. From New York, this is Bloomberg Technology.
What do you worry most about your economy and Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question because I want to make sure that in 5 years from now we will not have sacrificed the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow here in Cupertino, Apple Campus, the Steve Jobs Theatre behind me. This, Caro, is a special Bloomberg Technology and everything iPhone at Apple's Wanderlust event.
And everything change of cord, USB, and everything focus on AirPods, on the watch as well. We have got so much to drive forward, as well as some of those headwinds when it comes to China, when it comes to supply chain, when it comes to those all-important chips that I know you love so much. Ed, we've got the perfect person to be setting us up into all of this. Bloomberg's Tom Giles joins us for really already what we anticipate. Mark Gurman just comes out with really a fully fledged view of what we're going to be delivered. The point is how much importance this is to an investor base, Tom.
Are you hearing me? Yes. Say that again, Caroline.
Yeah, Tom, what are you thinking about in terms of how important this moment is to the investors as well as the consumers?
Yeah, this is a huge moment for Apple. This company, there's been a lot of anticipation for this event. But this year, it's particularly high, and that's for a couple of reasons. One, we expect this to be a major upgrade in a lot of areas. Camera, chip. This is Apple's most important device, and they are going for the gusto here. There is a lot of upgrades. There's a lot of changes. This is a major one. This is not incremental. So in that regard, this is hugely important. And remember, the backdrop here is a decline in global smartphone demand. And that's something that Apple is really having to fight against.
I think we're having a few technical issues at the moment, Tom, but I just want to drive it home with you a little bit more in terms of we understand the power of the iPhone. We understand the $200 billion it brings in terms of revenue per year. I'm interested in, ultimately, with a price point that may well rise, how much can they really ensure a consumer will go there, Tom? I think we've lost Tom Giles, unfortunately. But, Ed, I think at the moment in Cupertino, there's going to be a lot of excitement, a lot of people waiting with bated breath for the upgrades. And we've got a perfect guest to be sort of driving that conversation forward.
Yeah, and hey, I'll remind our audience that there's a reason Apple pre-records this presentation and then plays it out later to get rid of those technical issues. Absolutely delighted to be joined here at Apple Campus by Annette Zimmerman, Gartner analyst. And, you know, Annette, we've gone through all the specs we're expecting. Lots of focus on the higher end Pro and Pro Max, updated silicon, updated camera. For you, what is most important to return Apple to growth?
Yeah, so I mean, at the moment, it's of course still a little bit speculation what we will see, and I think there's going to be some kind of feature that we haven't heard about yet because it's called Wanderlust, right? The event. So wonder, or merging the word wonder with Wanderlust, which means literally translated to be the desire to travel, and I think we all have this desire to travel. since the pandemic, and that we have most of it behind us. So I think there's going to be something around certain sensors that will make workout and traveling and just moving around even more precise and more accurate and more engaging, basically. So I think there's going to be lots of around new precise sensors and these kind of things.
The event is underway, and in the early stages they're showing video with people using older generation of iPhone, older generation of the watch in the real world. But iPhone seems to be everything. Just explain to our audience how important the refresh cycle is for Apple, every new generation of iPhone that they release.
Yeah, so Apple targets obviously different user groups. So one user group is the early adopters that usually upgrade their phone maybe every 2 years and sometimes even every year. So that is usually the group that they target with their very high-end devices. But then you also have a very loyal user group that is more in the mid-range and maybe more on the budget side, that sometimes they upgrade only after 5 years, as long as you can upgrade the operating system. And I think especially it's going to be, or this event is usually around the higher end and the mid-range type of devices and the users. And for those users that maybe wait a little bit longer for upgrading, Apple also has some interesting price offers, usually with those that that come or that have been introduced earlier in the year, so or last year maybe even. So all of this will be important. It's the whole thing about Apple targeting these different user groups, but also really paying attention to these different segments and try to make them happy.
Yes. You are watching Bloomberg Technology's special coverage of Apple's Wonderlust event. We're expecting iPhone 15. Annette Zimmerman, Gartner analyst, with me. And in the early stages, the presentation started, we're a couple of minutes in. They've been talking about how Apple devices help consumers and users in medical emergency situations. At the beginning of our conversation, you mentioned sensor technology. We know that there are some updates to watch coming, but talk about that healthcare segment and indeed the emergency case scenario with Apple.
Yeah. So at WWDC, we saw some really interesting developments with iOS and the ability to, to support people with their physical health, but also with their mental health, right? And so we're seeing Apple expanding significantly into different areas. So it's about our behavior, our health, our mental health, our physical health that will, I think, is part of our everyday life, and we need to embrace it, and we need to, or we can use specifically the Apple devices to support us in our journey for health.
I can confirm that Tim Cook is now speaking on stage, and he said that he's going to be talking about Apple Watch and iPhone. Not really surprising. One thing that's going to impact consumers everywhere is the move to USB-C. It's a European Union mandate, deadline end of 2024. What effect will that have for Apple switching to USB-C?
It has a big effect on Apple because they obviously had to make technical and physical changes to the design and to basically to the entire roadmap of devices that will be coming, and there will be more on top of that will be made, or changes will be made. Because the EU is also looking for better repairability of devices. So Apple has to invest in new designs to make those devices more repairable, and also make spare parts available, make it affordable available to users, so you can do your own repair if you want, these kind of things. But that impacts Apple and the entire industry, really.
Tim Cook is using these early stages to talk about WWDC June, the M2 chip, Ultra chip that went into the 15-inch MacBook Air, Mac Studio, Mac Pro, basically saying the feedback and response has been fantastic. We will see if the feedback or response is as good for this next generation of iPhone, which is what we will focus on most. Annette Zimmerman, Gartner analyst, so good to have you here in real time during this Apple Wonderlust event. Caroline, back to you in New York.
I know, so great to have the on-the-feeling sense of this moment. And actually, we're hearing from Tim Cook as well, saying, look, Apple is still on track to ship its Vision Pro in early 2024. Now we are still anticipating the announcements regarding the watch, the AirPods, the new ways in which you're going to be charging them through the USB, and indeed what we're waiting on the iPhone 15 range. But let's go back to Tom Giles, of course. And Tom, this is about consumer awe, but it's also about investor reality. And at this moment, they've got plenty of headwinds. We're worried about Chinese consumer. We're worried about supply chain as well. How do you think they managed to tackle or offset that narrative at this moment?
Yeah, and don't forget, they've also got Huawei in the mix. Huawei out with a new phone, with a new operating system, and gathering a lot of momentum behind it. So there's a lot that they have to do here today to prove that this is a really special upgrade. As we were talking about earlier, this isn't your average instance where they're adding a few things, they're iterating around the edges. There are some substantial changes. If you talk to Mark Gurman, he will tell you that this is a major set of upgrades. And that's what Apple is doing to really take the attention off the competitive threat, the pressure from the Chinese government on using the iPhone in that country, the pressure from Huawei, all of it. This is Tim Cook's moment to take your attention off of that and show once again that we're adding really special features to the iPhone, the faster chip. Again, this telephoto lens with the camera that's letting you take these up close photos with the iPhone, things you can't do with other devices. This is his moment to remind people we're doing things that are really special with this camera, and it's really important because it makes up half of the company's revenue.
And to be fair, like, analysts still seem convinced by all of that at the moment, Tom. I'm looking at 35 buy ratings. That's 2/3 of all the analysts out there rate this stock a buy. And in fact, there's still about 15% upside potential if you're looking at a price target consensus of 204. But we have had this sort of knock to the overall market capitalization of Apple over the last few trading days. And ultimately, how important is the fact that they can nudge us up on a price point? How resilient does the US consumer need to be at this moment?
Yeah, definitely. I mean, Apple has to walk a really fine line, right, with the way they price this device. And that's why they've got multiple devices that are going to be getting upgrades today. And exactly where are they going to tinker with pricing? How much do they add those high-end features to the lower-end devices? All of those things, this is the kind of thing that Apple spends a lot of time thinking about very strategically. And they tend to be very smart about it, not loading too much into the lower-end devices so that they can still sell them at a little bit of a discount to the higher-end devices. How do they keep those margins going in the right direction? And if you look at their gross margins, they're going in the right direction. So how does Apple do this, particularly at a time when you're seeing overall demand for smartphones globally dropping off? Q2 was a really tough quarter, both for the iOS, that's Apple, and Android, that's the Google operating system that's in so many global devices. Yeah. But something that Apple did in the second quarter was they weathered the storm better than Android. And that's what Tim Cook really wants to see Apple continue to do going forward.
Well, we'll have so much more from Tim Cook. From you, Tom, we thank you so much, all regarding this big unveil, where we understand that it is official, the S9 of the watch has arrived, and indeed it's got an S9 chip, so we're going to have some what they call major performance improvements overall. We understand that the COO, Jeff Williams, is on the stage at the moment introducing this next generation of the Apple Watch, and it's touting an improved performance overall, including the new chip, and calling it the most powerful Apple Watch chip to date. Now, we're going to be talking so much about the intricacies of this announcement with Ray Wang, who's the CEO and principal analyst of Constellation Research. His take on what is being announced at the Apple event is over in Cupertino. That's where our Ed Ludlow is too. This is Bloomberg Technology.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
And the markets are on the move.
The focus, of course, is on Ukraine.
The market is so hyped up about AI.
Unless we see dramatic changes, it's just going to keep getting hotter.
For further market analysis,
We're going to go get straight to some breaking news.
We'll have a full roundup.
Going through some of the numbers.
And what investors should make of them.
We have so many important conversations. Let's check in what you need to know.
The latest headlines coming out of this Apple Wanderlust event center on the next generation Apple Watch, the S9 or 9 series with an updated piece of silicon, S9 chip, 30% more powerful GPU. Caro, in terms of some of the things that this manifests itself with, dictation, 25% more accurate, 18 hours of battery life. Two ways of looking at it, that's all day battery life, although Mark Gurman posting in the Bloomberg Top Live blog that it's basically the same as prior generations. Also the ability to engage with Siri directly to the watch without latency in a more secure method. That's what they're leaning on with this latest watch.
Yeah, more effective use of point. Also integration with the HomePod is an interesting one as well. But overall, new gesture control being integrated. They've got to be pushing really the way in which they're standing out from a crowded space when it comes to connected devices, the way in which we measure our health ed. Because, well, many have been getting into the rings, the watches of other variations too.
Yeah, something really cool they've just announced with this latest generation watch. Series 9 has gesture control. So with a one-handed gesture, you can engage with the watch. It's called double tap. So I don't know how needle moving that is, right? The ability to wave at one's wrist and a watch, but we will find out because there is somebody who definitely has a stronger perspective on this than you or I, and that is Ray Wang, Constellation CEO and Principal Analyst. Good to see you here in Cupertino. Based on what I've just reported for you on the Apple Watch Series 9, what do you make of that as quick reaction?
Yeah, welcome to the hometown, like Cupertino. I think the really important thing that's going on here is the important piece that they're going from silicon to chip, and they're using their silicon to manage the battery life. They're using the silicon to handle the AI capabilities, and all those are really important, especially when you think about what Apple's known for. They have full control of their ecosystem, and that starts with the silicon. And so they're showcasing that on the watch, and of course, I think we're all waiting to see if there are other things that are going to be monitored, right? Other health indicators that I think would drive other people to go to the Ultra, and of course to the Series 9 watch.
Yeah, the expectation is that we would have two size variants of Series 9, one new variant of the Ultra. These are the early exchanges of this event. Apple Wanderlust is underway behind us in the Steve Jobs Theatre, and you're right, we're waiting for 4 variants of the iPhone 15. How important is it that the hardware upgrades on the Pro side are substantive to drive an upgrade cycle?
Well, when we look at the entire upgrade cycle, we're talking about 1 billion iPhones that need to get 5G, right? And it's been happening over the next 3 years. And so as we're moving those in that super cycle, the big piece is really, is a telephoto lens potentially enough to get you there? The USB-C, got to do it because it's a regulatory requirement. Is it also going to be something around, is it a battery life? Is it a feature? Is it a service that's going to take people to that next level of using the iPhone? But the chips make a big difference. The battery life makes a big difference. And potentially a 48 megapixel camera may make that difference.
I want to go back to the watch for just a second. Some other information is the Series 9, let's call it the base model, has double the brightness, 2000 nits. That goes back to the last generation of Ultra. What is the strategy you see there from Apple? They're basically taking last year's tech and putting it into this year's base models.
Yeah, we're seeing things. If you want the Pro or the Ultra, you want the top level, you'll pay a little bit more for the new chip, and then you're going to see that gradation come into different markets. Let's take India, for example, right? The big talk about India. You might have different price points given where the demographics and the socioeconomics are. You'll have a different price point in the UK, of course, and you'll have a different price point if you're in the Middle East, right? Remember, Apple is at the heart a luxury brand, and because it's a luxury brand, that's what's driving that capability.
Right now on stage, Apple are talking about their environmental goals and the progress they've made in sustainability and materials. Is that an important factor for you?
It's important for me, especially when we think about circular economy and we think about how much energy is required to create a device, how you bring that back into it. Apple's been a leader, especially in sustainability and some of those ESG goals. And it goes from not just the battery, but it's also the materials and the recycling process. I've probably turned in, maybe you as well, turned in a couple phones in the past to do that. So.
Okay, forget what we've reported and what we think is coming. What do you want to see in these higher-end iPhone 15 Pro and Pro Max?
Yeah, I think people are looking for better features. They're looking for experiences, for example, the ability to tie these to more devices. They're looking for the eventual integration between Mac OS, iOS, and Watch OS. And then, of course, they're trying to figure out, hey, maybe there's a sneak peek into Vision Pro and what's going to take us into Vision Pro as the replacement for the Mac. Like, that integration has always been an Apple fan's dream, right, to be able to bring all those things together.
Ray Wang, Constellation Research CEO and Principal Analyst, joining us in real time, Caroline, here in Cupertino. The Apple event is underway.
It is underway, and there's a focus on the environment, on sustainability, and we understand the latest headline is it's going to be phasing out its leather from its iPhone cases, and many had taken that cue from moves over at Hermes of late. Coming up, we're going to have so much more coming for you. The analysis from Apple. Thomas Husson, he's Vice President and Principal Analyst over at Forrester Research, going to be joining the show live from Cupertino, from New York. We've got it all covered. This is Bloomberg Technology.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg. On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
And so we have the news coming from the Apple event in Cupertino, thick and fast. Of course, a Watch Series 9, going to be more powerful, swifter. We're going to be having the ability to, hand gesture, to be able to wave fingers at it. Double tap is what it's called. Interoperability with your HomePod as well. Really, this is about being faster and more powerful. We're also seeing some more nuanced announcements around perhaps the wind down of any leather at the moment when it comes currently being used in iPhone cases, so a push on sustainability. But we all await the iPhone 15 and the array that we get there. Forrester Research Vice President and Principal Analyst Thomas Husson is with us. And Thomas, you were expecting perhaps an ultra version of the watch. What more do you anticipate from the phone lineup, and is it going to be enough?
Well, I'd expect a significant incremental innovation and improvements on the lineup of especially on the iPhone and the iPhone Pros. We've heard right now about some of the sustainability efforts. I think what would be very disruptive is to hear more of a device as a service offering where you have a bundle of hardware, content, and some circularity services, repairability. That would be a great step. I'm not sure we're going to hear that tonight, unfortunately. So is it going to be enough? I think Apple will maintain its leadership when it comes to smartphone innovation. The bigger question, I think, given the economic context, and we don't know yet, is going to be around pricing.
Precisely, and many anticipating that prices will rise. We're going to boost the average selling price. We're still focusing at the moment in terms on the environmental impact. Lisa Jackson, the EPA chief, saying about how by 2030 Apple devices will be net zero in impact. That was a Tim Cook ad as well. I'm interested in really the Huawei and Chinese perspective here as well, because there's been a lot of headwinds on Apple stock of late. Do you think that the innovation is enough at Apple to fight off the homegrown innovation of Huawei?
Well, I think so from a pure innovation standpoint. I think the bigger question is about the geopolitical context in China and the fact that indeed the iPhone has been banned to potentially dozens of millions of employees working in public state employees or for the government in China. What will be the consumer sentiment of Chinese consumers is a very big unknown, given the fact that the greater China represents about a fifth of Apple's revenue. So that might be another reason for a potential price uptag in other regions.
We keep an eye on the price point and indeed what we're going to hear when it comes to the new phones. Forrester Research Vice President and Principal Analyst Thomas Husson joining us on what we've so far been digesting. And it is a focus on the environment. Lisa Jackson, I misspoke earlier, of course, was the former EPA chief, Apple's head of environment now, really outlining the efforts. And Tim Cook saying by 2030 Apple devices will be and having a net zero impact. But give us the nitty gritty on what we got from at least connected devices and watches in particular, because many had braced for more.
Yeah, look, I think we probably got a more substantive upgrade to the Series 9 watch, the lower base model, than we thought we'd get. New silicon S9 chip, 30% better performance on the GPU side. But you're right, though, that real focus on the environmental side of this story. If you take Series 9 as an example, north of 80% of it is made of recycled materials. That includes some of the core metals like tungsten and copper. And the pledge from Tim Cook is that by 2030, all devices will have net zero. So it's a commitment, but as our guests have made the point this whole show, it's about their supply chain and how they're adjusting to that.
Well, we'll see how that titanium comes into the mix in a moment. That's, of course, what's anticipated with the lineup of phones. You do not want to go anywhere. That does it for this special edition of Bloomberg Technology, live from Cupertino and from New York. But we're going to have full recaps throughout the remaining day. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point! From the pickleball courts of Arizona
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm John Oldsman. Welcome to Bloomberg Markets.
And I'm Matt Miller. Let's get a quick check on the markets at this hour. We're seeing very little change in the S&P 500. Gains on the Dow, losses on the NASDAQ, but the benchmark S&P right now unchanged at 44.86. You do see investors buying treasuries. That pushes the yield down, but only very slightly. The yield on the 10-year, 428.61. We do see the Bloomberg Dollar Index inching back higher again right now, 1251, but also not a lot of change there. NYMEX crude, on the other hand, is gaining a lot, more than $2 a barrel to 89.30, and we're seeing Brent crude, the global benchmark, at a high for the year. And John, most assets not seeing a lot of movement because traders, I think, waiting for those all-important CPI U.S. inflation numbers tomorrow morning, but we certainly do see movement in the crude market.
Yeah, absolutely, and that has left energy stocks in New York higher. It's true in Toronto. The tech sector also getting attention, Matt, and obviously we've been tracking the headlines coming out of Cupertino with Apple as we await more details on the latest iPhone offering. We've heard from management so far about updates on the Vision Pro rollout, the new Apple Watch plans as well. Stock was weaker heading into the event today, which is continuing at this moment. Shares are still down about 1%. But the tech malaise that we've seen today, Matt, comes back to the Oracle story as investors reflected on the quarter and the outlook and just didn't like what they'd heard after the stock's run up this year. Consumers are in focus these days, and every time we've got a company reporting on quarterly results out of that sector, a Casey's General Store is a good example today. Kind of interesting to see a well-received quarter here, 10.5% higher. Part of that, the Bloomberg Intelligence team says, is their fuel margins, some of those locations with gas stations. And then in the banking sector, we are watching some of the regionals, Matt. Zions, for example, is up more than 8%. They had shared some slides ahead of an investor presentation that painted a relatively upbeat picture. And I think for the challenges we've seen within the regional banking sector, that was a well-received piece of information on this trading day.
All right, interesting movers there. Two other companies that we're watching very closely are Ford and General Motors. As the companies negotiate with the United Auto Workers, the two sides are racing to avoid a strike as the Thursday midnight deadline approaches. A possible strike could change the auto and economic landscape in the U.S. Jose Munoz is Hyundai and Genesis North America president and CEO, as well as global COO for Hyundai. He joins us now. Jose, great to have you on the program. I wonder, what you think of these negotiations. Of course, you have non-union work, and on the one hand, that's great because lower costs for you. On the other hand, if they get a bigger contract in Detroit, you could see an already tight labor market get tighter. How do you see it?
Well, thank you for having me, Matt. Well, first and foremost, we just want the best for the industry, right? We don't have unions today in the U.S. because this is what our workers decided to do, basically because our strategy has always been, and it will continue to be, to try to offer our workers the best possible conditions. So, in fact, I was 2 weeks ago in Savannah, Georgia, where, as you know, we are making a multi-billion investment for the company, about 12 billion in total. And then we found out that according to the county, our wages are about top 25% in the area. So which means that good wages, good health conditions, good paid holidays, etc., is the best guarantee to succeed. Also, I would say that we have unions in Korea, and we've always tried to provide our workers with the best conditions. We found good agreements so far in the last few years. Thankfully, we have no strike. So we wish the best to everybody because any disruption would have potentially impact in the supply chain. Although the last 2 years, we've learned a lot how to be less reliant on one or another supplier. And also, we are a very much vertically integrated company. So I hope things will end up in good place for everybody, and we'll continue to produce cars and sell cars.
Jose, you got, products that are hot right now. A lot of people normally who would be looking for a luxury vehicle are going instead to Genesis, or maybe Genesis is just stepping up and making luxury products. In terms of Hyundai, you've got the Elantra N making a splash, the Santa Fe plug-in hybrid, as well as my personal favorite, the Ioniq 5. But are you also able to undercut your competition in terms of pricing? Because right now, car makers in America, or car buyers in America, I should say, are facing very high prices.
Well, you're right, Matt. We are very proud with the good achievements of our luxury brand, Genesis. I was, in fact, looking at some data before, and I found out that since we started in a full year in 2006, we have increased our volume 8x till last year to more than 56,000, and hopefully this year will go well above 60,000. So good design, good technology. I wouldn't say our cars are the cheapest at all. We just want to offer the customers the best at a competitive price, but it doesn't mean the cheapest. I think the electrification is something that is helping us and is helping our customers, and they're realizing that we have a very compelling offer in the market. As you mentioned, Hyundai with the Ioniq 5 and Ioniq 6, which have been 2 years in a row the workout of the year, I think they're very good offers, and then we're trying to do our best to compete in the market, even if our vehicles don't qualify for IRA other than on the lease segment. And, as you know, we became last year the third global OEM in sales, and with more than 6.8 million. And then these first 6 months, we continue to be the third one. This is driven by the US, where we are only behind GM and Toyota, as you know. So far, so good. We'll continue to do our best with everything that we got. But product quality, good design, good features, I think is the best guarantee to success.
You mentioned the possible supply chain disruptions from a potential strike in Detroit at a time when electrification, as you noted, is such a priority for so many of the auto makers. Have you put, Jose, any estimates on what a strike could cost the industry internally? Have you guys put together any numbers on what that potential cost could be?
Well, we don't. We, I think, master the couple of last years during the pandemic, where our company, I think, did a better job than others in terms of finding alternative sources and maximizing the flexibility of our systems to continue to supply vehicles to the consumers, right? And nowadays, as I mentioned, I think we are in a better position than we were just 2 to 3 years ago in terms of having alternative supply, especially in the North American market, namely in the USA, right? So also we are very vertically integrated. Our companies like Mobis or Globis that are supplying to both Hyundai, Kia, Genesis, they're very, very strong. And after, all this 12 billion investment in mainly Savannah and Bartow in Georgia, I think we're going to be even more localized. But I'm very pleased to say that we're so confident that today we're announcing here in Detroit, Michigan, the grand opening of our, we call it the STEEL, Safety, Test, and Investigation Laboratory, where we believe we're going to have the state-of-the-art, the very best facilities to do this. Most of our competitors do this through third parties. And according to the president of IIHS, I think probably we have the best facilities in town.
One of the other issues that comes up with Hyundai today is competition from Chinese automakers. What would you say to those who are curious about how your company is positioned versus some of those fast-growing players?
Well, I think mainly in the European markets is where we can see that competition, also maybe in the Middle East, not to mention China, right? But so far we've been able to weather that quite well. So again, the European consumer, the Middle East consumer is appreciating the design, the quality, the safety features, competitive prices without discounting, and more importantly, a great service. I think the consumer is appreciating the fact that we put the customer first within our big image of the progress for humanity. So when they compare us to other, as you mentioned, Chinese companies and others, they realize that if they ever have a need to service their vehicle, probably they will be much better taken care of by Hyundai than by some of those competitors. We don't neglect them. We need to continue to do our job because they have improved a lot, but we like the competition and we'll try to do an even better job.
Tesla cutting prices in China, but here as well. I asked earlier about whether or not you can undercut competitors with price, but do you have any room to cut prices at Hyundai and Genesis?
Well, we, as mentioned, try to focus on offering value. We don't want to be the cheapest in the market. We want to be simply competitive. There is always room if you look at the financial results of the company, but definitely our strategy is to optimize the revenue, the margin within the capacity that we have, and this is what we've done the last few years, and I think the results are showing that. So we'll try to maintain our position. We are not having plans to cut and slice our prices.
I'm seeing headlines here, Jose, that Bernard Looney, the chief executive of BP, is going to resign less than 4 years in the job. This according to the Financial Times. I bring this up with you because I have asked Bernard Looney, why don't they put EV chargers at every BP station? Gas stations all over the place, but I can barely find a charger. And you're pushing, electric vehicles. You had an ad during the kickoff of football with the all-new Kona about getting back into the commute. How do you convince buyers to switch to EVs when there's difficulty in charging, especially, when they get to work? In my garage here, they'll charge me $20 a day to plug the car in. So, that's just the same as paying gas.
Well, in fact, the consumers are very smart always, right? And then to your point about the Kona EV, it's a great design, great autonomy. It is having a great driving dynamics, fantastic safety features. And then we are making really extraordinary efforts to satisfy our consumers' needs. For the time being, as you know, we offer on every Hyundai that we sell 2 years of complimentary charging within Electrify America, and then 3 years for the Genesis brand. And as we speak, as you know, we signed recently an agreement with other 6 or 7 OEMs to create Iona to guarantee that our consumers will continue to have the best conditions in order to charge their vehicles. On top of that, we are thinking on potentially launching our own specialized and high-level service charging chain for our Hyundai and Genesis consumers. And our dealers, all the Ioniq dealers, have invested in level 2s and even level 3 chargers. So I think the consumers are realizing that the ranges are getting longer and longer. The grid is getting better and better. Still some room for improvement. And you know, the fact is, for example, you look at the numbers that we had in August. In August, we sold about 20% of our sales were electrified vehicles, including EVs, hybrids, plug-in hybrids, and hydrogen. And this represents 50% more than a year ago. But 10% it was battery EV, and it was 100% plus versus a year ago. So the consumers see the value and they're buying EVs.
Jose, thanks so much for joining us. Jose Munoz there, Hyundai and Genesis North American President and CEO, as well as the global COO, I should say, for Hyundai. Now, coming up on the program, what we've learned this hour from the Apple product launch happening right now as it announces the iPhone 15. This is Bloomberg.
What do you worry most about your economy in Greece? When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that, in 5 years from now, we will not have sacrificed, the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. The names that move markets are on Bloomberg.
There's a complete change in the labor market. There's a complete change in the energy future that we are facing.
Under tightening would be a worse mistake than over tightening, because we can course correct that.
The question is whether we need to increase the pressure or just keep pushing.
We've been getting good news. We just have to keep getting good news.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Markets. I'm John Lithman with Matt Miller. Time now for our stock of the hour. All eyes have been on Apple this hour as it unveils the iPhone 15. And of course, product launches for these new Apple phones, always critical, Matt. This is a device that makes up roughly 50% of the company's sales. Last year alone, that amounted to more than $205 billion.
Right. They should be critical. the problem is if they're not a big deal, then it doesn't spur enough people to go out and upgrade. Let's bring in Bloomberg's Ed Ludlow, who's outside the event in Cupertino, California. So, Ed, wrapping a couple of the high-end models with a titanium strip and saying they've upgraded the camera, is that going to be enough?
We want to know if it's going to be enough. You know, there are wide-ranging estimates of how many tens or hundreds of millions of former or older generation iPhones are out there for upgrades, and it's hard to know what the consumer is willing to part cash for. What we know is that, as expected, we have two variants of the base model iPhone 15, a 6.1-inch screen and a 6.7-inch screen. Both of them get the dynamic island, which is the top sliver of the screen, a more interactive display that displays more information. The big news so far on the low-end iPhone 15 is the upgrades to the camera. 48 megapixel. The iPhone 14 non-Pro versions a year ago had 12 megapixels, so that's a pretty substantive upgrade on the camera technology. But we're waiting for the Pro line because, as you guys know, that's the strategy for Apple. Save the big technology upgrades for the higher priced Pro models, charge more for them, raise average selling price, and see that you can target that customer base that is basically classed as first or early adopter.
And obviously all this, it continues to tie into the services business. Ed, the fact that this company has more than 2 billion active devices around the world and has been able to leverage that to keep growing the service side of the business as well.
Yeah, and really interesting to see a heavy emphasis on watch in the early part of the presentation. We did get a new Series 9 watch. We did get a higher spec Ultra 2 watch. But the thing that they emphasized was the performance, right? They have the new S9 chip, 30% better performance on the GPU side, matching the battery lives of former generations, but on low power mode on the Ultra side, 72 hours on the watch. But it's what you can do with it. A lot of emphasis on a medical emergency scenario. A lot of emphasis on, those extreme athletes like Matt Miller up the side of a mountain with their Ultra 2, 3,000 nits of brightness so you can really see the face of the screen in extreme sunlight. They're going for it with these higher specifications.
So bright. It just gets brighter every time I look at it. Ed, thanks so much for joining us. Ed Ludlow there outside Cupertino at the Apple launch. Now, we had some breaking news on BP. The chief executive, Bernard Looney, is reportedly going to resign less than 4 years after taking the post, this according to the Financial Times. Let's talk with Bloomberg's Alex Steele, who covers commodities for us. Alex, what do we know about Looney and why he's leaving?
Okay, well, first of all, this is unconfirmed from the Financial Times. Now, what we do know is back in 2020, when Looney unveiled his strategic plan for BP, it was very much about a renewable focus. It was EV charging stations. It was going to be solar. It was going to be wind, particularly wind. They recently had a very strong auction from Germany's offshore wind portfolio. What happened, though, over the next 3 years, in some ways, wasn't really his fault. You had the pandemic. You had oil prices very volatile and cratering. And then you had a big push against alternative energy back into oil and gas. Now, a lot of the European oil majors sort of slipped into this pattern of diversifying very quickly into alternative energy. Just take a look at Shell. And they had to, over the last 6 months or so, roll back some of those ambitions. Now, Looney had made the point that they were going to be investing less and less and less in oil and gas. But as the returns for alternative energy got worse and worse and worse, they cannot live up to the returns that you're going to get in an oil and gas field. So we had to pare back some of that lack of investment. So instead of investing, say, 10% less, it was going to be 5% less. Those are just examples of numbers. So that happened in February or March of this year, and it's been a very difficult road for these oil majors that have really bet on alternative energy. There's also been a big push to give money back to shareholders, with BP has. He's really tried to get the message that it's and. We need oil and gas and alternative, but 3 years ago, it was really an or. And I think that message has been really hard to deliver for some investors. He really did try, and not for the first time when it comes to BP, to oversee a significant transition. And many said the U.S. producers were left behind. U.S. producers looked like they got it more right. Again, not confirmed, but potentially Bernard Looney resigning as CEO of BP.
Helpful context as we watch this one unfold. That transition story, obviously key in the energy sector. Bloomberg's Alex Steele joining us, co-host of Bloomberg Markets, Americas and European Close. This is Bloomberg.
does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Well, today, Franklin Templeton filed an application with the SEC for a spot Bitcoin ETF. It comes as SEC Chair Gary Gensler continues to share doubts about crypto, saying at a Senate hearing that the industry is rife with fraud and abuse. Kaylee Lyons co-hosts Bloomberg Crypto and was at that hearing and joins us now from D.C. And Kaylee, this was an event that many within the crypto industry, especially in those rulings on Ripple and Grayscale against the SEC recently, were looking for how the industry would play out from here, what the regulatory roadmap might look like.
Yeah, and I'm not sure we got any real clear answers from the chairman in this hearing today. As you said, Franklin Templeton has now thrown their hat into the race with BlackRock and all of the others who have seen decisions on their spot ETF filings just deferred. They deferred them, the SEC did back in August before the Labor Day holiday. And Chairman Gensler was asked specifically by Republican Senator Bill Hagerty from Tennessee about the Grayscale ruling and about what the SEC is doing with spot ETFs. And all the chairman said was that they were reviewing that ruling and the other filings. So no real clear answers there, though the chairman did receive some criticism, especially from Republican members, about issues like crypto as well as climate disclosures. You had other Democrats like Senator John Tester asking some questions about specifically Scope 3 emissions requirements as well. Chairman Gensler said they're trying to find an appropriate path forward, but they didn't really elaborate on any potential changes. So not too much huge news for crypto world or otherwise from the chairman in this hearing today.
All right, Kaylee, thanks very much. Kaylee Lyons there covering crypto for us and covering Washington for us. As always, we thank her. John, we're looking at not a lot of movement in these markets. The S&P down about 0.3% right now, but I think everyone waiting for the CPI release tomorrow. The Fed is data dependent, and this could go a long way to backing up a pause or maybe an eventual hike. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts them on the spot. You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
A newish Apple iPhone, an old Achilles tendon, and more of the same in U.S. equity markets. Live from Studio 2 at Bloomberg headquarters here in New York, I'm Romaine Bostick.
And I'm Scarlett Fu. We're kicking off to the closing bell here in the U.S. More of the same in U.S. equities insofar as we're mixed right now. The S&P 500 and the NASDAQ 100, we should mention, basically sitting right at their 50-day moving average. Tech stocks the big drag here on the broader market overall. Not a whole lot of change in the Treasury market either as investors mark time before the CPI report tomorrow. You can see the two-year yield moving up slightly by 1 basis point to just 5% even. And of course, the dollar is something we've been looking at. The U.S. dollar resuming its gains after a pause yesterday. Of course, these gains are fairly modest, up only 0.1%, Romaine.
Yeah, the market's certainly biding its time right now in a bit of a holding pattern ahead of key 3 data points here. Consumer sentiment data coming out on Friday, retail sales on Thursday, and of course CPI tomorrow on Wednesday. Month to month, economists looking for a re-acceleration in headline consumer prices to the fastest pace in more than a year. Yeah, really. And an interesting, albeit somewhat backward-looking separate data point came out earlier today from the Census Bureau. It highlighted the pain the higher prices have already inflicted. Household income in 2022, it was down 2.3% when you adjust for inflation. That's the 3rd straight year of declines, the biggest decrease since 2010, and a reminder that all those wage and wealth gains over the past couple of years, they've been more or less X'd out by the higher cost of living. The inflation set up for tomorrow among one of the most read stories on the Bloomberg terminal today. One of the other most read stories, it involves our old friend Bill Gross. And as the late, great Omar Little once said, if you come at the king, you best not miss. Bill Gross, the former bond king who took PIMCO from a multi-million-dollar business to a multi-trillion-dollar firm over the course of 4 decades, knows how to hold a grudge. Gross out at the Future Proof Conference in California with Joe Weisenthal and Tracy Alloway. We're going to let you know what he had to say about his legacy as a bond manager and where he thinks his competitor, Jeff Gundlach, ranks on the list of all-time greats. It ain't high. And the latest Bank of America Global Fund Manager survey is out. The main takeaway today, Scarlett, investors really starting to sour right now on the dollar, really starting to sour right now on real estate, and really starting to sour on China.
Yeah, there's a lot of negativity there that you just summed up. And the net result is investors are all in on U.S. stocks, according to Bank of America's latest Global Fund Manager survey. It finds that concern this month over China's sputtering economy has sparked a stampede out of emerging markets as a whole, resulting in specific crowded trades like betting against Chinese stocks and shorting the U.S. dollar, which had been on a massive winning streak up until last week. The beneficiaries, U.S. big tech, as you can see here, which is seen as a safe haven, and Treasury bills, which are short-duration government debt. Now, this most recent rush into U.S. big tech has created valuations that look uncomfortably expensive. Here's the price-earnings ratio of the S&P 500 Infotech Index over the past decade, so going all the way back to mid-2013. Here's the pandemic in early 2020 that dropped down, followed immediately by a sharp recovery and more. Those were the FANG stocks days right around here. And then the hangover in 2022 as you go down, and the AI hype and a magnificent 7 narrative really took hold again in early 2023. As recently as July, early July, in fact, the multiple was 2 standard deviations above the long-term average remain.
Yeah, absolutely here. And before we get to our next guest, just on a word on tech, we should point out right now, shares of Oracle right now hitting fresh intraday lows here, now having their worst day going back to 2001. We're going to get to that story a little bit later, as well as a discussion about Apple. Those shares lower as well here, with a focus on tech and whether tech can still deliver the returns that so many investors had embraced earlier this year. Catherine Avery, CEO and president of Catherine Avery Investment Management, joining us right now as we kick you off to the close here on this Tuesday afternoon. And Catherine, I do want to start with these tech stocks, a magnificent 7, if you will, here. They were certainly magnificent in the first 6 months or so of the year. Not so much as of late here. Is there anything attractive you find there?
Not for the Magnificent 7, but I would say that you might want to look at some of the other names in tech, what we would refer to as staple tech. Those names in technology that are trading at valuations much lower than the S&P tech sector, but we need their infrastructure in order to have tech run. So, for example, names like Cisco, their data centers are what's needed to help run the new AI that's coming out. Names like Oracle and Broadcom that offer the chips and the software that would support that AI trade. These stocks are all paying dividends. Broadcom and Oracle have both had double-digit dividend increases in the past year, and we expect that to continue. I know these names have taken a little bit of a seat back in the past month, but the long-term outlook is still good for these companies, and I think that getting paid to wait makes it worthwhile.
Well, we've certainly seen some investors shining to some of those names that you mentioned just there on that list. I am curious about another sector, Catherine, that has been a big focus outside of tech, and that has been energy, and sort of what I guess the future holds, specifically for the stocks when you overlay that against what we've been seeing, the fluctuation in energy prices itself.
Yeah, I think, a lot of the energy pricing, oil in particular, has been taken a step back this year because of the weakness that we've pretty much seen in China. But now, as we're coming into this second half of the year, we're starting to see supply constraints. So that's why we're seeing this uptick in the price of oil, and possibly seeing that price go up to the highs that we saw last year. And couple that again with the fact that these stocks came off of a great year in 2022, but had gotten very inexpensive in 2023, but are still delivering good earnings, lots of cash flow that they're returning to the shareholders. So again, the dividends are there, the valuations are intact, and having that price of oil move up makes that an attractive place for investors to start to look at.
And it's not just staple technology or energy. You also look at cyclicals in the same way. You're overweight that sector. I'm curious whether that extends to small caps as well, which are kind of cyclical squared in a way because they're so sensitive to every move in the economy. The Russell 2000 outperformed the S&P 500 for about 2.5 months at the start of the year, and since then it's resumed its position as being a laggard. Are small caps about to have a moment here?
They possibly can, but our focus is really looking at the larger cap names. As you mentioned before, the dollar is starting to take a step back, and that is actually good for a lot of the U.S. multinationals that not only do business here in the U.S. but have a lot of exposure outside the U.S. as well. A lot of these larger companies will be able to take advantage of that infrastructure plays going into the next couple of years. The smaller cap stocks will also be able to take advantage of that as well. So, we had, if you look back, we basically had a recession in earnings estimates in the first half of this year, and we're starting to see a re-acceleration of that. But that's probably, a lot of that re-acceleration is going to be coming from a lot of these cyclical names that have been able to participate in the infrastructure rebuilding.
Catherine, it was a great conversation here. We have to get you back for something a little bit longer. Catherine Avery there, she's the CEO of Catherine Avery Investment Management, helping us kick you off to the close here on this Tuesday afternoon, where everyone's focused on Cupertino, California, a new Apple Watch, a new iPhone, Scarlett, 48 megapixels, I'm told. We're going to tell you what it actually means for investors.
Yeah, but a new cord, too, a new charging cord.
A cord?
About that.
Oh,
yeah.
my gosh.
I know. They still use cords.
That's got to be worth a few $1 billion on market cap.
ARM and Instacart are generating some interest in tech IPOs this week, but it comes at a cost. We're going to get insight from a tech executive who helped take Bumble public.
And it's hard to understate just how significant the collapse of Lehman Brothers was. Fourth largest investment bank at the time. 15 years ago this week, that company filed for Chapter 11 bankruptcy, and well, we know the rest of the story. A lot of conversations coming up a little bit later here about the financial regulations that came after that, and maybe more financial regulations still on tap. That discussion and so much more. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. JetBlue has traveled a long way from its startup days, but CFO Ursula Hurley says growth won't change the airline's quirky attitude.
At the end of the day, we view ourselves as a disruptor and a maverick in the aviation industry, and I'm really excited to play a meaningful role in that growth journey.
Watch Chief Future Officer, Wednesday on Bloomberg.
With raising capital requirements over and over again is you're making U.S. banks less competitive, and that's going to push activity out into the unregulated non-banking sector. Better supervision, more diverse stress testing, better rules on interest rate risk taking could go a long way to avoid this kind of problem. I'm not sure raising the capital requirements of the biggest money center banks by 15 to 20% is the answer.
The former New York Fed President Bill Dudley, now a Bloomberg opinion columnist, talking a little bit earlier about, well, how to make the U.S. financial system safer. His comments coming on the week of the 15th anniversary of the collapse of Lehman Brothers. It was the climax of the subprime mortgage crisis, and it sent shockwaves through global markets. It triggered the largest Chapter 11 bankruptcy petition in U.S. history at the time, involving more than $600 billion in assets. And we should also point out that that same week, you had Merrill Lynch get sold, and of course, a few months prior to that, you had the collapse of Bear Stearns. It was a phenomenal time, not only for, well, the bad there, 25,000 people plus here being forced out of jobs, but of course what it wrought on our financial system and the regulations that govern it. Dennis Kelleher is the co-founder and president and CEO of Better Markets, and Better Markets is holding a special event tomorrow down in Washington, D.C. to talk, I guess, just about how far we've come over those 15 years, Dennis. And I guess the big question is, have we come far enough?
Well, thanks, Romaine. Nice to be with you. Yes, we're holding a conference tomorrow. It's virtual, and everybody can join it. And we've got some big headliners. Senator Elizabeth Warren, SEC Chairman Gary Gensler, CFPB Director Rohit Chopra, and anybody can listen in. Just go to our website, www.bettermarkets.org, and sign up, and you can join us. And we've got another dozen or so experts to talk about not only what happened 15 years ago, but where we are today, what happened in the meantime, including just 6 months ago when we had a banking crisis where the second, third, and fourth largest bank failures in history happened 6 months ago. So there's been some important lessons learned. There've been some important rules, regulations on the banks and the non-banks. But the real question is, are we safe enough? And is too big to fail still too big and too alive?
Well, that's what I'm curious about here. I mean, there was no debate at the time that there was material systemic risk here, from whether it was what first happened with Bear Stearns earlier in the year, and then of course later with Merrill and Lehman on the same week, to be sure here. I'm not so sure you can say the same thing about the systemic risk out of the regional banking crisis, or is that misleading?
Well, given that the recent regional banking crisis is going to cost taxpayers more than $30 billion for the bailouts, keeping in mind they were bailed out because they needed capital. They were undercapitalized. That's also what happened in 2008. Merrill Lynch, Lehman Brothers, Goldman Sachs, all the big money center banks and many non-banks didn't have enough capital to cover their own losses. They also didn't have enough liquidity, and they didn't have resolution plans so that they could go into bankruptcy like every other company in America that fails. And so there have been a lot of rules put in place, but we find out 6 months ago that many of those rules weren't applicable to banks of the size of $100 billion in assets or so, a little bit more, and yet they caused a systemic event, contagion, because we saw depositors fleeing, and we saw other banks ending up on the precipice of failure that required the bailouts. And so by definition, they were systemically significant, and there's still too many systemically significant banks and non-banks that don't have enough capital. Remember, the country has never suffered from a crisis because of overcapitalized banks. It's undercapitalized banks that are a threat to this country.
And those are just banks. What about private equity and the shadow banking system that's out there? We know regulators such as the SEC's Gary Gensler has been looking into trying to rein them in and get some kind of handle over them. But that's kind of a looming threat out there in terms of whether you're seeing a lot at stake that's not fully accounted for, not even fully understood.
Well, you're absolutely right, Scarlett. There's a major problem with the under-regulation of the shadow banking system, the non-banks. They're both not transparent and they're not regulated. And Bill Dudley, your guest earlier, made a good point there, and frankly, Jamie Dimon's made a good point, that non-bank system doesn't have enough regulation or transparency. There's too much systemic risk there that we don't even know about. That's what happened with AIG and a bunch of other non-banks back in 2008 that surprised everybody because it wasn't regulated. But what has to be done is not what the banks want. They're saying, don't regulate us because the non-banks aren't regulated. The fact is, banks need to be regulated a little bit more, and non-banks need to be regulated a lot. And the Financial Stability Oversight Council needs to get back in the business of regulating non-banks. And you're also right, Scarlett, that the SEC has a role to play here, as does the CFPB, both of whom are going to be speaking at our conference tomorrow and addressing too big to fail and these systemic threats from a market regulator's point of view and from a consumer financial protection point of view.
So, Dennis, what's interesting, of course, is when we talk about too big to fail, that was once a bad thing. It's become a better thing, I suppose, is the way to put it, especially in the wake of what we saw in March. Suddenly, too big to fail looked like the safest place to be. If you're going to take your money out of Silicon Valley Bank and move it to Chase, you felt pretty good.
Well, you're right, but it's perverse incentives, right? I mean, too big to fail is never a good thing, because what too big to fail really means is that the biggest banks in the country that pose the biggest threat to the financial system don't have to worry about failing, because if their recklessness or illegal conduct or just bad business decisions leads them to failure, unlike every other company in America, they won't go to bankruptcy. They'll get bailed out by taxpayers. That's wrong, and that's why too big to fail has to be reined in. That's why we need more capital liquidity on the biggest banks, no matter what Wall Street says. Right. And that's why we need more regulation of the non-banks, and we need it fast.
Right. Well, we'll see how Washington stands up to the lobbyists. Dennis, really appreciate your joining us. Dennis Kelleher of Better Markets.
I'm glad he brought up AIG. I forgot about that. I mean, that was just September of 2008.
Yes.
I mean, you had AIG getting the bailout.
Yeah.
Of course, you had the collapse of Merrill, or basically the sale of Merrill.
The forced sale.
Collapse of Lehman, and then of course you had Bear Stearns earlier that year.
Yeah. And then there was the AIG bonuses. Remember that?
Yeah, it was like 160 something.
Yeah, that caused a lot of uproar. All right, still ahead, the clock is ticking on negotiations between the UAW and U.S. automakers. We've got the latest out of Detroit next.
increase. When you look at tourism, it's booming, but it also means some of the islands are overcrowded.
Exactly.
Is there something that you can do about that?
Thank you for asking this question, because I want to make sure that in 5 years from now we will not have sacrificed the beauty of our sort of natural environment at the interest of a very rapid growth. So that's why I'm really focusing on sustainable growth. That's why I will always push for quality over quantity. Very strict in terms of standards. We are actually looking at our local and regional sort of planning legislation across the country to make sure that we know exactly what we can build and where we can build it. There are parts of Greece which have reached saturation point, and if we have to place restrictions, we will, in order to protect, especially islands, which are more sensitive.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Even after reaching a landmark labor contract with Teamsters this year, UPS sees a bumpy road ahead. It's set to pay out the biggest chunk of its new $30 billion five-year labor pact over the next 12 months. The CEO, Carol Tomé, says, "We put more cost in our business this year than we had anticipated in an environment where the volume has receded." So let's bring in our Thomas Black for more. Tom, so what is Carol Tomé doing to win back the customers it lost in the lead up to the potential strike?
She talked about winning on service, but we'll see if they're going to have to give some discounting as well. It's going to be a tough market because the whole industry is suffering from declines in demand. So there's a lot of companies fighting over fewer customers.
Well, exactly. But I've always thought that UPS was in sort of a little bit of a different position here. I mean, in terms of their actual competitors here, it's a pretty short list, as I'm sure you know here. Why are they struggling so much to, I guess, absorb some of these higher labor costs in a way that maybe other industries might be able to absorb?
UPS is very efficient. That's a good thing, but it also makes it more difficult to become even more efficient and absorb those costs. So they've got a lot of work to cut out for them to find those efficiencies, a lot through automation, a lot through having that unified network where they have really good visibility into their data to be able to tweak the system and make it more efficient. So that's what they're going to be concentrating on, and winning back those customers. They estimate that they lost about 1.2 million packages per day of volume to competitors, and they have to go get that back.
All right. Well, it's a long road ahead for Carol Tomé and UPS. Thomas Blank, thank you so much for joining us. We're going to move over now to Detroit because time is ticking on talks between the UAW and the automakers. Bloomberg learning that the UAW has lowered its pay increase demand slightly to 36% from 40%. Our Keith Naughton has more. So Keith, they're talking, that's good, but from 40% to 36% doesn't really move the needle a lot for the car makers, does it?
No, not at all. They actually are still quite far apart. I think the highest offer the automakers have made was a 16% raise. So there's a gulf that they really need to cross, and there's not much time left.
Well, give us a sense here of what the options are right now, Keith. I mean, when I see the demands that the UAW has made, and at least their argument as far as them looking back at past profits and revenue, saying that they didn't share in that here, is there room for compromise there?
Yeah, I mean, we have started to see some movement, which we had, up until the weekend. There's a lot of movement that still needs to be made before they reach the deadline of just before midnight on Thursday. But, there have been some sounds of optimism. We heard from a, UAW vice president who said he was optimistic that they might be able to reach an agreement. But boy, there's still a lot of work ahead of them.
So we know the White House, Joe Biden, the president, appointed Gene Sperling to act as a liaison between the automakers and the unions. Do we have any sense of whether he has begun his role? Has he done anything that we know of?
Yeah, he said he's been in contact with them. I mean, all of the politicians are in contact. Michigan's Governor Gretchen Whitmer also says she's in contact with them. But there's only so much they can do. It's about the economics here, and they are on very different pages right now on what the economics should be.
Give us a sense. Okay, well, let's talk about the economics a little bit more. I mean, we've been here before, Keith. I mean, it's strikes in this industry aren't exactly rare. You go back to 2019 when UAW had, what was it, more than a month-long strike there. I know we were able to quantify to some degree just how much that hit GM. Are we going to see similar losses this time around?
Yeah, that was a big hit to GM, that 40-day strike in 2019. And yeah, I mean, there's expected to be a very large economic impact if they go out on strike. They would be taking 150,000 workers out. They've never struck all three companies before. And that's what Shawn Fain, the UAW president, says he plans to do. If that happens, within 10 days, there's a $5 billion impact on the GDP. Autos account for 3% of the GDP. But here in the Midwest, it's even larger. And economic experts we've spoken with say it would drive Michigan and the upper Midwest into a recession.
Yeah, everyone keeping an eye on the potential economic ramifications. And of course, those can quickly, Keith, become political ramifications for the president out there. Keith Naughton, our man out there in Detroit here, keeping an eye on, well, we talked to Scarlett about a strike that was averted with UPS and now maybe one that actually goes through here with the UAW and GM, still pretty far apart. But when you go through the demands that GM made, there's been so much talk about this 40% raise that UAW working for. But I thought it was compelling when they sort of went through the profitability over the past few years and how they basically did not really share in that upward mobility. This seems less about profitability in the future and more about recouping some of what they think they were owed.
I'm so glad you said that because a lot of it was they gave up too much in 2008. And so now the union wants to claw back some of the things that they had to give up, right? The resumption of traditional pensions, defined benefit, defined contribution benefits, and of course, the restoration of retiree health care plans and boosting pension payments. I mean, these are structural issues.
And also getting rid of that tiered system. I mean, we've written a lot about this at Bloomberg. I mean, you could have two people working on the same floor together right next to each other, and one's making, $25 an hour with very few benefits, and the other's making maybe $45 with full benefits and pension, and that creates a lot of animosity.
And the younger generation, Gen Z, is asking and talking about salaries in a way that perhaps older generations never did.
All right, well, this is exactly why CEOs get paid the big bucks, because they're supposed to navigate this, and if they can't navigate it, then I guess maybe you shouldn't be CEO. A lot more coverage coming up here on Bloomberg. Stick with us. We'll be back in a moment.
Why does everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis, weekdays. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is the countdown to the close, and right now on the broader market, still kind of in a holding pattern right now, awaiting that big inflation report. Not getting any help today from the energy space. Crude oil prices higher on the day. Abigail Doolittle standing by with our commodities close.
Yeah, no help here at all on the inflation front, Romaine. Take a look at these gains for some commodities that we're highlighting. You were just talking about crude oil up 1.8%, and this, of course, as this oil rally that we've had in recent weeks, over the last couple of months, in fact, just continues. Some are saying that the OPEC plus production cuts, well, they're setting up the oil market to be the tightest it's been in a decade. Natural gas also getting a nice bid, up 5.2%. Weather apparently is behind that big move. As for cotton, up 0.6%. Traders are waiting for a USDA report that's expected to show that cotton, both a domestic and a global front, is somewhat constrained. And then sugar up 1.4%, 1.5%. The CEO of a Brazilian sugar company is saying that they do not see any scenario of sugar price reduction. Romaine, it looks like sugar traders are taking into account that report, and they are also not taking into account that I'm still not eating sugar. You would think that that would actually bring it in the other direction, but not today.
All right, Abigail Doolittle once again bragging about her healthy lifestyle there. Always appreciate her insights there for our commodity close. We do want to turn back to the world of tech right now with the slate of upcoming tech IPOs breathing some new life into the market. ARM, Instacart, two of the companies that could potentially come to market. ARM coming out at a valuation some $15 billion below where it was expected weeks ago, and Instacart also seeking a valuation that would put it about 75% below the level that last raised cash back in 2021. But our next guest has plenty of experience taking a company public. He played an instrumental role in bringing Bumble to the public markets when he served as president of that company. Pleased to say he's joining us right now. Tarek Shaukat joining us. He is now, as we just learned today, been named the co-CEO of a private company called Sonar. First of all, Tarek, congratulations on your new co-CEO role. And I'd be remiss in not asking you right out of the gate as to whether this company ends up being a public company sometime soon.
Well, thank you for having me, and thanks for the congratulations. As part of what attracted me to Sonar is we are an open source technology company in the developer tool space. We have built on the backs of that community of 7 million developers that we have a really strong business, several $100 million revenue, profitable. I think in this market in particular, this is important, a lot of free cash flow, and it gives us the option to control our own destiny, whether that's become a public company, whether it's continued to be private, we'll see, but we really feel like we're building a durable company for the future.
I am curious about just how much the market has changed in terms of how these companies are valued, whether it's in the private space or whether they do go exit into an IPO here. I mean, we've been talking about the down rounds for some of these names here. When you came to market with Bumble, I mean, that seemed so long ago, but it was just in 2021 when a lot of people were kind of on the fence as to whether the market could absorb a major IPO like that. Do you think the time is right now for some of these names that we've been talking about?
Well, I think the market has changed, as you say, and what the market was valuing in 2020 and 2021, which was really growth. That's what the market was valuing back in those days. With that has changed. With Bumble, we actually took public a profitable, high growth company. With Sonar, here the company I've just joined as co-CEO, we are again emphasizing responsible growth, durable growth, and really building a great business. And I think you see that with a lot of these IPO filings now, that people are emphasizing profitability, they're emphasizing durability, they're emphasizing free cash flow, and really, do they have a real business here, or is it something that just a lot of free capital has been pumping up over the years? I think as we see the success of these flotations, we will see more and more of those companies, this durable companies, really come to market.
So what would you say then, Tarek, is the selling point of a company like ARM, which is a mature, slow growth company? So not exactly the growth premium that you're talking about for 2021. It's a company that has dominant market share, but has definitely seen a market slowdown from its glory days.
Well, and I think this all gets down to this durability point, right? And from everything I've heard from investors, everything that we're talking about inside of our companies, what is that can last not just for a year or two or three, but really for a long time to really generate the dividends that investors are looking for. And a company like ARM is central to a lot of the transformation and innovation happening in the AI world right now, in just this continuing digitization of the world. And so I think they're in a very strong position as a company. Can't speak about valuation or anything like that, but it is a company that has a lot going for it, in my opinion.
And I'm glad you brought up AI, because high growth tech stocks definitely got a huge lift from the AI hype early this year. But that hype seems to have peaked. It's no longer quite what it was before. These companies that are getting ready to go public that we've been looking at, whether it's Klaviyo or ARM, they're not necessarily pure AI play companies. Should they be trying to market or pitch some kind of link to AI regardless, some kind of connection?
Well, I think we've seen with the last couple of years that you don't want to oversell your business. You want to figure out how are you really generating value for your customers, for the users, and really building your business around that. One of the things that I think is really just at its infancy right now is people figuring out the use case for AI. And as they do that, I think baking in those use cases is important. If I think about Sonar, the company that I've just joined, we use AI in our product, but there's a lot of software being built using AI. I think it's one of the killer apps that has come out right now. Copilots and coding assistants are really changing the face of software development. And what we do is use AI and traditional technology to help make sure that the code that's being built is secure, it's reliable, it doesn't have bugs, it is code that you feel good deploying. And I think as you find tangible places like that where you can really demonstrate value to users, you will see AI really blossom.
All right, thank you so much. Our thanks to Tarek Shaukat. He is former president of Bumble, helped take it public, and Google Cloud, and he is currently co-CEO of Sonar. And just on that point that he made about AI, Romain, I think a lot of companies, though, would prefer kind of keeping it vague in terms of how AI is helping them. Wouldn't it be refreshing to have someone just honestly say, AI will help us because it'll just cut a lot of costs and make things more streamlined, and we're not going to promise much more than that?
Yeah, the problem is they can't say that because it's probably not true for most of these companies. And I don't say that as a diss, but I mean, we're still kind of in the experimental phase for a lot of these companies as to how it's deployed, how it's used. And there's been a lot of anecdotal evidence already saying that some of the use case, at least relative to the costs that you would need, just isn't really there, right? It's not a balance yet. And maybe it becomes in the future, but right now it's just...
Maybe the honest answer is we're figuring it out, but we'll get back to you as soon as we can figure it out.
Are they going to call us when that, or are they going to is it going to be like a robocall and say we finally figured it out?
No, they'll do
I got one of these robocalls the other day. It was kind of infuriating because I didn't know it. For a second, I thought it was a real human.
Oh yeah, they perfected that.
But then she was kind of janky, and I realized, oh, this is just a computer.
Don't call Romain up with your robocalls.
Please don't.
All right, still ahead, new Apple products available for sale today. Yeah, but the company is also pushing its sustainability agenda, really, with $1,000 plus phones. All right, we're going to discuss that after the break. This is Bloomberg.
And the markets are on the move.
The focus, of course, is on Ukraine.
The market is so hyped up about AI.
Unless we see dramatic changes, it's just going to keep getting hotter.
We've had the market analysis. We're going to go get straight to some breaking news.
We'll have a full roundup.
Going through some of the numbers.
And what investors should make of them.
We have so many important conversations. Let's check in what you need to know.
ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Time now for a view from the sell side with our top calls, big movers on the back of analyst recommendations. And we start off with RTX, Aerospace and Defense Company, getting a pair of downgrades today, including Barclays, lowering its recommendation to equal weight. This on uncertainty over how long, and more importantly, how much it'll cost RTX to fix those issues with this GTF engine. Shares down another day, 2% here on this Tuesday. Next up, Hostess Brands, the maker of Twinkies and all your favorites, a downgrade today over at Stevens, equal weight from overweight. A slew of analyst activity around this company after the deal for J.M. Smuckers to buy the company, which the analyst actually says is a, quote, well-executed sale. And finally, let's take a look at CVS Health, getting an upgrade today to outperform over at Wolfe Research, with the analyst saying the CVS has the potential for earnings growth in 2025 and beyond, especially after it retained a 4-star rating with one of its key insurers. Those shares having a pretty good day, up almost 3%. And those are some of our top calls. We do want to stay in the sell side space here and pivot to Apple, the granddaddy of them all, down about 2% on the day after announcing a host of new gadgets, including that new iPhone 15 and the Apple Watch Ultra. Joining us right now for his take is Martin Yang over at Oppenheimer. And let's start off here with the iPhone. We got 4 new models. We knew they were coming. 3 of those models basically priced where the previous models were, but the highest end model, that price is actually ticking up by about $100, Martin, to about $1,200. Are you surprised by that?
No, so when you adjust for the storage, that price has not changed. Because the older price, $100 less, is only for 128 gig. So, apples to apple on the same 256 gig storage, the price has not changed for Pro Max.
When we talk about what Tim Cook and his team talked about today, there was a lot of talk, of course, about the megapixels. There was a lot of talk about the titanium shell and all this. What was the technology that you heard at this event that really jumped out at you as a positive?
Yeah, I think one of the biggest positive is their major upgrade for GPU that now support natively run console games. So no smartphones before were able to have such powerful GPUs, hardware accelerated ray tracing to support AAA grade console and PC games. So this is an industry first, definitely a milestone for the role of smartphone in the gaming history.
Okay, and just to interrupt for a second, Martin, we have some breaking news. We can confirm that BP's CEO, Bernard Looney, has resigned with immediate effect. Looney was said to not be fully transparent in disclosures. The board had received allegations on personal relationships. We don't have any further details than that, but again, this was off the back of an FT report about the CEO of BP resigning, Bernard Looney. We now know that Looney was not fully transparent in disclosures, and the board received allegations on personal relationships. All right, we'll follow up on that headline later on. But in the meantime, we are talking to Martin Yang over at Oppenheimer about Apple and the event today. Martin, when you look at what Apple is capable of doing, a lot of excitement, of course, over its services side because that's higher margin and it's recurring revenue and it smooths out the revenue stream for the company. What does the upgrade in GPU mean for services for Apple?
It has a lot of implications. For services, it has twofold direct impact. Number one is, this is my speculation, there's a potential to include more AAA grade games into their Apple Arcade services. So that will make that gaming subscription service more appealing to not just mobile casual game players, but also PC and console hardcore players, and potentially maybe higher pricing tier for the game subscription service. The second impact will be on iCloud. They just introduced new higher storage tiers, 6T and 12T. As we know, those hardcore AAA games are very big and very will consume a lot of the storage places. So with more support of those games, users will naturally want to upgrade to higher iCloud Plus service tiers.
So Martin, based on everything you heard from this Apple event, are you changing your forecast for unit sales in any way for Apple over the next couple of months?
I am a little bit more optimistic coming off the Huawei Mate 60 release. And now that Apple is not raising prices despite all the major upgrades on the materials and the cameras for the Pro and Pro Max model, I think I feel a little more comfortable about Apple maintaining its market share or less not losing as much to Huawei in the upcoming iPhone 15 cycle.
Martin, great to talk to you. Martin Yang over at Oppenheimer. A look at Apple. The share is lower here, as they typically tend to be on the day of a new release here. The iPhone 15 pretty much coming in as expected, as well as an update on the Apple Watch here. I guess we'll see whether investors sort of end up embracing this a little bit later. I mean, we've seen this cycle before. Apple has these big product announcements. Yeah. The shares usually go down on the day. In fact, that's been the trend. And then maybe a week later, once they start to see some sales numbers, pre-sales numbers in, people start embracing the stock.
Right, they start dribbling out all the positive headlines. One question I have is whether all these changes that they're making actually inspires people to go out and buy the new devices, because it feels kind of tangential, kind of just on the margins.
Yeah, I mean, it's hard to know. I mean, I think everyone's been looking at Tim Cook now for several years and saying, when is that next big thing, right? Yeah. Because we know Steve Jobs had this
They're big
flair,
on the car.
Right? It was the iPod, the phone, all these things, iPad, everything. And then ever since Cook, I mean, he's done great. I mean, no one could debate that he's created a lot of
incremental progress.
But it's incremental progress. And I remember when when Steve Jobs passed and Tim Cook took over, I remember a lot of analysts I talked to, I was covering this story, said Apple is going to end up like Sony. They didn't necessarily mean that as a compliment. They basically said the same thing. When Sony's founder died, he was this huge innovator. They had this cash juggernaut. That was going to continue. But the innovation, there was a lot of concern as to whether they would be able to do it. Interesting to see whether Apple ends up going down that road as well. It has been quite some time. A lot more coverage coming up. Stick with us. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to The Close. It's time now for our Wall Street Week daily segment. David Weston, the host of Wall Street Week, joining us as he does every day at this time. A focus on a G20 that has come and gone. Did we actually learn anything?
Well, we're going to find that out from a true expert. He's David Malpass. Of course, he has just been the head of the World Bank. David, welcome. It's good to have you back. What about the G20? Did they accomplish what you hope they get accomplished?
Hi. Thanks, David and Roman. So they meet. It's the culmination of hundreds of meetings during the year. I went to ones earlier in 2023. They end up with a communique, and then they break and go on to their other parts of the world. Important issues that are hanging over the global South, the developing world, is the debt impasse. They've borrowed lots of money, and now interest rates are going up, so that's a huge problem. The relationships with China, and China didn't come at the leader level for this meeting, and the relationships among the countries, those are all really important issues. Oil prices and fertilizer and food are, of course, critical problems for people in poorer countries in the U.S. too.
What about the global South and the poorer countries? Was China's absence, I mean, they had a representative, but President Xi was not there. Did that help or hurt President Modi make progress?
Well, I think it leaves the stage more open for Modi, so they're not stepping on each other's lines. But China's doing, I think, well in the soft power in the world. If you think of their image, they keep showing up when there are crises. They're filling some of the vacuum in the world, and so I think it worked fine for India and fine for China the way they worked it out this time, with China not being there.
We've talked a lot on this show about how investors have started to look away from China, EM investors, whether it's to India or other nations. We've also talked about how a lot of businesses that had really staked their fortunes on China have now tried to diversify. You understand the relationship or lack of relationship right now between the U.S. and China. Do you think it can improve?
I think it should, but it's right now deteriorating. There actually is a huge relationship in that there's a giant trading relationship, both directions, but especially from China exporting to the U.S. And there's also meetings that go on frequently on international side. So I think what's really important is that not only that they communicate, but the world recognizes there needs to be less dependence on China by most countries, and especially less dependence in critical technologies, military use technologies. And so the world's trying to work out how to do that.
And we've already seen that in some of the data. I mean, at least with the U.S. and its trading relationship with Mexico, just some new data showing that now Mexico is back to being our top trading partner. Before you got to the World Bank, I mean, you were Undersecretary at the Treasury at a time when President Donald Trump made it very clear about the U.S. stance on China. And when Biden took over, there was this expectation that he would soften that stance, yet by most measures, he's actually increased that stance on China.
Yeah, it's politically difficult because people want there to be a foreign adversary, and so that's some of what's going on. Also, the U.S. started using tariffs as a way of trying to balance the playing field, the commercial playing field, and it's not really a good tool at all. So as you think about it, not enough progress was made on the legal structures of the world, the WTO, for example, or the idea of intellectual property protection, and too much was made of these tariffs, which economics is really clear, they subtract from global growth.
What about those legal structures, as you call them? We just came off the BRICS meeting where they added another 11 countries. You now had, as we've talked about, China not going to the G20. What's left of those structures that were created after World War II? Is much left of them at all?
Well, to some extent, too much, in that, the original use of IMF and World Bank, IMF was protecting the gold standard. That doesn't exist. And the World Bank was working to rebuild. It was called the International Bank for Reconstruction of Europe and Development. And so, there's maybe too much weight put on them. They're actually not not very big. The world has grown way larger than those institutions. And yet when there's a problem, people say, who are you going to call? And it's very difficult because the size is just not there to deal with the food crises in Africa, with the security, the insecurity in the developing countries, with the debt problem. I pushed in the G7 for the G7, that's the seven financially most advanced, I guess, countries, for them to ask and tell the IMF and the World Bank to make more progress on debt. They declined. It's now sitting in the G20 and is stalled. It's been stalled for 3 years, actually for 6 years.
You've advocated more power, more capacity for international institutions like the World Bank. By the way, you agree with Larry Summers on that. Larry Summers is right there with you.
Well,
are you making progress in that direction?
I didn't say more power. What I said is more grants, more grant capacity, because if you load the countries up with debt, even if it's debt from the IMF and the World Bank, it really disrupts what they're doing. I think there needs to be more grants, but that's specifically what the advanced countries and their taxpayers don't want to do. So on that basis, then you need to rethink this problem and really go after how do you create a better growth environment in the developing countries themselves. The interest rate hikes that are going on right now are one of the biggest problems faced by people around the world. Here you go from a 0% interest rate all the way up to 5.5 without any positive impact, without any progress.
Doesn't help when it's debt rather than grants. Thanks so much to David Malpass. He's former World Bank president. Tomorrow we're going to talk with Larry Summers, former U.S. Treasury Secretary, about the latest U.S. CPI data. And on Friday, we're joined by Melissa Carney, University of Maryland professor of economics, to discuss the economic advantages of a two-parent household. It's a new book she has coming out. That will be at 6 p.m. Eastern time in New York.
You always have such great conversations, interesting conversations. I'll definitely tune in for that. And be sure to tune in every day around this time where David joins us here for our Wall Street Week Daily segment. Here on the close, as we round out into the final hour of trading here on this Tuesday afternoon. Stocks right on session lows here. Tech stocks really on the back foot and a little bit of a holding pattern as we await the latest consumer price index data coming out 8:30 a.m. Washington time tomorrow. More market coverage coming up right here on Bloomberg.
So many people say the only way to really deal with climate change is kind of eliminate oil and gas and then have more clean energy. Is it realistic to eliminate oil and gas in the foreseeable future?
You actually have to at least mitigate it. I think you have to bring a lot of it down and replace a lot of it, but you can also have a huge impact by trying to do things like carbon capture and so forth, right, and around it. And it's going to take both approaches. Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year.
Things like solar or wind, it's nice and environmentally friendly, but really is not going to produce enough energy to really replace oil and gas in my lifetime, I assume, right?
Well, not by itself. So let me just say, solar and wind are critical components. This is going to be sort of a collective effort with a lot of different technologies that are each going to come in and take their piece. We do a breakthrough. We look at technologies that could produce remove half a gigaton of carbon a year. And the way to think about that number is we have to remove, say, 100 half a gigatons. a year in terms of what we have to replace.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Almost 3 p.m. here in New York. This is the countdown to the close. Romaine Bostick here alongside Scarlett Fu.
And let's get a view from the top, not just from the top of our buildings here at 731 Lexington, but also of the markets.
Yeah, let's get right to the markets here. We're talking about stocks right now at session lows here. In fact, a good portion of the individual names actually higher on the day, but when you have Apple, Microsoft, Oracle, Amazon, Tesla, Meta, Adobe, Alphabet, all lower on the day, well, you're going to get red across the screen. 1% on the NASDAQ right now, about 0.5% on the S&P.
Yeah, and of course, the Dow Industrials, little change at the moment. The Russell also marginally higher. What's interesting, of course, is the bank stocks doing better. They're giving updates at different conferences. PNC, for instance, doing well, among others.
Yeah, this is conference season, of course, where we get a deluge of these sort of bank conferences. And I think it's interesting. We talk about what we're hearing out of some of these banking executives, particularly the regional banking executives, and they actually seem to be relatively encouraged by their prospects for better margins and better profitability here. So we'll see. Of course, the proof is in the pudding, and we're still a few weeks away from the next earnings seasons of reports.
Well, you mentioned Apple earlier. I feel like we need to talk about that because the stock is down on its product launch day, which is typical, right? Because we've done the number crunching, and the stock has been down in 8 of the past 12 years. I apologize. I think I jumped ahead here because you had something to talk about. No. So Apple is just something I've been paying attention to, but let's go back to this chart. This is what, volume and Chinese ADRs?
Yeah, a lot of talk here right now, I guess, about maybe the potential for some enthusiasm in the IPO market, some new issuance coming to market, and whether that, I guess, has anything to do with increased optimism here. But basically what you're looking at right there is basically the returns that you've had here over the last couple of years, whether it's SPACs, whether it's the Chinese market, or whether it's the IPO market. Index is tracking them all. Those are the 3 lines at the bottom and the line at the top. That's basically the broader market. So if you just bought a S&P SPY ETF or something and rode that out, you'd be faring much better.
Yeah, well, you might need to wait a little bit. All right, let's take a look at some of those movers. I mentioned Apple. We can go straight to Oracle, which is down quite a bit. It's the worst performer in the S&P 500. Analysts basically saying the results failed to live up to high expectations because through yesterday's close, it had gained 57%.
Oracle?
Oracle, yeah. Believe it or not.
Yeah, but I mean, this is about slowing revenue at this point. I mean, look, I know everyone makes this case that, okay, well, this is still a juggernaut. And look, I'm sure Oracle will bounce back, but I mean, look, the numbers don't lie.
Yeah.
I mean, the fact of the matter is, if you're buying at the multiples, the trajectory has to be up. It can't be down. It was down. And that's why you're seeing the shares down.
And 13%. So maybe they'll need to go outside and look for acquisitions to keep that growth rate back up, to scale the purchases it has made.
Yeah.
Of course, there was also some M&A that we should keep you apprised of as well. WestRock getting a takeover offer from Smurfit Kappa Group to create a packaging behemoth. The cash and stock offer priced WestRock at about a 28% premium to yesterday's close.
We talk about, I guess, the idea here of sort of what sort of becomes the next catalyst for the market. A market, of course, it's maybe been in a bit of a holding pattern as they await the latest economic data. Or are they awaiting earnings? Or are they awaiting Jay Powell? Or are they awaiting just some
one at a time
from heaven that tells them that now is okay to buy?
CPI first tomorrow, right? And then we'll see what happens after that.
Absolutely. We are 1 hour away from those closing bells. Our cross-platform market coverage on Bloomberg, that coverage starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostick alongside Scarlett Fu. We're joined right now by our colleagues Tim Stenovic and Jess Menton. Jess Menton in today for Carol Master. Welcome to our audiences across our Bloomberg platforms, television, radio, originals, and YouTube. Tim Stenovic here. Tell me something good, Tim. Tell me you got the magic here.
It depends on what you like, Romaine. Okay, It depends on what you like.
Yeah, not much today.
I thought of you earlier today, Romaine, because yesterday you mentioned you added to my list of gainers the weed stocks and what the marijuana stocks were doing as a result.
You finally went out and smoked a
No, I didn't. But it's going to get easier here in New York if it needs to get any easier?
Does it?
That's the big question that I have.
Have you walked the streets of New York? It's like a cloud of marijuana smoke everywhere you go.
So that's actually what I'm glad you're
You don't even need to buy it. You can just get high just walking down the street.
Well, apparently, not enough places sell marijuana at this point because the states legally.
Because in my neighborhood, there's like these stores on.
There's like a little truck that goes around my neighborhood that is like green and they advertise it. Like it's apparently
I don't know what's going on
the gray market, but the
gray market.
The police don't actually care about it. That's one of the reasons why, though, New York is loosening its marijuana licensing. It's going to expand the recreational market here and allow some of those big publicly traded companies to apply to have recreational licenses here.
Yeah, and the change means that companies with current medical license in New York can potentially open a recreational dispensary next to the one of their medical dispensaries around the end of this year, but they still need to pay a $20 million fee to apply and meet some other criteria there.
$20 million.
Something tells me the guys with the van, you know, on Court Street in Brooklyn, right outside the Trader Joe's, are not going to be paying $20 million.
Outside the Trader
I think it's the big companies that'll be doing that.
I really appreciate the specificity there for our audience there. Anyone driving right now down Court Street in Brooklyn here, you know exactly where to go. I guess the big question is, if you keep driving down here, I think at some point you hit an Apple store there, Scarlet Fu. I don't know what's more expensive right now. The taxes you pay on buying weed in New York City or buying a new iPhone, and I don't know, how much is the cord? Is that like about 20 million extra too?
That'll be $20, $30, but I think the big headline coming out of the Apple product launch was that the iPhone prices didn't go up unless you're talking about the highest end one. That one goes up by $100. But interesting that Apple decided not to raise
optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lang.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power.
This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is the countdown to the close. About 30 minutes left to go here on what is, well, not necessarily a great trading day.
It's been meandering, and we meandered our way lower, at least for the broader market right now. The S&P 500 down about 0.6%. And you can see among the different sectors that clearly a lot more decliners than advancers, led by technology. A lot of that is really Apple. Communication services also lower by more than 1%. On the upside, you do have energy stocks gaining 2% as a group as oil prices continue moving higher. And a couple of financials, Zions and PNC among them, as they are talking about their prospects at conferences. And utilities, clearly a defensive sector, a classic defensive sector, up by about 0.1% remain.
It's interesting you mentioned the regional banks, because the commentary we got out of PNC and Zion, Scarlett, it was very good. But then you had some commentary out of Northern Trust and a couple others that wasn't necessarily good. Right now, David Solomon speaking at that Barclays conference over at Goldman Sachs, of course, one of the biggest of the big banks out there here. It'll be interesting to see how this all shakes out, particularly when we get back to earnings season, which is, quite frankly, just a few weeks away. As for the day, you see PNC up about 5%. That's one of the big bright spots on the day, as is the energy space. But the big Magnificent Seven stocks, the big cap tech stocks, not getting any help there. At least 6 of those 7 stocks lower on the day, including Amazon down by about 1%. A couple other bright spots out there. Keep an eye on Endeavor Group and TKO. This is a new entrance coming to the market today, a big IPO today. Remember, this is the mashup when it bought WWE, the big wrestling entertainment company here, now listed under the ticker TKO under this new deal. Endeavor also getting a boost on that, up about 1% on the day. And Casey's General Stores, that's actually one of your best performers today in the S&P 500, up 10% here on the back of earnings. Revenue was pretty much in line with estimates, but a big beat when it comes to EPS. I do want to go back to the broader market, the global market, I should say, particularly when it comes to emerging markets in China. This chart was actually flagged to me yesterday, and I thought this was interesting. We talk about investor appetite for Chinese stocks, for anything Chinese right now. We had that Bank of America survey, Scarlett, that you were talking about at the top of the show in 2A, showing that at least among the fund managers, the Bank of America surveys, well, everyone has started to shun China in a big way, and you see that reflected here. You're taking a look at 2 ETFs here. One is basically emerging market ETF that includes China, and one is one that excludes China, I should say. You can pretty much tell which is which here. The divergence has been pretty remarkable here. As a lot of people say, there's a lot of investment opportunities in the emerging market space, just not with China.
Yeah, avoiding China becoming a very popular common trade out there right now. Let's broaden our perspective here and talk a little bit about the Treasury market, bonds, because when it comes to whether there's a new bond king in town, Bill Gross is pretty certain of one thing. Jeff Gundlach does not carry that crown. The PIMCO co-founder spoke on a live recording of our Odd Lots podcast.
To be a bond king or queen, you need a kingdom. You need a kingdom. Okay, PIMCO had $2 trillion. Okay, Double Line's got like 55 billion. That's no kingdom. That's like Latvia or Estonia. Then look at his record for the last 5, 6, 7 years. How does 60th percentile smack of a bond king? It doesn't.
Within the last hour, Jeff Gundlach did respond at the Future Proof conference saying, quote, "I don't care," adding that their 5-year numbers are great and that he hopes Gross feels better about himself. Wow. Joining us now are the hosts of Odd Lots, Bloomberg's Joe Weisenthal and Tracy Alloway. Guys, thank you so much for taking the time out of your day to speak with us. Tracy, I will come to you first. What is up with the backstory here between Bill Gross and Jeff Gundlach? I mean, those were fighting words from Bill Gross and the response as well from Jeff Gundlach. What's the backstory there?
Well, I think Bill has talked about this before, but basically when he was ousted from PIMCO, he went to Jeff and kind of, knocked on his house and was like, hey, what if we teamed up together? What's better than one bond king? It's 2 bond kings, so let's do something together. And Jeff basically turned him down. And from what I heard from Bill, he then proceeded to sort of criticize him in various social spheres for the next 12 months. So when we spoke to Bill on stage at the Future Proof conference yesterday, he was very emphatic that this was his chance to get back at Jeff and wreak his revenge. And I got to say, it seems like no one can hold a grudge quite like Bill Gross.
Yeah, that might be the understatement of the day, Tracy. I mean, Bill has a lot of bones to pick, and he's never shy about picking them. Joe Weisenthal, you're also out there at the Future Proof conference here, and we talk about the response from Gundlach, the idea that, he doesn't care. Oh, he never really wanted the Bond King title. You believe that?
Well, so his first answer was like, oh, I don't care. But then he kept saying different versions of that. So he clearly cares. And then he responded to the point about performance. And then he responded to the point about AUM. And he's like, oh, our AUM is more than 55 billion. It peaked at 150 billion. It's currently around 100 million. So there is clearly both of them really engaged in whatever this, the true source of the dispute is. But it was very, I was in the audience. I watched the Gundlach thing. I very much enjoyed seeing the back and forth.
Well, one thing that I'm curious about, Tracy, is, I mean, once you get past sort of the sensationalism of the comment that Bill Gross made here, there is an underlying, I thought, point that he made, which is the idea that he became the bond king, not just only because of his acumen, but it was really just kind of an unprecedented time for the Treasury market that was just sort of ripe for the picking, particularly when he founded PIMCO back in whatever it was, the early 70s there. And he really sort of rode a wave that, quite frankly, Gundlach, for better or for worse, didn't really catch until it was more late cycle.
Oh, absolutely. And I think Bill is kind of upfront about that. If you ask him, well, his point about there no longer being any bond kings or queens was all about, well, the Fed's in control of the bond market now, so it's really difficult to make your name as a trader or investor in that sphere. And if you talk to him, if you ask him directly, do you think you were so successful because your career basically coincided with this amazing 40-year bull run in bonds, he'll be pretty upfront about it. The other thing that I thought was kind of interesting is, of course, he's managing his own money now. He's basically in retirement. And we asked him what was in his portfolio now. He's not really investing in bonds anymore. He said something like 40% of his portfolio is now in master limited partnerships, MLPs. So he himself has sort of defected from the debt sphere.
Interesting. I did not realize that. So, Joe, as we put this all together, I mean, we started off with this idea of who's the new bond king. Does anyone in the market see Jeff Gundlach as the new bond king, or has the market also said, you know what, there is no bond king, it's not possible, it's always going to be the Fed?
Yeah, I think the latter. I mean, I don't think anyone is really that excited about the bond market. And look, you're just talking about it. 40 years, you have this huge bull market, and you can only make so much money when the line starts turning down. And these things go in long shifts, and of course, that's no guarantee that we're going to have a long bear market bounce. who knows? But so we had this huge bear market for several years going up to the late 70s, and Bill started or really got going at PIMCO, then the other direction.
Yeah.
So I think right now, and the fact is Bill clearly is interested in other aspects of the market. He was talking more about Nvidia and Nvidia earnings and the AI boom and master limited partnership and merger arbitrage of Microsoft, Activision, and all these things seem to clearly get him more excited currently than talking about bonds.
And of course, stamps. Let's not forget stamps. Joe Weisenthal
right.
and Tracy Alley, thank you so much.
Who's the king of the Odd Lots podcast, or the king or queen? Is it Joe or Tracy?
King and queen.
Is there? Okay.
I think it's.
I mean, I don't want to get them.
No,
in
king
trouble.
and queen.
Okay, all right.
The
it's
reigning monarchs.
Podcast.
How about that?
This is actually one of the best I mean this in all sincerity. This is actually one of the best podcasts out
Well,
there.
a lot of people think so.
Yeah.
It does very well, and of course, you can check out Odd Lots wherever you get your podcasts.
And Tracy, of course, is the smarter of the two.
I would agree with that. Sorry, Joe. All right, coming up, the king. What did you say earlier? It was great. The king of the packaging world.
The king, yeah.
There's a new king.
Smurfit Kappa Group.
Smurfit Kappa Group. It's merging with WestRock. We don't really have the terms of the deal satisfying a lot of people. People are kind of scratching their heads over it. We're going to discuss this in greater detail next in our stock of the hour. Are we the kings and queens here, too?
No, we're paupers.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. In many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The markets count down in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
It's time now for our stock of the hour. A look at the packaging company Smurfit Kappa, down about 10% in Dublin trading after an agreement to merge with WestRock. Analysts were quick to weigh in, with Canaccord Genuity calling the deal a win for WestRock shareholders, since, of course, they get to combine their lower margin business with Smurfit's higher margin business. Bloomberg's Cameron Leach joining us right now to talk a little bit more about this. And Cameron, we see the share reaction here, which isn't unusual. Usually you see the acquirer shares go down, but this is a pretty significant downdraft. A lot of investors are sort of scratching their heads as to why a company would buy a less profitable company.
Yeah, let's dive into the rationale here. From my understanding and based off the reporting conversations I've had, it seems like the Smurfit family wants to take money off the table. For WestRock, the management there, it allows them to give a sign to investors that, hey, we are doing something. If you pull the stock back for about a year or even more than that, you can see that the stock has kind of traded sideways a little bit. So I think this gives them an opportunity of an out to say, hey, guys, we're working here.
Everyone looks busy. Everyone looks productive. How did this deal come to be? Had they been in talks for a while?
That's a great question. I don't want to get into too many details there, but I do want to say that the Smurfit family truly wanted to get money off the table here. And I think just based off of that as the foundation, that's why you see both of these boards are very intent on making this deal happen.
Yeah, they made it very clear. Is there any reason to think regulators might look into this?
Oh, for sure. Just seeing how big of these two conglomerates coming together, I think that's going to be a major focus for getting this deal closed. You also need 75% of the shareholders to approve this as well too. And there's still a conversation about what assets might they want to divest to kind of curtail some of that, I guess, the scrutiny from antitrust as well too.
I am curious. We haven't seen a tremendous amount of M&A activity in this space here. Is this going to be a harbinger of things to come?
At least we hope so. It keeps me a little bit more busier. But I think, with everyone coming off of Labor Day or holiday, if you're in the UK as well too, I think people are a little bit more antsy to get something done. I think even based off of conversations with some of the banks and the private lenders as well too, I think we'll see a pickup in Q4.
Do you think we would have seen a different market reaction at the premium with WestRock? I think it was something like a 30% premium over the closing price before the announcement. That's a pretty hefty premium for a company that really hasn't had the track record to justify it.
Yeah, great question too. And I think originally they were only supposed to get only a 10% premium, and I think they wound up getting a little bit more than that as well too. So I think investors are a little bit antsy about that one. But I think just given the market, just to make this deal go over the hump, they gave them a little bit more. They padded the books.
All right, Cameron Leach, our M&A reporter, taking a look at what could potentially be a pretty big deal should it go through here. The tie-up between Smurfit Kappa and WestRock here. The reaction in the shares, opposite directions. WestRock up 3% on the day. Smurfit over in Dublin, where its base was down about 10% in that session there. We are moving closer to the closing bells. Just about 15 minutes to go. A conversation coming up here, Scarlett, with Bob Dahl, Chief Investment Officer over at Crossmark Global.
Yeah, as we look at a market that has found a direction, it is down for now as we await the CPI data tomorrow that could set some direction for the Federal Reserve and what it does next.
Yeah, meanwhile, the weakness continues here in the market. Our full coverage coming up here as we take you to the bell and beyond. Stick with us. This is Bloomberg.
The names that move markets are on Bloomberg.
There's a complete change in the labor market. There's a complete change in the energy future that we are facing.
Under tightening would be a worse mistake than over tightening because we can course correct that.
The question is whether we need to increase the pressure or just keep pushing.
We've been getting good news. We just have to keep getting good news.
Nobody covers business like Bloomberg, your global business authority. This is Bloomberg Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's for the Fed to respond to it. And this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise that people are not expecting.
Be ahead of the game.
Certainly the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this moment.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president's calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Milton Friedman had said there are long and variable lags in the impact of monetary policy. But man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance, weekdays from 6 to 9 a.m. Eastern.
This is Bloomberg.
This is the countdown to the close. Romaine Bostic here alongside Scarlett Fu, counting you down to those closing bells. Scarlett, about 10 minutes to go. Stock's pretty much still around session lows.
Yeah, and of course, Apple's product launch took place today, and now that it's ended, the stock has fallen near its lows. That is dragging down the broader market overall as well. Treasuries were mixed before the CPI report tomorrow, which may or may not give us any clue into what the Fed's next move will be, which is probably at this point a pause.
Yeah, but I'm sure we'll pontificate on it fully here, of course, full
Guaranteed.
market coverage on Bloomberg Surveillance tomorrow. You mentioned Apple being a big drag here, down almost 2% here on the day, but all those magnificent 7 stocks in the red today, big part of the reason why you see the broader market in the red. And you do wonder here, I mean, about when people come in and start buying these names, it seems less about, oh, we're buying into a growth story. It's more, it seems like it's a defensive play. And then they sell it off when they get skittish about whatever, whether they
It's somewhere to park your money because you know that it's safe. But beyond that, it's pretty expensive. We had a chart earlier that showed tech as a group, 2 standard deviations above the 10-year average right now.
Oh, standard deviations. Look at you. Yeah. All right.
Multi-syllabic words sometimes.
All right, let's get some insights out of our next guest. Bob Dahl joining us right now to help us count down to the close. He's the Chief Investment Officer over at Crossmark Global Investments. And Bob, I do want to start off, of course, with the big report that we're going to get tomorrow on consumer prices here. And the underlying concern, I guess, amongst a lot of investors is the idea that the Fed might not actually be done. I mean, I think we all sort of hoped and wished after that last meeting that that was it. We've gotten all the rate hikes, and now it's just a matter of time before the Fed started to ease. But at least based on what economists are forecasting, they may not have the luxury of easing.
I agree with you. That is to say, the Fed's had a 2% inflation target for some time now, and while inflation's come down nicely, it's nowhere near 2. Oil prices have headed back up, and so there's sticky parts of inflation. Wages probably going to be there. Look, I think tomorrow we'll get a mixed report. And a lot of things will be behaved. Oil prices probably up, and so we'll get a number that's not so sure it's the Fed finished. My guess is they'll go one more time before the end of the year. But what's more important than whether the Fed's done or not is what have they already done to the economy by raising rates from 0 to 5.25 in 18 months. Those leads and lags are unpredictable. And my guess is we've only begun to see economic weakness from those actions.
There's been a lot of discussion, though, at least the Fed would make this argument, and I know Jay Powell has said this at one of the press conferences in the past, this idea that if they weren't as aggressive as they had been, then the impact of inflation on consumers would have been much worse. And we've already seen some data, Bob, showing that just overall on an inflation-adjusted basis, household net worths, household incomes actually declined last year pretty significantly here. So there's this idea that while a lot of people are getting raises, a lot of people are, at least on the surface, in a better position financially, the inflation is just eating away at those gains.
No question about it. Now, remember, the Fed waited a long time to get started. The whole debate is inflation transitory or not, and it's clear it wasn't just transitory, so they had to make up for lost time and got moving pretty quickly, as you point out. But of course, with the stock market up this year, home prices doing reasonably well, a lot of those net worth numbers have moved back up, Romaine. So I think that consumers are probably feeling pretty good. Many of them still have excess cash from the pandemic, although that's winding down fast too.
Yeah, definitely. I want to go back to that idea, though, that when we look at the costs accrued from 18 months of rate hikes by the Federal Reserve, obviously, there's a lot of concern about increased debt defaults, and I thought higher rates was supposed to discourage borrowing. But if you saw what happened right after Labor Day, companies were taking advantage of narrow spreads. They were definitely launching plenty of bond sales. Why are credit markets still so active despite all the Fed has done, despite the Fed's best intentions to slow things down?
Great observation or great question. I think part of it is that spreads are tight, so corporations are taking advantage of those relatively tight numbers. And of course, there are a lot of people who use the word recession in their vocabulary earlier this year that disbanded with that. So if we're not going to have a recession, well, I guess I can go borrow some money. I'm sure some have operated on that principle. But we still have to get through this period of maximum impact on economic growth as a result of that massive increase in short-term rates.
So are all these corporate bond sales that we've been seeing a good thing, all these companies loading up on more debt, or does it set us up for a bigger problem or a problem later on?
Scarlett, I think the problems are going to come more in the small business area. I mean, August, we saw bankruptcies from prior year up about 50%. So it's not uniform across the board that things are healthy. Small businesses, which create all the new jobs on a net basis, are struggling a bit. We still have the commercial real estate issue we've gotten through. So, yes, there's been a lot of borrowing, but underneath the surface, we've got some issues.
When we talk about, I guess, the corporate fundamentals, Bob, and the idea that we came into this year, everyone sort of expected we were going to really see a lot of pain on the earnings front, and we didn't necessarily get that, at least not in the broadest sense here. We're heading into another earnings season in a few weeks, Bob, and I think by most estimates, we're still expecting a lot of these companies to still post relatively decent margins.
There's no question the first 2 quarters of this year, I'll put it this way, earnings came in less bad than feared. They were down both quarters, make no mistake about it, but not down as much as people thought. And in fact, in the last 2 or 3 months, we started to see full year numbers move up a bit. That's the first time we can say that in a while, and that's a function of economic growth's been pretty good. My guess is with the cost pressures that we've just talked about, we're going to see some pressure on corporate profit margins. So I'm concerned one more time that earnings are probably not going to make the up quarter that people are hoping for in quarter 3.
So if you add that all up, we were talking about how the Bank of America Global Fund Manager Survey showed that a lot of investors are betting against Chinese stocks. Where are they going? They're going into U.S. stocks, specifically big tech. Where does that leave us with that outlook you've just given on corporate earnings and this propensity to double down on U.S. stocks, particularly big tech?
So I throw into the equation Scarlett valuations. Valuations are not inexpensive. Remember, interest rates and inflation are no longer zero. When they were, having PEs over 20 times made sense, but not so much now. So I think a lot of that money that's come running in is going to need to see the fundamentals and the earnings come through at to sustain these levels. If we see some economic weakness, if we see some earnings weakness, my guess is we'll move to the lower end of this 4,200 to 4,600 trading range that we've been in for, seems like forever, months anyway.
Bob Dahl over at Crossmark. Always appreciate your insights as we count down to the closing bells. About 2.5 minutes to go, Scarlett, with all of the big cap tech names on the back foot. And of course, that means the broader market on the back foot as well.
Yeah, the NASDAQ 100 and the S&P 500 each hovering right around their 50-day moving average.
Yeah, we're seeing that break below those short-term moving averages here. The oscillations continue as we move closer to the closing bell. Full market coverage as we take you to the bell and beyond.
Beyond the bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Tim Stenovic and Jess Menton. Welcome to our audiences across all of our Bloomberg platforms. Coming off a day yesterday, Tim, where we saw the NASDAQ 100 rally 1%. All that being taken back today with the NASDAQ 100 down 1%.
Yeah, you know, give and take, right? That's what happens. Hey, we just had a really, I don't know, kind of a downer conversation. Catherine Krantz over at the Center for Macro Specialist Designation, here's what she told us. She thinks that even though we're a year away from the lows of last October on the S&P 500, she doesn't think the lows are actually in for this cycle. She's very concerned about what 2024 looks like and says it's not going to be a good year.
October 12th was that closing low for the S&P 500 last year. But if you are an investor and you missed out almost a year out, I mean, these are double-digit gains in the S&P 500 and the NASDAQ 100. But yet when you look over what's happening with money market funds, especially with where yields are, you still have a lot of people, especially with money market funds being at a record at around 5.6 trillion, people still sort of skeptical of this
I
rally.
am curious, though, when we talk about, this isn't the first time I've heard people, Scarlett, talk about these October lows. But, I mean, we're talking about a downdraft of like 20% to get back down there on the S&P.
No, that's a really good point. I mean, I think a lot of people might have missed out on what had been an unexpected advance, and they're wondering whether they still have time to maybe get in on this a little bit here.
Yeah, I mean, interesting, though, on this day where we're seeing the NASDAQ really take it on the chin. The S&P only down fractionally on the day, but believe it or not, the Dow holding up, relatively unchanged on the day. The Russell similar as well. And the S&P 400 mid-caps actually in the green, though only fractionally. You put it all together, once again, a mixed market. You could call it a holding pattern, if you will, as we wait, of course, for tomorrow, 8:30 a.m. Washington time, that big CPI report. Here are the numbers here as we wait for them.